today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely.
To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. Quick check on what's going on in these markets. And you need to look every couple of minutes because of the volatility. We are now up on the S&P 500, about 0.5%, more than 1% on the NASDAQ. So tech stocks leading your way higher. Let's get a look at some of those tech stocks. Nvidia right now up 3%. Apple up 3%. These are the two biggest companies in the world by market cap. So obviously when they rise, they pull the indexes with them. Tesla gaining a little bit today if you're long that. Pfizer is down. We were just talking about pharma. Walmart says it's going to stick to its guidance even with tariffs, and it's getting a 3.5% boost. ExxonMobil down 2%. The interesting thing here, I think, is yields. The U.S. 10-year at 4.35. The 2-year back up at 377. So we'll continue, Shanali, to see a sell-off in bonds, the likes of which we haven't seen since the pandemic.
Certainly a pretty historic moment. The scale of the moves are large, and there's some government bond auctions actually later today and tomorrow that traders are watching closely. But the Treasury's fire sale is sending long-term yields soaring worldwide. The yield on the 30-year Treasuries briefly soared above 5%, fueling the biggest sell-off in 5 years. Joining us now, Ira Jersey of Bloomberg Intelligence. You and I talk about this all the time, and we could debate for days on how much this is hedge funds, how much this is worries about future demand. But there are long-term issues, long fiscal issues that are on the horizon, and there are short-term ones like that hedge fund leverage that Scott Bessent cited just this morning as being an issue. From where you sit, how does this set up the market moves in the days, weeks to come?
Yeah, so I think all of this is positioning, and it's positioning in different products. So what we have right now in the market, if you go back and you just look at what we, at the future positioning data that we received last Friday, it shows that asset managers are very long Treasury futures, hedge funds are very short Treasury futures. Because those hedge funds are very short Treasury futures, they need to hedge that by buying Treasuries outright. And then, so there's just if there's an unwind of just a little bit of that, you wind up seeing a massive amounts of volatility. Some of this is fundamental, but obviously the proximate cause is fear that foreign investors are not going to be buyers of Treasuries, and because of that, you've seen this pretty substantial sell-off. And it's not a huge surprise because all the financial regulations that we created to make all the banks and dealers safe and sound is hampering liquidity because they can't expand their balance sheet and intermediate the market. So everything that we're trying to do is just coming home to roost in this couple of day period right now.
Right, a good point there. A lot of this comes down to positioning, not just unwinding of the basis trade potentially, but unwinding of a lot of positions when it comes to asset managers as well. I want to talk a little bit about demand and sentiment and how much it depends on 1 p.m. today, because we had an auction of 3-year notes yesterday. It did not go over well. You had a big tail. Primary dealers who are obligated to bid in these auctions actually took the largest share since December 2023. Treasury sells $39 billion of 10-year notes today, Ira. How are you expecting it to go over?
Yeah, well, I think that since we've cheapened a little bit, I think one of the reasons you've seen some of the volatility recently is actually dealers making room because they knew that they did get a lot of 3-year notes, and now there's more risk out there, right? So 10-year notes have more or less 3 times the risk that 3-year notes do. So they're worried that maybe they'll have to take down some of this auction, and more importantly, tomorrow's 30-year auction, right? I think that's so between the 2 days, you're talking about a lot of market risk that's coming in, coming into the market. So dealers are making room, and that's another reason to think that they're only going to be buyers and intermediate this market at cheaper levels. So that means that you have higher yields, lower prices, and dealers kind of make room and pick where they're going to be selective buyers here, as opposed to just taking down every single trade from their clients.
Ira, I sit next to Shanali here at work, and as a result, I never hear the end of the basis trade, but I still can't quite wrap my head around it.
Let me do this quickly for you. So basically you have treasuries being bought on the short end by hedge funds, which is why it matters for the auctions. They sell the futures and they arbitrage the difference, but they do it to the tune of 50 to 100 turns of leverage. Highly levered trade. Now, Ira, we have seen the Fed come in with backstops before when this has caused issues in short-term funding markets. What would it take for the Fed to step in, not via rate cuts, but via some sort of backstop if these markets were to get much more interrupted, let's say?
Well, I think we're pretty close to that point where the Federal Reserve is going to have to think about doing what it does best, right? And its primary function as lender of last resort. And I'm not saying that they should go out and buy treasuries, but they created this thing called the standing repo facility. But the problem is it doesn't work as intended. Its design has flaws that don't make it the funding backstop for the treasury market and the mortgage market that people thought that it would be. So they really need to just do regular, everyday, temporary open market operations, repo operations, similar to what they did prior to 2008, where they were in the market every day, either doing repos or reverse repos, to basically meet reserve requirements and demands. And I think we're at that point. The other thing that this shows you, and I think that the market volatility highlights, is that we're very close to that lowest comfortable level of reserves, and that the Fed at some point in the near future is probably going to end its runoff program. Yeah, it'll probably still run off mortgages, but ultimately they'll stop QT very soon.
All right, Ira, great to have you on the program. Thanks so much for joining us. Ira Jersey there of Bloomberg Intelligence. Coming up in the next hour, Cole Smead joins us, as well as the CEO of Air France and the CEO of Macmillan Publishers. This is Open Interest.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. U.S. stocks about 1% up or less hours after President Trump's new trade tariffs went into effect. Both China and the EU retaliated, and J.P. Morgan Chase CEO Jamie Dimon weighed in on Fox Business.
Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
China, which was hit with 104% American tariffs, is retaliating with 84% levies on U.S. goods. The U.S. has approved new tariffs, too. Food industry spokesman Andrew Harrig says customers could expect to see increases in food prices first.
Fresh products, because you can't build up inventories and there's a limited lifespan, you will feel that quickly, maybe as soon as a week or 10 days.
President Trump's just posted to Truth Social, "Be cool. This is a great time to buy." Still no definitive word on a cause after at least 113 people were killed when a roof collapsed at a nightclub in the Dominican Republic. Correspondent Christian Benavides is in Santo Domingo.
Rescuers have spent hours searching through the rubble of the one-story building, desperately trying to get to any survivors. Among those who died was beloved Dominican merengue singer Ruby Perez, who was performing on stage when the roof collapsed.
Former Major League Baseball's Octavio Dotel and Tony Blanco were also killed. Police in Virginia say all suspects are in custody after 3 people were shot to death in a shooting at a townhouse complex just outside Fredericksburg. They say there is no threat to public safety. Pushback after a student conflicted over doing the right thing was suspended for the choice he made. CBS's Jim Crisula.
A judge in Virginia Beach, Virginia, said it was, quote, appalling that a school suspended a 6th grade student for waiting to report that another student had brought a bullet to class. The judge ruled in favor of the child's mother after she sued St. John the Apostle Catholic School for breaching its contract with her when administrators suspended her son for a day and a half last September.
Among this year's additions to the Library of Congress National Recording Registry. Debut albums from Chicago and Tracy Chapman. A Roy Rogers and Dale Evans song is on the list, too. And the oldest entry among them, the Hawaiian Quintet's recording from 1913. Dow is up 191. This is CBS News. A new security report shows New Orleans needs to do more to make partying safe. WWL Radio's Dave Cohen.
This 44-page report by Teneo Risk finds that New Orleans remains vulnerable to terror attacks, particularly vehicle versus pedestrian attacks like the one that killed 14 and wounded dozens more on New Year's Day. The analysis obtained by CBS News affiliate WWL-TV in New Orleans outlines the need for more robust intelligence, more efficient defenses, and better communication between agencies that it says was lacking even during the recent Super Bowl and Mardi Gras.
Prince Harry returned to court in London today for the second day of his legal fight over police protection. He's appealing the British government's decision to strip him of security after he and his wife Meghan Markle stepped back from royal duties and moved to the U.S. His lawyers argue Harry has been singled out. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York
Friday.
City. What? Did I say Friday?
You did. You just whipped ahead 48 hours.
We're not even close. Not even close.
It's not even Thursday.
Oh my! That is just the
3
week
hours.
it's been. That's the week, and we were commercial free for 3 hours.
No,
this
I get
morning,
it.
So
I get it.
feels like
This
Friday.
week has
All
been
right, let's go
intense.
Wednesday here, folks. I like Wednesday. It's a nice day. A lot of stuff coming up here. We're going to stay on top of these markets. They've been moving big time just in the pre-market to where we are today. Big swings in the market, so we'll stay on top of that. We're going to talk to Christina Hooper. She's the Chief Global Market Strategist at Invesco. Dan Ives, Global Head of Technology at Wedbush Securities, he's going to be in studio. He has been in the news a lot lately on Tesla and some of these tech companies. The tariffs are crushing the technology industry, as you would expect, as it is many other industries. So Dan will have his updated thoughts there. So he'll be in our studio. That's always fun. Let's kick things off right now on this Wednesday with Mr. John Tucker on a Bloomberg Business Flash. John.
And this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 70 in April 2025 at IBKR Forecast Trader? The yes was recently at 29%. Start predicting today at ibkr.com/forecast. The last trading day for this contract, May 13th. It looks like investors scooping up some beaten up tech shares. You have 7 of the 11 major industry groups in the S&P 500 higher right now, and it is information technology that's in the lead. NVIDIA shares, they are up 3.5% right now. Tesla shares up 4% higher. Apple shares, they are up 2.6% right now. The Bloomberg Mag 7 index up 1.8%. Now, overall, the S&P 500, 19 points higher. That's up 0.4%. Right at 5,000 even. Dow Jones Industrial Average up 37 points. The NASDAQ 100 up 183 points. That is a rise of 1%. And, of course, China fired back this morning, indicating no end to the trade war, announcing new tariffs of 84% on U.S. goods. Walmart reiterated its sales guidance today, expecting net sales to grow 3 to 4% this year, despite the tariffs. And in the early going, Walmart shares up 4.4%. And also, after its earnings report, although the forecast wasn't so hot, shares of Delta right now, best performing shares in the S&P 500, they are up right now 7%. And a change of the bond market. We saw a big sell-off earlier. Let me go to the 30-year, the long bond. But right now it is down 1 1/32, pushing the yield up to 482. So still some stress levels there. And as we check currencies right now, the dollar DXY, that was lower. Brent crude, Alex, down close to 4%. NYMEX crude down 235, 57.23. Brent right at 60, 60.42. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Hi.
Hi. Yeah, that was pretty brutal. That oil slide.
Yeah, it's only
no
Wednesday.
Good. It's only Wednesday.
yeah.
But it feels like it's been like a year of trading
Exactly.
In the last couple days. And, you know, okay, stocks are higher, but remember yesterday we had a 3.5% rally? Oh, man, that last hour, the close was really horrible in terms of
And of
technicals.
course, I lay the blame at Tim Stenovic and Carol Masser.
As you should. As you should.
Yeah.
As you should. This is all completely fair and totally legitimate. All right, Alex Steele, Paul Sweeney, John Tucker, Bloomberg Intelligence Radio. Let's take a look at some of the stocks on the move today. We're joined now by Bloomberg's Denitsa Sakova. Let's go to Delta because that stock is up. And I'm trying to read between the tea leaves here. Like the forecast, there was no forecast, but earnings were better than expected.
Yeah, it's a very interesting combination. Initially, when I saw the earnings report, they weren't about broad economic uncertainty. I thought that investors are very sensitive towards that, but we're actually here. It rose as much as 8.6%. It's up about 7% now. So incredible rally here. I think an important part of this market and what we're seeing in terms of dip buying is all those names who suffered the most, and Delta was down about 40% before this, are getting a big boost. Of course, the earnings report, we had a really good earnings report from them despite the uncertainty. Analysts are warning that despite all of this, investors should be encouraged by their diverse revenue streams, by their cost management. So when I look at the buy recommendation, there is definitely a lot of optimism among analysts. And then, of course, we got the first quarter earning that beat analyst estimates, so that's bringing some optimism. But Delta declined to reaffirm the forecast it issued in January. There is clearly so much uncertainty, but investors are buying the dip. So probably that uncertainty is fine for the first few hours of trading.
I mean, it just shows that how much was already priced into your point. It's on 48% since the peak in February, which means that for earnings season, if you beat, even if you pull guidance, are we going to re-rate just because we've already been so pummeled? BI maybe doesn't agree, but nonetheless. Peabody Energy.
Yeah, we have two different types of news bringing the stock higher. It was high as much as 21% in pre-market. Now, obviously, some of those gains have faded, but still incredibly strong day. We have a combination of President Donald Trump signing an executive order to expand mining use of coal in the U.S. And we also have a deal worth up to about $4 billion to buy Anglo-American steelmaking coal. So the combination of the deal and the combination of obviously what's coming out of the White House is really boosting the companies. We have a lot of measures, obviously, to promote electricity made from coal. So that's clearly boosting the company. And it's one of the biggest winners today. We're yet to see if that holds, because obviously everything's volatile. But that's definitely one name we're looking at.
Alex, what did you make of the president's executive order yesterday promoting, I guess, the use of coal, the mining of coal? Is this for domestic consumption? Is this for export? Both?
Well, it seemed to say that it was for AI demand in order to meet that. That's why it was sort of energy security. But at the end of the day, guys, it's economics. If it economically makes sense to build a coal plant, they will build it. If it makes economic sense to keep it running, they will keep it running. Now, coal is below natural gas in prices, so from that perspective, sure. But on a longer-term basis, I mean, TBD, would you really change what you're investing in terms of natural gas to coal? I don't know.
For the fireplace, I once bought a bag of coal from a guy in Pennsylvania, just to see. To experiment.
How did it burn?
And?
Yeah. Oh, it burns forever, hot as all get out.
Did it smell bad?
Man, what was coming out of the chimney? You don't want to breathe that stuff.
Right.
Just
there we
saying.
go. Just saying.
My observation.
You need carbon capture for his house. All right, and wrapping it up here, let's go to CalMaine. This is a. What is this, a food company now?
Going to one of my favorite topics. It's an egg producer that reported third quarter earnings that missed consensus. But most importantly, we're hearing about investigations from the Department of Justice for the causes behind the increase in egg prices. Also, one thing I really like about this company, the ticker is COM. which is something we all need today. But the shares dropped earlier on Wednesday. There was a really big drop. Obviously, now things are so volatile on micro level that a lot of that drop was erased. But for sure, that's a very interesting name to look at, going to that egg price debate that has shaken the economy. But the company also said Tuesday it is acquiring Echo Lake Foods, a Vermont-based maker of ready-to-eat egg products. So clearly the egg economy is expanding. So that's an interesting name to watch. That's actually scoring small losses today compared to what we saw in pre-market trading.
All right, thanks so much. We really appreciate Denisa Sakova joining us. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Let's get the latest here on the economic conditions. Enda Kern is Bloomberg Global Economy reporter. On the latest with tariffs, I don't know, that's such a broad topic at this point. The latest is that the EU is going to be slapping tariffs on some goods into the European Union. How do you expect this to unfold in the next 24 hours?
Well, we've had so much news this morning. As you mentioned, Alex, China has retaliated 84% now on U.S. goods there. The EU have retaliated in kind to also to U.S. tariffs. So, without getting to the specifics of that, what it means is that all goods coming out of China into the US will now be more expensive. That's everything from everyday goods that we buy, like maybe blankets and umbrellas, right up to iPhones and electronics. Similar story with the European retaliation. What it suggests is that the economic hit is prices, as I mentioned, but secondly, there's no hint of an off-ramp just yet, no sign of an immediate round of negotiations. Now, we had a lot of commentary this morning from Treasury Secretary Scott Bessent making the point they are willing to talk. Lots of governments are coming here to talk to the administration, so that's clearly on the table. He also made it clear, though, that China isn't yet coming to the table for talks, but even allowing for the negotiations that are ongoing, it doesn't feel right here, right now, like there's any kind of a near-term solution to get us back to where things were on the trade front before April 2nd.
So, and is there a sense here, was this retaliation by China, this 84, A, was it expected that China would retaliate, and B, was the 84% number higher or lower, kind of in line with expectations?
Probably expected that they would retaliate. That's been the language from them. Remember, the Chinese Commerce Ministry said this week they would fight to the end. They came back with this 84% level. On the one hand, that's a wild tariff level, obviously, just like the US one. On the other hand, you've got people saying, well, they didn't go to 104, didn't fully match the US, so maybe they're leaving some daylight room there for negotiation. But either way, we're clearly now in pretty much uncharted territory in terms of modern trade between the world's big two economies. Lots of analysts out there warning about how this is unsustainable. Obviously, it will lead to a slowdown in trade between both, and obviously it will drive up prices and slow growth for both. Prices more for the US and slow down China's economy. So, I mean, moving feast, there's a lot to get people to get their head around in this one.
A big tool here was a potential devaluation of the yuan. I mean, looking at that chart yesterday, when you had dollar yuan on an offshore basis on the highest level on record, it was unbelievable. How low can the yuan go without causing major disruptions?
Well, that's right, Alex. It's a tricky one because they don't want a disorderly weakening either, as we wrote out of our colleagues in Hong Kong and Beijing this morning. On the one hand, they are letting the yuan to weaken. The idea there being that will help their exporters, give them a little bit of a cushion. But, you can turn around and say, if you let it weaken too far, people want to get their money out of China. It won't make it an attractive place to invest, so you got the risk of capital flight. That's one side of it. You also have to think about diminishing returns. You can weaken your currency, but if the demand isn't there, and people are warning about slowing trade, if the US consumer doesn't want to buy as much, if demand isn't there, cheaper currency won't do that much for your manufacturing base. Anyway, so to be expected that they would do this, they're trying to keep it orderly. To your point, it's a big question about how far they think they can push it.
All right, and we really appreciate, thank you so very much, Enda Kern, Bloomberg Global Economy reporter, a very busy man right now joining us. All right, coming up, Eric Edelberg is Bloomberg Intelligence Chief Mortgage-Backed Security Strategist. Remember when mortgage rates dropped for a second?
Yes.
Yeah.
What happened?
I don't know. That's not going to work out very well. And Christina Huber is Chief Global Market Strategist over at Invesco. She's one of the perfect people to talk to about the move that we've seen in the Treasury market. What is actually going on? And I'm really curious about the 10-year auction today, Paul. Will it fail?
I know.
He cares now. He cares
now.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And buyers actually have shown up this morning. Tech shares, they are getting a lift right now with the NASDAQ 100. That is up 1.2%, up 198 points right now. You have NVIDIA among the most active. It's up 3.6%. Tesla shares up 4.2%. Apple shares 3.1% higher. Just parenthetically, Apple was replaced by Microsoft in terms of the members of the S&P 500 with the greatest weighting. So Microsoft back to number one. The trade war intensifying, of course. President Trump's sweeping tariffs taking effect, including 104% China levy. This morning, China responded with an 84% tariff on U.S. goods. Also, this morning, the European Union announced it was adopting tariffs on $23 billion of U.S. goods. Shares of drug makers under pressure, with the president promising to announce major tariffs on pharmaceuticals, in his words, very soon. Pfizer share, New York-based Pfizer, down 3% right now. Treasuries plunged Wednesday. That would be today. Paul.
I'm all in.
Just to clarify.
Yeah, just to clarify, it's the middle of the week. Anyway, yet the benchmark 10-year yield rose to its highest level since February. Let me give you a Treasury quote right now. PX1 is the function on the Bloomberg. I'll do the long bond, down 29.30 seconds in price, so that's pushing the yield up 482. So I'll call that some stabilization there. Mickey's on sale. Disney announcing half-price tickets for kids 3 to 9 this summer. This is actually a first for Disney.
Yeah, never.
Hotel guests are going to get free tickets to one of the company's 2 water parks in Orlando on the first day of their stay. Guests who book rooms for 4 days or more in certain ticket packages will also be able to eat for free at the park and hotel rest. It sounds like an ad here, but they're facing a lot of competition from Universal.
So instead of $8,000, it will now cost me $7,000. Is that what it is? Okay,
but
that's
they
huge.
never do this.
Well,
never.
Yeah, first ever.
So this is competition from this expanded Universal thing. I think they're like doubling the size of the Universal thing. Comcast is, and opening in March. In the midst of all this economic uncertainty. So a little bit of an issue there. So, anywho, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast now. I mean, I'm looking at the mortgage market. You look at the 10-year Treasury. That's kind of proxy for kind of the mortgage market, I think. Boy, we were back at 5% just in January. Then the rates came down pretty substantially, got down to 4.4%. I started doing the refinance calculations. Boom, we're right back to 4.8%. So I missed my 3-second window there. Erica Edelberg, she does this stuff for a living. Chief mortgage-backed securities strategist for Bloomberg Intelligence. She joins us live here in our Bloomberg Interactive Broker Studio. Erica, volatility everywhere, including the mortgage market, right?
Yes, lots of volatility in both your homeowner rates and especially in mortgage-backed security performance, which is really very, very dependent on what happens with volatility, because the option for people to refinance their loan or not is in play, especially right now with a lot of people having taken out mortgages at slightly higher rates from now. And we saw that responsiveness in this morning's MBA index, which is already very much in the rearview mirror.
Yep.
But, we had a surge of about, I think 56% in the VA loan refi index, the highest in September of last year.
Really? Okay.
But that will, that will probably reverse very soon.
So when you have this kind of volatility in the treasury market and the equity market, et cetera, and cross-asset volatility, FX market too, what happens to volatility in mortgage-backed securities?
Mortgage-backed securities become equally volatile from a rate perspective, from a price perspective, but they get a double whammy. Because again, the whole thing about mortgage-backed securities is the timing of your cash flows is uncertain. You know that your credit's probably fine, pending GSE securitization, privatization issues, but you just don't know when you're getting your cash flows. If people are going to return it to you right away through a refi, if they're going to say, oh, geez, rates rose now and I'm going to sit on my home forever, like Alex. So we don't know if we have a Paul Sweeney environment or an Alex.
Yep.
No one's ever going to get an Alex Steele environment.
That is
Paul Sweeney's chomping at the bit to refi, and Alex is never going to move.
Never.
Yeah,
so
exactly.
Never.
The two extremes.
Red headline crossing the Bloomberg terminal. U.S. weighs farmer bailout as China retaliation threatens exports. Well, more reporting on that.
I mean, that's exactly what we saw in the first Trump administration because of the tariff.
I wonder if I'm a farmer, would I rather grow my crop and get paid or take a check from the government?
I think you want to grow your crop and get paid.
I don't know. I'll have to ask. I will ask Mike McGlone because he was a farmer.
Okay.
Okay, we'll do that.
I'll shoot him an email.
Yeah, we'll do that. Erica, credit quality in your market, how's it looking? Are people paying back their mortgages? Do we have defaults kind of coming up? Where are we?
We have very small upcreep in defaults. One of the things I've been looking at is things like debt, debt relative to your disposable income, et cetera. And because of that environment where rates were so low, and because so much people's debt actually still is their low coupon mortgages, it's actually relatively low. But in the riskier sectors like Ginnie Mae's relatively new issue, which is kind of akin to what's going on with subprime autos, you are seeing defaults and delinquencies creep up. Mortgage-backed securities, agency mortgage-backed securities, their credit is still 100% secure for right now. So again, that just affects the timing of the cash flows.
All right, so the takeaway is I am not refinancing the mortgage on the Jersey Shore compound. Erica, thank you so much for joining us. Erica Edelberg, Chief Mortgage-Backed Security Strategist for Bloomberg Intelligence, joining us in studio. How about that? Christina Hooper, Chief Global Market Strategist at Invesco. We usually do the Zoom thing, but we've got her in our studio here in New York. That's great. Christina, you've got perspective. You've been around. This isn't your first rodeo. What do you make of the last 3, 4, 5, 6 trading days?
Well, this is an environment in which there is just a super high level of uncertainty, and that is causing all kinds of wild swings in all different corners of the market. And I think this is not that dissimilar to what we saw in the early days of COVID. That was a time when there was just an incredible amount of uncertainty, and markets reacted with an enormous amount of fear, wild swings, and the other similarity is that it's all about policy. That the outcome of this crisis will be dictated by policy, and so in some ways that's helpful because you can do a scenario map and ask yourself, if X happens, we think Y will happen. But it is a very, very unusual environment, just punctuated by just an incredibly high level of uncertainty.
Speaking of that, Amazon canceling orders that affect multiple products and vendors after China tariffs. They're citing trade disputes as risk factor, and this coming out in the annual report. The difference in obviously is that this is a self-inflicted policy. This is not what happened in COVID and we shut down and then we had to help. To go specifically to the Treasury market, are you seeing, are you hearing, are you worried about the Treasury market not functioning properly like we saw back in 2020?
So I certainly think that's a concern. Right now, I don't think we're seeing that, but we do know that our trading partners know some of our big vulnerabilities, right? And one of them is that we spend an awful lot servicing our debt. And so one way to punish us would be to sell U.S. Treasuries. So I certainly think we are aware of the vulnerabilities and we should be following it closely.
At Invesco, what is your, economic forecast? Do you have a recession in your forecast?
My base case is that if we see tariffs remain at these relatively high levels, we're more than 50% probability of going into a recession this year. Doesn't mean that it's going to be a deep recession, but I think that certainly the odds are in favor of recession if we see tariffs remain at relatively high levels. But if we were to see a de-escalation, we could easily see a risk-on environment with U.S. assets benefiting. So it is very much in the hands of policymakers.
And then to that point, you just look at Delta, right? Pulling guidance. If a company pulls guidance, you would assume the stock would sell off, and that would be really bad news, and the stock is up. It's sort of like it's not going to take much to maybe move the needle. Where is safety, though, now, as you wait?
So safety clearly is in gold, and that's many investors are articulating through their purchases. But there is also safety, of course, in Japanese yen, in the Swiss franc, some of the traditional safe haven asset classes ex-US. I don't know if there's as much safety in treasuries or the USD.
Wow, that's a statement. International rest of world stock markets been outperforming the U.S. pretty well, and that doesn't happen very often. Is that a trade? Is that a longer-term trend, do you think? Are international markets maybe more attractive from an equity perspective?
Well, certainly from a valuation perspective, and for some markets from a dividend yield perspective, they are more attractive. And you have to recognize a very significant catalyst, which is the potential for fiscal stimulus, material fiscal stimulus coming from Europe and from China. And I think that can be a countervailing force to the headwinds that come from these tariff wars.
Countervailing force, could that also come in the U.S. in the form of tax cuts? Would that be enough?
That's a good question. I'd have to see exactly what those tax cuts look like, because keep in mind that it's lower income households that are going to be hit the hardest by these tariff wars. Of course, all consumers will be hit to the extent that the wealth effect is impacted, but I think lower income households, the burden is higher for tariffs. So what will the tax cuts look like, and will it benefit lower income households? So when I know that, then I can answer that question.
Another headline, China issues warning for students studying in the U.S. So there you go. Ripple effect, I guess you call it.
Yeah.
Fixed income, what's the play here, Christina, in fixed income for you guys?
So I think there's certainly potential in a number of areas. Again, a lot of it has to do with one's time horizon. But certainly floating rate, I don't see the Fed cutting rates anytime soon. I know 4 cuts are priced in. It's hard to believe that's going to happen in this environment where we're seeing market-based inflation expectations go up and where we're seeing consumer-based inflation expectations go up.
Aside from, I guess, from where you sit, what would certainty look like? Because to some extent, we know what stuff is. Like, we know what tariffs are. We know that. We don't know necessarily what all the response will be. So what would it take for you, as someone who's been in the market for a long time, to feel confident?
So I hearken back to the first Trump administration.
Definitely hearken.
And how that played out. 2018 was a really difficult year. The S&P 500 was down. We saw some foreign markets down much more. But just a modest alleviation in tariffs helped and gave markets confidence. So something like that, I think, is enough in this environment. There's really a bias towards optimism, especially in the equity market. So there's hope. Even if we were to get some kind of reduction, some deals negotiated with some countries, I think that could be helpful. That doesn't give us the extreme certainty that I think we crave, but it's enough.
Christina, thank you so much. We really appreciate it. Christina Hooper, Chief Global Market Strategist for Invesco, joining us live here in our Bloomberg Interactive Broker Studio, which is a good thing. Coming up, Dan Ives, Global Head of Technology at Wedbush Securities, on his outlook for tech companies post-Trump tariffs. I'm guessing the tune has changed a little bit. S&P up 45 points. That's 0.9%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Maybe some bottom fishing. The S&P 500 right now up 20 points, a rise of 0.4%. Right now at 5,001 on the index. The Dow Jones Industrial Average 8 points higher. The NASDAQ 100, the tech-heavy NASDAQ 100, up 190 points right now. That is a rise of 1.1%. And among the most actively traded shares in the cash session right now, let's get right to it. At the top of the list in the S&P 500, you have shares of NVIDIA up 3.7%. Tesla shares up 4.7%. Intel, that's up 3.1%. Apple is right now up 3.25%. The trade war intensifying. President Trump's sweeping tariffs, they have taken effect, including a 104% China levy. This morning, China responded with the 84% tariff on U.S. goods. Also, the European Union adopted tariffs on about $23 billion of U.S. goods. The administration considering plans to offer assistance to farmers amid concerns about the trade war's impact on American agricultural producers. Let me find a farm stock. How about ADM, Archer Daniels Midland? That's up right now about 0.6%.
Deere
Amazon.
Deere is always my go-to for the
Deere,
farmers.
you can check Deere too. I like, what is it? ADM's Supermarket to the World, their commercial. Amazon canceling orders for multiple products made in China and other Asian countries. So the company reducing its exposure, at least that's the suggestion there, to the tariffs. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Happy Wednesday.
Happy Wednesday. JT, Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. To add on to that, the Delta call is underway right now, saying they see a significant drop in U.S.-Canada bookings, to some extent no surprise. And Delta has told Airbus that it's not going to pay tariffs on new aircraft. So who pays how, where, when, also quite interesting as well. Back to the news on Amazon. So apparently the things that they're not going to buy now, beach chairs, scooters, air conditioners,
all the
and
things
some
we
other
need
products,
for
right,
summer.
as we head into summer, have been canceled from China and other Asian countries. Joining us here in the studio, Dan Ives, Global Head of Technology at Wedbush Securities. Okay, so if we take a look at the Mag 7, all of them are up today. Which stock do you think has the best option for a meaningful bounce?
I mean, look, let's just take a step back. As someone 25 years covering tech, I mean, I believe this is the scariest time that I've seen the markets, but specifically for U.S. tech, because it's really it's really an Armageddon that's come from a supply chain perspective, and that's why we've been so vocal. And I think it's been almost sad to see, because I think as these tariffs, it would set the U.S. tech industry back a decade.
So, I mean, some of the tech spending is almost maintenance spending. But a lot of it is incremental and new stuff and AI investment. People were taking up their CapEx numbers huge. And what's happening? Is that just on the sidelines, paused?
Look, and Paul, me and you have talked about this for years, right? And it's a fourth industrial revolution. But the reality is that now CapEx, new projects, halted, getting cut across the board. And that's why you can't put the genie back in the bottle. Essentially, what you've started here is a huge sort of CapEx decline that you're going to have to see number cuts across the board. And look, for these tech companies, I've talked to so many executives over the last week. You can call Paul Sweeney, Dan Ives factory in the Midwest. Hey, let's get those semi-chips from there. They don't exist.
Right.
That's part of the problem.
But pause and terminate are two different things. So I feel like a week ago, everyone was on the pause button. Are you saying now we're in the termination phase of projects?
I think we've gone from pause to something that's 3 to 6 month delays. And ultimately, companies, they don't know what's happening in terms of their businesses. So it's like if they were going to spend $100,000 in incremental cybersecurity, maybe now you put that on pause, $50,000. You don't know what your CapEx budget is. So going back to like Alex, what you were talking about before in terms of the Boeing, like who pays it? Now it's It's like a Jenga puzzle. And that's always been the frustration here, is that what's happening, even when you get deals, the damage is being done in real time, and that's what the stocks are telling you.
What do you expect to hear from tech company executives this earnings season?
I mean, we just had silence for like the last 3 seconds, kind of that when it comes to guidance, because Paul, no one's going to give guidance. And the reality is that as we take stab at numbers cuts, right now, these tech stocks, like to your question, like NVIDIA, Apple, Microsoft, you're baking in 10 to 12% cuts into stocks today. So forget where Street is. Street, those numbers are 10, 12%. The reason we haven't downgraded any stock and we're still bullish on NVIDIA, on Microsoft, on it, because my view is like you start to get another 5, 10% cuts to these stock prices, you start to bake in a 20% cut. And I think that's where you start to get, you're seeing some of the bounces now because of that relative. Street's already ahead of where ultimately the numbers are going to be.
Which of the Mag 7 is last on your list for any kind of hope at this point?
Look, I would say, I'd almost like rephrase it in the fact that what's the one that's most massively, sustainably impact? It's Apple, and which is obviously one of our favorite names, because 93% of iPhones are built and made in China. Any concept that that's all a snap of the finger is going to happen in India, I mean, I'm playing the Masters this week, okay? Same chance. So the reality is, like, where they go? Do they call 1-800-Navarro? Hey, what do we do? There's no alternative. And the problem is that what does that do to gross margins? That supply chain, and even when you look at Vietnam, that's why you are basically taking an American technology icon here, in terms of Apple, and you're cutting it at the knees. And that's essentially what these tariffs have done. And that's what we've talked about. It's an Armageddon-like move that needs to be stopped and negotiated. Otherwise, the damage becomes more permanent.
I saw a lot of tech execs at the inauguration. I've seen them kind of hopping on the Gulf Streams, making their way to Washington. They didn't get much payoff on that, did they?
No, because I think, they're
That's
there.
the oil guys.
Oh, yeah.
And they're there thinking, hey, 15% reciprocal tariffs, we could live with that. Then the chart, without living infamy, comes out, whatever, call it, trade deficit converted some odd Goodwill Hunting, MIT lab calculation. That's a tariff, and that's where it all changed. Because how do you start negotiating? And this is the problem on companies and what we're seeing. How do you start negotiating? If I came in here and said, my name's LeBron James, and I play in the NBA, you're like, what? How do you even start? And I think that's part of the frustration with those numbers.
So why do you still have a buy on all these companies?
Because my view that this is over the weeks, over the months. If I thought
but if it's Armageddon and they have to fundamentally change their whole business model.
If this was permanent in its current form, you downgrade every stock in terms of the view. My view, similar as how with 25 years, how we did in terms of financial crisis, 2008, 2009, COVID playbook, 2020, it's the same playbook. 2Q, 3Q, toss it out. I'd say for the next 3 quarters, you're basically going to toss out as an investor. They're almost washes. Investors not going to look at it. We view it as the chaos gets to some normalized baseline. You start to look at 26 numbers, and that ultimately is how you justify names. But the reason we don't downgrade is our view that this is something, whether it's weeks, months, transitory, I hate using the word, but in some way that this is going to be negotiated.
30 seconds left here. Does the U.S. risk losing its leading position in tech, the great Silicon Valley?
I mean, I think this could take tech back a decade.
Right. Yeah, you said it.
And because it's the reality, it's the food chain, the supply chain is in Asia. It would take 4 to 5 years to build a new factory, and the concept where we can make in America this. If you like $3,500 iPhones, we should make them in New Jersey.
I really don't want that.
And that would take 4 years.
Right. Dan, thank you so much for joining us. Really appreciate it. Dan Ives, Global Head of Technology Research at Wedbush Securities, joining us here in our Bloomberg Interactive Broker Studio. He's historically been one of the most bullish folks out there on technology, but hey, when the situation changes, you got to change. And technology Armageddon here is out in terms of here, and we're certainly seeing that in the stocks really year to date, but certainly over the last week. We'll have more coming up.
This is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through a lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. The news that broke just about half hour ago is that we may be looking at a farmer bailout to offset some of the issues and the chaos caused by a tariff war with Trump. So we want to ask, would a farmer rather sell their crop or would they rather get a bailout? So joining us, the perfect person to talk about this, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist who also used to farm stuff. Hey, Mike, what do farmers want?
Well, Alex, one thing I appreciate about your questions is you know the answer to that one most of our viewers do, and that's being in the Bloomberg Farm Fuel and Fuel Conference in Indiana, which was about 100 miles away from where I used to own a farm. It's clearly farmers just want to be able to sell at a decent price so they can make a profit. They hate subsidies. They hate that they have to depend on it. And now it looks like the only major thing other than some kind of bailout or like things that I used to put, I even put my own land in conservation and reserve program is biofuels. If we can create a little more demand for biofuels and ethanol and mostly biofuels, then that would help because, we have to export about 45% of our wheat and soybeans and about 15% of our corn. So we have a glut.
So, I mean, how does a farmer going to see it here? I mean, are wholesalers not going to buy their crop because the wholesalers know they don't want to have to deal with the tariffs when they export it? How does that all work out?
Well, that's the key thing, Paul. It's already started. The key thing that has been bad for farmers was that what was good was the massive pump in prices because of Russia's invasion of Ukraine to the peak in 2022. It was somewhat like World War I. It was great for U.S. farmers for a little while, but now it's gone away. But what it did do is it ran into this firewall of rapidly advancing technology where Brazil now is going to be exporting about 110 million metric tons of soybeans. That's double what the U.S. Used to export. And China's taking them, but they don't need as much anymore because they're adopting genetically modified seeds. So the overall picture for farmers was bad before the tariffs came in. The thing is, this is the heartland. This is the land where people voted for Trump. It's they're less concerned about the stock market. Yeah, so he's going to do what he like last time. He wrote him checks. Now that helped obviously, but people just don't like that. It's like if you can find a way to get corn to stay above $5 a bushel, yeah, we'll do that. And by the way, we'll create a lot of it, and that's the problem. Then we'll make it go lower. It's just the trend is creating more with less. Unless we get a drought, prices are going to probably get pretty cheap.
Here's my insanely dumb question. Is there not enough demand to just sell all our stuff here in the U.S.?
No, there's not. One of the biggest places we export our ethanol is to Canada. Oh, that might not work out so well. We export 45% of our soybeans. It used to be 55%. That's going down. We've been dropping our wheat production for at least acreages for years because we don't use much of it. We export most of it. We're basically the piggy bank for the world. But corn, that's a unique market. We only export about 15% of it. A lot of it's used for motor fuel. And one thing I want to remind our listeners, before the introduction of internal combustion engines, a large portion of our land was used for transportation fuel for horses.
Exactly. So, Mike, I'm going to front run Alex on this question here. Oil below 60. I mean, now this is getting serious here. If I'm an oil man down in the oil patch in, West Texas here, what's going on?
Unfortunately, that's one thing they get is typically after prices get really high, it's the high price cure is now have to transition to low price cure. So unfortunately, I had a good friend of mine from the oil patch text me on Tuesday when I pointed out $40 a barrel, which I've been pointing out for 2 years. Like, Mike, no, don't do that to us. I'm like, I'm sorry, but that looks like things will have to go. So the good news is we're right near the U.S. average cost of production, the largest producer of energy on the planet for crude oil. $56 a barrel. Bloomberg New Energy Finance said they'll probably do okay around 50, but typically you got to get around 40 or lower to shut it off for an enduring bottom. So we're heading towards that low price cure. It's happening globally. And remember what's happening since we pumped up in prices because of Russia's invasion of Ukraine. We're increasing supply, still decreasing demand, most notably from China. And unfortunately, prices have to go down to really shut off those excesses. It's just the way cycle usually works. And so it needs some kind of shock for it not to happen.
And what we're not going to get is a step in from Saudi Arabia, because OPEC Plus announced kind of the same moment we got tariffs from the Trump administration that we were looking at more oil coming on from OPEC Plus, because in essence, this is the theory, is the Saudis want to ding the overproducers like Kazakhstan, Iran. They want to get that compliance back, which means they will tolerate lower prices, which gives everyone anxiety back of 2020 and 2014 at the end of the day, Mike.
Exactly. By the time we get to midterms, the average gallon of gasoline in this country, which is around $3, is more likely to go to $2. And what's the stated goals of our Trump administration? Lower inflation. They might get more deflation, lower energy prices, lower bond yields. It's all going that way. A little blip lately in bond yields, but and I think Saudi Arabia is a pretty good ally, and Trump seems to get along. So we all see the tilt there.
Which is so interesting, because you know who this is good for? Well, consumers, but also like Delta.
Yeah.
Like you can see a lot of companies already locking in their hedging costs when they're like, "Ooh, lower prices. Let me lock that in right now."
Yep. There's a lot of cross currents out there. Mike, 30 seconds here. What's the play here for you? What are you talking to clients about today?
Gold higher, Bitcoin lower, and virtually most commodities continue to go lower. Deflation from the inflation is a normal cycle, particularly when you have a paradigm shift of what's happening in the U.S., kind of shutting off the ability for the rest of the world to export to the U.S. and the almost unprecedented austerity. Unfortunately, the trends were in place before Trump was elected.
All right, Mike McGlone, thank you very much. Appreciate that. As always, Mike McGlone, he's a commodities dude. He's at his agricultural conference out there in Indianapolis, Indiana.
I want to go.
And I think they're talking like corn and soybeans and stuff like that.
Love
so
this.
Mike knows this stuff. He lives this stuff. and commodity investors value his opinion in large part.
For our listeners in the U.S., reminder, go ahead and listen to us satellite radio, Sirius XM channel 121, world's only global audio business network, coast to coast, 24 hours a day. Go ahead, Sirius XM channel 121. That is presented by Oracle. Next hour, Bloomberg Intelligence is now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a fast and furious moving market for you. We got a great lineup of guests as well. Ira Jersey of Bloomberg Intelligence will be joining us about the liquidity in the bond market. Is it normal to see a 55 basis point increase in 3 days for the 30-year? I mean, maybe not. We'll see how liquidity is faring. Leland Miller, also one of the best out there from China Beige Book, to talk more about the relationship of U.S. and China and the tools that China has to combat any tariffs. Burns McKinney over at NFJ Investment Group on the markets, and Geetha Ranganathan, a Bloomberg Intelligence analyst on U.S. media. Ad agencies also getting hit, and George Ferguson will talk about Delta. But let's kick it all off for you with a Bloomberg Business Flash, and for that, we go to Charlie Pellet.
Hi, thank you very much, and here's what's going on. We've got another choppy session today. Right now, we are trading just about at the lows of the day with the S&P 500 index down now by 26 points. That is a drop now of 0.5%. The Dow Jones Industrial Average lower by 266 points for the Dow, a decline now of 0.7%. And West Texas Intermediate crude oil, it is slumping today. WTI below 57, 56.25, as we were just talking with our Mike McClone, down now by 5.6%. The 10-year, 4.37%, with the 2-year, 3.75%. And gold, 3,067 on the precious metal. Gold surging 2.8%. Bitcoin down 0.1%, 76,975 on Bitcoin. As for markets and tariffs, Christina Hooper is Chief Global Market Strategist at Invesco, and she was a guest right here on Bloomberg Intelligence.
My base case is that if we see tariffs remain at these relatively high levels, we're more than 50% probability of going into a recession this year. Doesn't mean that it's going to be a deep recession, but I think that certainly the odds are in favor of recession if we see tariffs remain at relatively high levels. But if we were to see a de-escalation, we could easily see a risk-on environment with U.S. assets benefiting.
Christina Hooper of Invesco speaking last hour right here on Bloomberg Intelligence. Keeping an eye on Amazon shares today. Amazon has canceled orders for multiple products made in China and other Asian countries, according to a document reviewed by Bloomberg and sources suggesting the company is reducing its exposure to tariffs imposed by President Trump. Again, recapping U.S. stocks right now, we've got the Dow, the S&P. They are both in the red. NASDAQ is advancing. S&P down 30. Choppy session down by just about 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio in Midtown Manhattan. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you will find us. As Charlie was just reporting, the indexes are all over the place in the equity markets, but let's see where the action is under the hood. We do that with Isabel Lee, cross-asset reporter for Bloomberg News. She joins us here in our studio. Isabel, what are you looking at?
I'm looking at Eli Lilly. So shares are edging lower by almost 5%. So Trump has long promised that his tariffs on pharmaceutical drugs will be coming soon, and it is coming soon. This is the latest signal that he really plans to press ahead with those sectoral tariffs, despite this really huge market fallout. I believe it's more than $10 trillion in the past 4 days. So Trump believes that tariffs will encourage pharma giants to produce more in the U.S., and he's confident that they will come back because the U.S. is the biggest market. But again, the lack of information makes any assessment really difficult. That's according to Bloomberg Intelligence, and implementation could take time. And also, the generics, which are mostly made overseas, I mean, that may affect prices too. And if you're hard on money, you usually go to the generic. So
Oh yeah, well I go to the generics anyway. I mean, $1 drug is better than 300 for sure. And medical devices too would get hit from that end as well. All right, let's go to Walmart here. So I was surprised that they reaffirmed their outlook despite all the uncertainty.
Exactly. So it was higher by around 5%. It pared back some of those gains, but still up by around 3.3%. So they did reiterate their guidance despite the barrage of tariffs and weakening consumer sentiment. And it really just highlights how the world's largest retailer basically is confident that it can navigate economic uncertainty. So Walmart said that it's seeing net sales growing 3 to 4% this year. So the forecast accounts for tariffs, unlike its previous outlook in February. And Walmart is really seen as a barometer for consumer sentiment. I mean, it's really due to its sheer size and exposure to a broad swath of U.S. consumers. And they said they plan to absorb potential price hikes, and they plan to keep their products affordable. We do have D.A. Davidson analysts saying that this could squeeze profit in the near term. But still, Walmart has actually performed historically better during economic downturns.
Yeah, okay, they can deal with it, but the mom and pop shop owner, I'm not sure. And boy, they vote too. So again, the politics is lost on me. What else you got?
Ford. So Ford is edging lower, and now actually it's down by around 1%. We're seeing a lot more pressure there. We have Bernstein downgrading the stock to underperform from market perform with a price target of $7. Bernstein said that there's significant downside for the stock that's not priced in by the markets. I really feel like these automakers are just getting hit day by day. So the analyst, Daniel Rosca, says the tariffs impact Ford just as consumer sentiment wanes. So he says that this is really going to have more downside. But Ford still has 5 buys, 13 holds, and 8 sell ratings.
I mean, this is tough. This analyst at Bernstein, sell Ford stock because there's nowhere to hide from tariffs.
Yes. Oof. I mean, yeah. And there's still 5 buys, you said? I mean,
I think about it. We just talked to Mike McGlone about the farmers. If Walmart's okay, that means probably the smaller retailers not. And auto industry. I mean, these are American key
iconic
constituencies.
Yes.
I don't get it. I don't get the politics. That's
he doesn't get the politics.
Yeah, I understand the economics. I just don't understand the politics.
You know what we get? We get the bond market. All right, Isabel, thanks a lot. Bloomberg's Isabel Lee joining us. For more conversations just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market, and listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. So speaking of bonds, it is the most important auction we've ever had. This is what I'm hearing from analysts. Even Paul is pumped about it.
Yes, I got my
alert set up. Put that in relative term. We get a 10-year auction today at 1 p.m. And the big question is, what will the direct bidders be? That domestic demand. What is the real demand for treasuries right now in the middle of this sell-off that we've seen? Ira Jersey is Bloomberg Intelligence Chief U.S. Interest Rate Strategist, and he joins us now. We finally got Paul into the auctions, Ira. How are you going to be receiving and looking at the auction today?
Yeah, so, we'll see where we are at 1 p.m. You know, earlier today, actually, when Paul and I talked just like an hour and a half ago or so, I was thinking, 10-year yields were up 14 basis points, 15 basis points today. It feels like dealers are trying to make room to absorb some of the supply coming out the next 2 days. And maybe they, even investors might dip in their toes, at cheaper levels. And now, of course, we've rallied now 7 or 8 basis points, so you've taken away some of that relative value. We'll see where we are at 1 o'clock, but like you said, the lack of direct bidders at yesterday's 3-year auction is really interesting because there's very little insight that we get into who those direct bidders were, whether they were banks or domestic investment managers, foreigners, like foreign central banks. We know some of them can bid directly for Treasury auctions. So we're making an assumption that it was foreign investors that didn't participate yesterday. I think that's a solid assumption, but it can't be all of it because foreign investors only took 8.5% of the auction of the 3-year auction in March. So how is it possible that for the 3-year auction in April, when you saw direct bidders go from 25% to 6%, it can't only be foreign investors. It has to be domestic investors as well. And I think that I suspect that just people don't want to catch a falling knife. So today's auction could be, I don't want to say pivotal, but it certainly could be, is something to watch and pay attention to. And it always is, right, Alex? So, auctions are boring until they're not. That's why we pay attention all the time.
Ira, early in my career at Salomon Brothers, as a young banker, we would look at the government bond traders as just kind of larger than life. You step aside when they walk down the hallway here because they had such sway on the market, and we had so many of them, and they had such a big book of business, and they made a lot of money for Solomon. It's not like that today, and I'm wondering, can the primary dealers today, can they really provide the needed liquidity?
So the simple answer is no, and I think that that's particularly true today because dealers right now are very full of treasuries. In fact, dealers own more treasuries than they ever have. Now the market's bigger, that's true, but you see the dealers, because they own so many treasuries, their ability to buy more of them when the market's selling off has been significantly reduced. And you've seen that in the market volatility. And I think that's really important. So will there be a policy response? One of the big questions I'm getting today is, when does the Fed step in and buy? Well, I don't think the Fed's going to step in and buy treasuries anytime soon, but they can do things like repurchase agreements and do their normal lender of last resort activities, which they used to do prior to 2008 on a daily basis. So they can do traditional repos, what we call temporary open market operations. The government reducing or taking treasuries out of the supplementary leverage ratio, one of these bank capital rules, I think would help quite a lot as well. They're already talking about it. They've been talking about it since Donald Trump took office. So, maybe this will help accelerate that process and help create a little bit more market liquidity for treasuries, which quite frankly is in the best interest of the government to do.
All right, great stuff, Ira. We're looking forward to 1 o'clock. I'll be pinging you after that. Ira Jersey, Bloomberg Intelligence, U.S. Chief Interest Rate Strategist, joining us there. Let's take a broader look now at the relationship of U.S. and China. It's not good. What's the off-ramp at this point? Joining us now is Leland Miller. He is a CEO of the China Beige Book. Leland, you are deep into the China economy, China-U.S. trade relations, etc. What levers does China have to pull to help support its economy in the middle of a trade war?
Well, markets have been expecting there to be some sort of giant stimulus response for years, and they were always disappointed because it wasn't in Xi Jinping's interest to sort of rejuice the economy after they've gone through maybe not deleveraging, but certainly a tightening of credit to areas of the economy outside of their priorities, like advanced manufacturing, et cetera. We're entering a very new era here. And so depending on how severe geopolitics and the trade wars get going forward, they're going to start looking at these levers more seriously. Obviously, one of the big one is fiscal spending. They don't want to do a bazooka like 2008, and they've already done a lot of monetary easing over the course of the past couple of years, so there's not that much oomph there. But there is spending they can certainly do. And in our latest data, we have actually seen our proxy for infrastructure, infrastructure spending start expanding and go up. Transportation construction, firms are borrowing more, they're investing more, they're hiring more. So they are readying the ammo gun in case they need to use it. But I think they're trying to figure out whether this is going to be a short-term problem or whether this is the new norm.
So, Leland, nobody knows this better than you, but where is the capacity for China and the willingness for China to really go toe-to-toe with President Trump in the U.S. on these tariffs? What is their capacity there, do you think?
Well, their capacity and their willingness are two different things. I think their willingness is very high. I think we're already seeing there was a signaling before it happened, and then now that it's happened, you see there was the message was always, if you do something to us, we're gonna respond. You do something else to us again, we're gonna respond. Now the problem here is that China doesn't have the capacity to go one-on-one in the trade field with the United States, simply because the United States is a massive importer and China is a very weak importer by comparison. So if you're just talking about trade, the U.S. has much more leverage and can put much more pain on China. This is why once you get to a certain point, and to the extent that Beijing is willing to risk an escalation, you're going to see things expand outside the purely trade realm. It's not going to be just a conversation about tariffs. Already, we're moving outside of it, but you can expand it more dramatically to other areas and even punishing U.S. firms on the ground in China.
I mean, yeah, we already heard the headline that China's, telling students that want to study in the U.S., like, think twice, for example, before you do that. In terms of levers it can pull, I know you mentioned helping domestic capacity and sort of pumping money into the system for consumers might not be the best. But in terms of the UN devaluation, for example, how orderly can China keep that?
I think they can keep it pretty orderly because they want to keep it orderly. It seems like every time there's any kind of geopolitical tension between the U.S. and China, any trade tension, there's anything going on in terms of just a weak Chinese economy, there's people screaming to the sky, the yuan, devalue it, devalue it. They really don't want to do this. It's not that it's not a tool in the box to use, but it's for break the glass emergencies. It doesn't mean they're not going to blow off steam against the USD. It doesn't mean they're not going to have a signaling purpose from moving it incrementally. But they really don't want to do one of these one-off devaluations. It would be a massive escalation. It would be seen very poorly, not just the United States and around the world, but you're also sitting in a situation where you're going to create a lot of stress inside the Chinese economy. You're going to put pressure on having more capital outflows. You're trying to increase consumption. By weakening the yuan, you're going to hurt consumption even further. So this is not just some piece of trade artillery that they can use willy-nilly. To go there in a big way, they need to really have a substantial escalation.
Hey, Leland, does China view this U.S. nationalism from President Trump administration, from a global trade, from a global military, political, as a real opportunity to expand its influence? Do they view this as a once-in-a-lifetime opportunity to do that?
I think there's a lot of voices in China. I think that they don't like some of what's happening. I think other things they see as an opportunity. Certainly, if U.S. allies and partner relationships are breaking down either in the region or around the world, they'd love to take advantage of that. And not necessarily by replacing the U.S., by simply saying, stop helping the U.S., stop buying into what they're doing. So there are opportunities in here if it's played wrong by the U.S. government. But I think that we're in such a dramatic place differently from where we were a few months ago. They're trying to digest this just like the rest of us.
Will this move China to make connections and trade deals and more economic ties with the rest of the world? And is the rest of the world open to that?
China would love lots of trade deals, but China wants them on their terms. And what they want to be able to do is not import on other countries' exports, and they want to just shove their exports down everybody else's throat. So to the extent that they can strong-arm countries or there's unique advantages to having some sort of bilateral relationship, then maybe these proceed. But keep in mind, to the extent the U.S. shuts itself off from Chinese goods, we import a lot of Chinese goods and have for a long, long time. Then they're going to have to send these goods somewhere else. So in addition to all the overcapacity problems you already have, you have simply a need to replace the demand for Chinese exports elsewhere. They're going to be flooding Southeast Asia. They're going to be flooding Europe. They're going to be flooding South America. So this is going to have to demand a policy response from all these other countries. And the question is, do you really want to do a trade deal with the Chinese if you're not getting anything back in return?
Leland Miller, thank you so much. We appreciate your time as always. One of our go-to voices in all things China economy. Leland Miller, CEO at the China Beige Book. One of the things we like about chatting with Leland is at the Beige Book, they have really unique data. They have boots on the ground. They don't rely upon the government data because that historically has been not quite reliable. So again, they have their own data sets there that they rely upon to give them a sense of where the Chinese economy is. We find out from Leland that he's usually ahead of this stuff. So appreciate getting his time. Coming up, we're going to check in with Burns McKinney, Managing Director and Senior Portfolio Manager at NFJ Investment Group. Discuss the outlook for these markets. And Geetha Ranganathan, Bloomberg Intelligence. She's a media analyst there. What's going on with advertising out there? This can't be a good environment. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Day long at Bloomberg, another chaotic day for the U.S. stock market. The Dow, the S&P, NASDAQ, all back in the green right now. We've got the S&P 500 index moving higher by 27 points now, up by about 0.5%. Dow Industrials up 115. That is a gain of 0.3%. NASDAQ is advancing 1.3%. The NASDAQ 100 index up 1.2%. But the Russell 2000 index of small cap shares trading lower by 0.6%. 10-year 4.37% now, with a 2-year 3.75%. Spot gold up $100 the ounce now, $3,083, up 3.4% on spot gold, while West Texas Intermediate crude is now slumping by 4.6%, $56.84 for a barrel of WTI. Bitcoin up 0.4, 77,342 on Bitcoin. Walmart is reiterating its sales guidance despite President Trump's barrage of tariffs and weakening consumer sentiment, suggesting the world's largest retailer is in a good position to navigate a historic period of economic uncertainty. Walmart shares, they're surging now by 4.1%. So recapping, U.S. stocks are higher right now. President Trump urging Americans to remain calm and continue investing as his sweeping reciprocal tariffs hit in an indication the White House is closely monitoring market reaction to the levies. In a post to his social media site, Trump this morning in all caps saying, quote, "This is a great time to buy." Also encouraged his followers to, quote, "Be cool." I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. As Charlie was just reporting, markets swing to green, to the red, up and down. Right now, we've got a little bit of green on the screen, but wait 5 minutes, I think. So how do you play this kind of market here? Let's check in with a professional, Burns McKinney, Managing Director and Senior Portfolio Manager at NFJ Investment Group, located down in Dallas, Texas. Burns, what have your conversations been with your clients over the last 4, 5, 6 days? What have they been like?
Yeah, it's really, I think everyone is on edge, and your last statement before I came on really calls to mind the mindset people have about weather down here in Texas. If you don't like the weather, wait a while, and you know what, if you don't like or if you do like the markets, wait a while. Really ever since I should call it Obliteration Day last week. The markets have really, it's almost impossible to predict what's going on, when really the key cog in it is just what's going on inside the mind of one person.
So Burns, so where do you head out? Where do you hide out then in that perspective?
Really in this type of market, investors should certainly consider being somewhat defensive. One of the areas that we've been focused on are companies that are paying and have a track record for raising dividends. You think of your dividend aristocrats. That just basically means you're focused on the companies that are generating a lot of free cash flow to pay those. You're looking for the types of names that have clean balance sheets, and really those with stable, recurring, and predictable earnings. And obviously, a lot of I think one of the key things that people are saying is that we'll look at companies that are more domestically focused, that aren't necessarily exposed to the tariffs. But the problem is, you have this kind of contagion. You just can't escape it just because they aren't exposed. For example, the banks aren't necessarily exposed, but their clients are. And so if this does tip us into a recession, there really aren't going to be a whole lot of places to hide.
So any sectors that historically perform less bad or better if we are, in fact, seeing a slowing economy going forward?
Certainly. Historically, I think two of what are considered the most defensive sectors by nature are consumer staples and utilities. Now, consumer staples have gone a long way towards pricing that in, as investors have really flocked to those areas of stability. But utilities, they had a solid year last year, but the prior year they had, their worst year in, like 20 years. And, right now, if you look at, within the S&P or within the indices, the weighting of utilities is at one of its lowest levels in years. And, you have an area there where you have names that, a lot of their, price increases are regulated. They do pay healthy dividends. And, likewise, investors also have the benefit there, especially in some of the electric utilities, of the types of companies that might be sort of a side door and lower valuation way of taking advantage of that AI trade, simply because, a lot of these, data centers and cloud computing just simply require a lot more electricity. And so that's probably one of the first things that comes to mind.
Before I let you go, I wanted to just get your take on how you're going to be looking at earnings season. It was surprising to get Delta. They're pulling forecasts, yet the stock was up. Walmart did say they're sticking by their guidance of 3 to 4%. What kind of earnings are you going to be looking for, and what would constitute good at this point?
Well, this is going to be a very unique earnings season insofar as investors are probably going to need to completely look through what the current figures are. Current quarter earnings are probably, given the fact that, we entered this year in an economy with, you had GDP growth of 2%, inflation finally back down to around 3%, and unemployment around 4%. That's about as close to Goldilocks as you can get. And so a lot of those earnings that companies are going to be reporting, that's going to be yesterday's news. And what matters more than anything is going to be the guidance. And we do expect to see more companies either pulling their guidance like we saw from Delta this morning, or just simply, issuing a great deal of caution, I think is probably the best way of thinking about it. We look at the S&P today, investors might argue that valuations are more attractive now because the multiples pulled back, but the E in that multiple may soon have the floor kind of pulled out from beneath it.
All right, thanks so much, Burns. Good to see you. Burns McKinney, a managing director and senior portfolio manager at NFJ Investment Group, looking at the markets. All right, let's turn now to media. So, it's going to be a multifold issue here, right? On the one hand, you have the theme parks business are going to get hit, right? You already are looking at Disney kind of revamping their prices. Also, you have people maybe cutting their budgets, and then you have ad sales maybe also cutting their budgets. Geetha Ranganathan, Bloomberg Intelligence analyst on U.S. media, sits in all of it. How does tariff turmoil affect the media guys?
Yeah, that's a great question, Alex. So it's really, there's no direct impact as such, but as you pointed out, there is this second order kind of derivative impact. So yes, ad sales is definitely going to be at risk, especially as we kind of head into a recession. And then you do have, again, the demand risk, the second order demand risk, when people kind of now face inflationary pressures and have to kind of shift their spending away from, discretionary spending into just spending on consumer staples, which are probably going to be much more costly. So yes, we are going to see some impact when it comes to, let's say, theme park visitation, when it comes to, let's say, the box office, spending on anything, discretionary in the entertainment sector.
Boy, I was just looking, Geetha, at the advertising agencies to get kind of a good framework to see where the expectations are for advertising. In a word, I guess, 2 words, not good. I'm looking at the stocks down, year to date, 20 to 30% for the Omnicoms, the Interpublics of the world, those types of companies. That tells you all you need to know, because that seems like people don't feel too good about the advertising outlook.
Yeah, the advertising outlook is really, really challenged right now, Paul. So, for the ad agencies, they were already kind of settling into a new normal. Remember, the ad agencies were already facing a tough environment, just kind of being disrupted by the Googles and the Metas and the Amazons of the world. But they were kind of settling in. They were still kind of finding their place. But, you have this whole new problem that they face with tariffs. And they do have diversification, both in terms of exposure to different verticals as well as exposure to different geographies. But I don't think that's going to be enough. So, we saw their organic revenue growth, which is the main measure for ad agencies, settling in around 3 to 4%. We think that's going to be well below, 2%, maybe 1.5% this year as we kind of price in all of this tariff fallout.
This might be a super dumb question,
no.
But when I'm like a Netflix and I'm an Apple TV and I'm those kind of streamers, like, do I cut back on budgets in this kind of scenario?
I don't think so. So I think, the streamers are relatively well positioned. And especially within the streamers also, we think that there could be a little bit of divergence here. So if you look at someone like a Netflix in video streaming or a Spotify in audio streaming, we think they are the best positioned. They are the most insulated, just kind of given their market dominance. And the fact that they are the best go-to services out there. So switching costs are already pretty high. Nobody really is, canceling their subscription right now. So churn has always relatively been pretty low for these best-in-class services. And remember, Netflix also has, in case people are kind of feeling that pinch on their wallet, Netflix also has a $7.99 option if you don't want to be paying the $25 a month. So I think whichever way you go, they are pretty insulated. In some of the other, Alex, you brought up some of the other streaming services. Maybe, if you're paying for, let's say, 7 or 8 or 9, maybe you might cut a Peacock or an Apple TV. I don't know. But Netflix, Amazon Prime, HBO Max, I think these all will kind of stand the test of time.
Geetha, John Tucker was reporting a Disney story earlier this morning about how the Disney's offering in their theme parks in Orlando some deals to encourage families to come. Young kids can eat free and things like that. I was telling John, I can't recall Disney theme parks offering deals very often here. Is this in response to Universal's new Epic Universe, which is going to open up in Orlando? Is that kind of what's happening here? Or is this reflecting just underlying weakness?
There is some underlying weakness, Paul, absolutely. But I think all of these recent promotions that we're seeing from Disney, especially in the Florida theme parks, is an absolute response to Epic Universe. That opens on May 22nd and will be a huge, huge challenger to the Disney parks. Remember, Disney gets about 100 million visitors a year all across the world. 50 to 60 million of those are in Florida. Wow. Universal, on the other hand, gets about 30 million or so, but we think that this could effectively take Universal's visitation just with this new Epic Universe up to almost 45 million. So very, very close to the Disney Florida park attendance. So they're going to be a huge contender, and I think Disney is kind of preparing for that.
Okay, so maybe it's not like an economy hit yet, but that could come on top of that at the end of the day?
Absolutely. So, and that could be something for all the parks in general, especially destination theme parks like a Disney versus, let's say, a Six Flags, which is more like a day trip. But if you're, again, comparing between Universal and Disney, especially in the Florida market, I think there'll be more of that wow factor right now to maybe check out a Universal park instead of Disney just because of all these new attractions.
I gotta say, I'm hearing a lot of people next week, public schools, vacation, they're going to Disney.
Yep.
So it's definitely not sort of out on nothing at that point. All right, Geetha Ranganathan, Bloomberg Intelligence Analyst on U.S. media, just checking out on what all of that means when you add in tariffs and then the weaker economy.
Walt Disney stock is down 26% year to date. So it's, the market's definitely concerned.
Yep.
So there you go.
Market's definitely concerned, but then let's take a look at the broader market. And again, if you blink, you'll miss it. NASDAQ still up 0.8. We're definitely well off the highs of the session, but the S&P is still in positive territory, Paul. But, what happened yesterday was tremendous, right? We had that huge rally, and then all of a sudden we broke below into a bear market on a closing level for like 3 seconds, and then we rebounded off of that level. But it was a brutal move.
I tell you, this market, we've seen it. We saw it today. It is just one tweet away from a 2, 3, 4% move in either direction, and it likely is to stay that way until we get a little bit more clarity here.
Yeah,
so
and also when you have a VIX at 50, around that, like, how does that resolve? Like, have we seen that without some major intervention from some way or another? Very long. Anyway, bond market selling off in the long end too. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. This market all over the map. We are now trading lower on the S&P 500 index. A little change, down 3 points right now. That is a drop of just about 0.1%. We got the Dow down 57. On the Dow, that is a decline of 0.1%. But NASDAQ holding on to a gain of 95 points now, up by about 0.6%. The 10-year yielding 4.42%. The 2-year 3.75%. Spot gold up $102 the ounce, surging 3.4%. Spot gold now at $3,085. West Texas Intermediate crude 57.04 a barrel, down another 4.3% today. Brent trading just above $60 a barrel. 60.30 was trading beneath that number earlier today. Right now, Brent is down by 4%. And Bitcoin down little change, down less than 0.1% at 77,030 on Bitcoin. Treasuries have been tumbling along with U.S. stocks, raising questions, souring questions about their traditional safe haven status. And with more on the story, here's Bloomberg's Vinny Del Giudice.
This week's sell-off of U.S. Treasuries is the worst since the pandemic. There are differing views why. White House tariff shock markets and traders may be ditching all U.S. assets. The national debt tops 100% as a share of GDP, and there are worries White House policies will lead to even more. Finally, it's hard to prove in real time foreign selling. China and Japan are the biggest holders of U.S. government debt. China especially is in the crosshairs. Vinny Del Giudice, Bloomberg Radio.
And coming up at 1 o'clock Wall Street time, a closely watched Treasury auction. Meantime, J.P. Morgan Chase CEO Jamie Dimon says a recession is a, quote, likely outcome of the turmoil tied to President Donald Trump's tariffs. Interviewed on Fox Business, Dimon said, quote, fixing these tariff issues and trade issues would be a good thing to do. J.P. Morgan Chase will be reporting Friday along with Wells Fargo ahead of earnings. J.P. Morgan Chase down today by 1.5%. Wells Fargo lower now by 3.7%. Recapping, the S&P back in the red, a turnaround from our last update. Right now, the S&P down 12, down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Let's talk airlines right now. I've got a couple stories out that got my attention. Delta Airlines pulls outlook as Trump trade war squeezes air travel. Stock trading up on the news, but interesting that they reported a pretty good quarter, but they don't have good visibility on their future travel. So they're going to pull their outlook, not provide it. And then I'm seeing Air France cutting fares to keep transatlantic budget seats full. So the airlines are starting to see some weakness from the consumer, from some of this uncertainty created by the tariff policy discussions here. So we talked to George Ferguson. He covers the airlines for Bloomberg Intelligence. George, let's start with Delta here. What did they say on their call today? And why do you think the stock's up on the news? It's up 6%.
Yeah, because I think the call wasn't as bad, I think, as a lot feared, right? I think I'm still trying to absorb all that we just heard, but a lot of what we heard was the premium markets are still good. Europe is still good, but they're watching it very closely. Asia Pacific was a good market as well. Non-premium, back of the airplane travel in the domestic market is poor. And because of all that, they're going to flatline capacity, no growth for the second half of the year. So it sounded like things are okay, maybe they're okay, right. But we're watching things very closely.
But I remember that Delta and the other U.S. carriers probably several weeks ago cut their guidance. This was before, I think, an investor conference. So they've already cut guidance once here.
Agreed.
So where are we there? I mean, do you feel like street estimates need to come down here?
Agreed. Well, so when I looked at the preliminary guidance for 2Q, it did seem like street estimates for 2Q had to come down, right? Because Delta gave some pretty broad ranges, but it looks like capacity is going to rise 5% when I look at schedules for them in the second quarter. and they said revenue could be up 2 to down 2. And if I did my math right, that means that I think either way, fares are softening. But the market seems to think things have gone too far. And Delta stock price, and they're rallying, right? So again, it's we're definitely working off lower expectations after they cut earnings expectations after the JP Morgan conference. But
so
seas are choppy here. Sorry,
George, I know every year you take a boondoggle over to Europe, either to London or Paris for these air shows, and this is where these big airlines place big orders with the airplane suppliers, Boeing and Airbus principally. Are we going to get to a period, George, where if they even allow you to go to Paris, if the French let you in, will European carriers buy Boeing planes and vice versa? Will European carriers buy, or Airbus?
I think they will. I think they will because the queues for airplanes are so long. You're not going to get out of the queue you're in and go to someone else's queue and wait longer. You'd have to wait 7, 8 years for an A320 out of Airbus, I think, as near as we could tell from the backlog they show. But what I will tell you, an interesting part of the call today was discussions with Ed Bastian about taking Airbus airplanes and who pays a tariff. And he said he's not going to pay a tariff and he's not going to take any deliveries, or sorry, very few deliveries this year. So it does sound like Delta has a tariff problem and isn't ready to take new airplanes. Now I know they're flatlining capacity for the back half of the year, so maybe they don't need them. But if the market was growing significantly right now, I think he'd have a problem. And so it's interesting, right? Because in a call previous, he said he had ways to manage tariffs, but we didn't hear that this call. It's going to be an issue. The question is, how long does this tariff problem stick around? How long does the administration continue to push it? Do negotiations come up where countries negotiate away these tariffs by making concessions, or at least making what looks like concessions? But right now, we're not seeing an impact, and if the world's slowing, we just may see a push out of deliveries for places that are affected by tariffs. Again, a lot of changes right now.
Yeah. So you mentioned kind of the weakness Delta was calling out in the back of the plane, maybe some of the more economy prices and seats. So does that mean the discount airlines, they're really going to face some trouble?
Yeah, I mean, the funny thing is, again, when sort of Delta, United, and American adjusted earnings a month ago, the low-cost carriers did a little bit, but the moves weren't as great. And the low-cost carriers had already been cutting capacity, right? If you think about it, Spirit Airlines went bankrupt. They cut, 40% out of their schedule or something like 30% of their schedule. Southwest significantly slowed growth. They went close to zero. JetBlue has been cutting. And now Delta came in today and said, look, we're going to cut the back half of the year to flat. So I feel like the full service have to make up ground here because they had been growing a little bit too fast. We had seen that in the beginning of the year. We're going to see an earnings season whether or not maybe low cost got ahead of the curve here. I still can't believe that Delta can deliver a seat as cheap as a low cost carrier. So I personally think the low cost carriers still have a valid business here and they'll fill airplanes and do okay. But when you get into times of trouble in this industry, trouble is big in this industry, right? There's a lot of operating leverage. And so we're going to see, right? We're going to...
Hey, jet fuel prices are coming down. I mean,
they are.
That's a thing. 30 seconds.
They are.
Top airline to manage all of this right now. What do you think?
I'd go with balance sheets, right? And that's going to be companies like Southwest and Delta that have strong balance sheets, can weather storms.
All right, fair enough. Thank you so much, George. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst, taking a look at Delta's earnings. Also, mentioning earlier, Air France and KLM's top executives saying that the carrier is also cutting prices to keep its transatlantic economy cabins full as airlines are grappling with all this international travel demand. You did?
Yes.
Okay.
Yes.
So this is good for him?
I think this could be good for him.
Discount?
No, but just prices coming down for Europe. I give him the Euro quote often.
Right. No, fair enough. But the front end of the plane, plane, that's a little bit different. All right, coming up, we will tackle the Amazon story canceling some inventory orders from China. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. You can check us out on YouTube as well. Just go to youtube.com. One story that broke a couple hours ago is Amazon canceling orders for multiple products made in China and other Asian countries, thinking things like beach chairs, scooters, air conditioners, and things like that. Joining us now is the reporter who broke that story. Spencer Soper is Bloomberg News technology and e-commerce reporter. How does all of this work for Amazon? So they place orders how many months in advance, and then what's the ripple effect here?
That's a great question, and a lot of this stuff, they kind of have like a target of how much they'll need, and then they'll place orders maybe monthly or that sort of thing. And so these cancellations affect what are called direct import orders. This is where Amazon tells vendors, hey, look, you're making this stuff in China or some other country in Asia. We can actually transport it to the U.S. cheaper than you can because we do so much volume. Why don't you let us just buy it from you in the source country? We'll import it, we'll pay the tariffs, and pass those savings on to customers. That makes a lot of sense previously, but now with tariffs in the mix, it gives Amazon a lot of exposure to tariffs, and that's why they've abruptly canceled a bunch of these types of orders.
All right, so Amazon cancels the order. Presumably the vendor's left with, in your story, 500,000 beach chairs. What does that vendor do?
You scramble. So a lot of this can basically just reset negotiations. I mean, first, let's say a lot of these purchase orders should be binding, but these folks don't want to get tied up in court with Amazon. So Amazon is kind of flexing its muscle a little bit here. And then, they can renegotiate with Amazon on different terms to still sell them through Amazon, but obviously share some of the pain of these tariffs. And then other options are going to other marketplaces. And this is an opportunity for folks like TikTok Shop, Walmart, Temu to stand out as alternatives. So they do have some options, but Amazon's still like the main show in town when it comes to U.S. online sales.
Was this move unusual or expected?
Very unusual and definitely unexpected. Most of these folks said they were, completely caught off guard by it. Like I said, the beach chair vendor has been selling for more than a decade on Amazon and actually had the stuff made. So it's not like they said, hey, this order way out, let's cancel that. This is stuff that he's already, had a factory make and is on the hook to pay for. So with no communication or real explanation. So this is definitely showing how these tariffs are basically disrupting a lot of relationships and forcing partners to negotiate with one another.
Have we heard anything from Walmart about kind of how they plan to navigate these tariffs?
I haven't spoken specifically to Walmart, but a lot of these companies are just in the same game. You figure Walmart has an advantage of selling predominantly grocery, and so if there is a pullback, people still need groceries, so they'll still do well there. But then, in terms of like these large diversified retailers like Amazon and Walmart, you're just likely to see a shift in the mix of products, like more consumables, more everyday needs that people need in their daily lives, and less of this kind of discretionary stuff like the beach chairs we mentioned or scooters or that kind of thing.
How many more levers like this can Amazon pull?
Amazon has many levers and knobs, but so do its partners, right? So this is kind of a gamble. So if Amazon's pulling back on its orders, then that the knock-on effect of that is some of these folks that sell on Amazon and rely on Amazon for sales might have to pull back on ad spend. So Amazon can turn one knob, but then someone else turns another. It's like popcorn popping in a kettle.
What if we heard, Spencer, from some of the Chinese players like Alibaba, like Temu? How are they planning on navigating the new environment?
I I haven't heard much from Alibaba, and then on Temu has basically been kind of anticipating a lot of this. A bigger issue for them was this de minimis loophole, and they've been kind of forward deploying more inventory into the U.S. So that was another thing, is folks just trying to get ahead of this and get inventory into the U.S. before these tariffs take effect. And then another option for folks like Temu or Amazon or any vendor selling anything is just looking for countries not affected by these tariffs. And so that this is making places like Canada, Australia, other markets much more desirable, especially if you've got to unload inventory and want to avoid these tariffs.
Does any of this yet, did you have a sense just in your reporting how demand is holding up at all? Like we talked a lot about the supplier side, et cetera, but are we seeing sort of stockpiling ahead of the tariffs in terms of consumer behavior?
That's the $1 million question right now, and there's definitely a lot of cross currents, and that's the fear, right? Is like you know, a lot of companies, analysts, everything, they can get real time data from sources that track like credit card transactions and stuff, and so that's a big concern right now. Is there like almost like a false flag that the consumer's safe, if in reality they are just like stockpiling on things, getting ahead of the tariffs, and then demand's going to drop off a cliff in several weeks. You know, so that's something that people are actively monitoring and scratching their heads about right now.
All right, Spencer, thank you so much. We appreciate that. Spencer Soper, Bloomberg News technology and e-commerce reporter. I think about what Spencer was saying. Walmart, Amazon, they'll probably be okay. But how about the toy store owner in my town? I don't think he has, you know, scale to necessarily negotiate with the Chinese or deal with the tariffs. I fear for those people and the economic impact on those. And they just got out of the pandemic, except some of they're still in recovery mode. And my thing is, don't they vote too?
Do we bring back some pandemic-related small business loan program to then help offset? Anyway, that wraps it up for me and Paul. Coming up, Balance of Power with Joe Matthew is up next.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. President Trump says on social media, be cool, as his sweeping tariffs take hold and China and the European Union respond with retaliatory tariffs. Treasury Secretary Scott Bessent suggested to the American Bankers Association that agreements can still be worked out.
At the end of the day, we can probably reach the ideal with our allies, with the other countries that have been long-term, they've been good military allies, and then we can approach China as a group.
And if other countries cut deals with China?
That would be cutting your own throat.
There may be a trade war with China, but Defense Secretary Hegseth, speaking in Panama, noted Beijing's increasing military might.
War with China is certainly not inevitable. We do not seek it in any form.
The American Civil Liberties Union in federal court today looking to try to stop the Trump administration from using an 18th century law to deport undocumented migrants. Legal analyst Jessica Levinson.
The government is going to argue that they do, in fact, have the power to use the Alien Enemies Act, and that act does not require the same amount of process as, for instance, the Immigration and Nationality Act.
The death toll has now risen to at least 124 in the roof collapse at a club in the Dominican Republic. CBS's Christian Benavides is in Santo Domingo.
I just spoke to the Minister of Health for the Dominican Republic. He told me that there's currently a list of about 80 people that are thought to be unaccounted for. That doesn't necessarily mean that they're buried under the rubble, but it does mean that they have family members out here actively looking for them.
New information about the man charged with trying to assassinate Donald Trump last September.
Ryan Routh allegedly tried to buy a rocket-propelled grenade or stinger from someone he believed to be a Ukrainian with access to military weapons. Prosecutors say Routh told the Ukrainian, "I need equipment so that Trump cannot get elected." Routh also allegedly tried to buy a .50 caliber rifle, a more powerful version than the one he had at the golf course, but his contact couldn't find him one. Michael Wallace, CBS News.
A Senate committee is considering billionaire spacewalker Jared Isaacman's nomination to head up NASA.
We will prioritize sending American astronauts to Mars,
And along the way, we will inevitably have the capabilities to return to the moon and determine the scientific, economic, and national security benefits for maintaining a presence on the lunar surface.
Wall Street, right now the Dow is down 153 points. The S&P is off 6, and the Nasdaq's trading higher. This is CBS News. Never mind tariffs and fears of an economic downturn, shoppers are expected to spend big on Easter.
A report from the National Retail Federation finds shoppers will shell out around $23.6 billion this year. That's $1 billion more than last Easter. Some of the extra money will go for decorating eggs. Prices have nearly doubled from 2024 after avian flu wiped out millions of hens. The cost of Walmart's yearly Easter promotional meal kit did go down this year, but it left out eggs. The top destination for holiday shoppers, once again poised to be discount stores. At the top of most lists, food, gifts, and candy. Deborah Rodriguez, CBS News.
In spite of tariffs, Walmart remains bullish on the months ahead. The giant retailer said today it's holding to its expectations of first quarter sales growth pegged at 3 to 4%. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wednesday edition, Washington caught in the spin cycle of tariffs and taxes. President Trump says be cool after China retaliates while Republicans in the House argue over reconciliation. That's where we start. We'll get the latest from Bloomberg Politics editor Laura Davison with insights today. From Naveen Garishnarv, the Center for Strategic and International Studies, as we gauge the impact of the tariffs and the retaliation from Beijing. Analysis from our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. Let's get to it right now with Charlie Pellet at World Headquarters in New York. Charlie, how do we describe this today?
One word, chaotic. Just like we've had for the previous 4 sessions. Right now we have got the Dow, S&P, they are both lower. NASDAQ is higher, but we have seen stocks fluctuating between gains and losses. Right now, the S&P lower, little changed, higher, actually just moving higher now by 1 point, swinging between gains and losses. Dow Industrial is down 39, a drop there of 0.1%. The S&P up 0.1%. NASDAQ holding on to gains up 108 right now, up by about 0.7%. Investors trying to price the impacts of President Trump's trade war with a slide in bonds, stoking fears that the U.S. risks losing its haven status. And of course, today's sale by the Treasury of 10-year notes will be closely watched. That is coming up at 1 o'clock Wall Street time. The 10-year right now, 4.44%, with the 2-year yielding 3.76%. Gold up $100 the ounce, now at $3,084, up 3.4%. West Texas Intermediate crude is down 3.7%, 57.36, and Brent, the global benchmark, 60.59, down 3.5%. Treasury Secretary Scott Bessent says he sees the U.S. reaching trade agreements with allies that would then lead to a collective approach to dealing with China's trade imbalances. He made the remark this morning at the American Bankers Association.
these Chinese exports that the U.S. tariff wall is going to keep out, that China, for all of you who can remember that Disney movie of the brooms carrying the buckets of water, that is the Chinese business model. It never stops. They just keep producing and producing and dumping, and it's going somewhere.
Bessent also warned the European Union not to pivot from the U.S. toward China. He said that would be cutting their own throat. Amazon shares unchanged right now. Amazon canceling orders for multiple products made in China and other Asian countries, that according to a document reviewed by Bloomberg and sources. So recapping, right now the S&P higher, little change. Key takeaway midday up now by 2 points. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Welcome to the Wednesday edition. Balance of Power here on Bloomberg Radio, on the satellite radio channel 121, and on YouTube, where we see you. Search Bloomberg Business News Live, and you'll see us too. This is a great time to buy, says the President of the United States. Truth Social. Based on what I just heard from Charlie Pellet, maybe not so much today. Then again, I'm still thinking about that buy rating that Howard Lutnick put on shares of Tesla that then fell below the level he said they would never fall back to again. Be cool, he added. His prediction that, quote, everything is going to work out well, unquote. You see the post if you're with us on YouTube. And it follows news from China hitting us back here, raising duties on U.S. goods to 84%. Remember yesterday, fight to the end? The spirit with which Donald Trump took the podium last evening. By the way, tuxedo-clad Donald Trump. A 90-minute ripper before the NRCC last night. Listen.
I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch. Legendary in a positive way, I have to say. We're making a fortune with tariffs. $2 billion a day. Do you believe it? They've ripped us off left and right. But now it's our turn to do the ripping. That's okay. We're going to make our country even stronger, stronger than it ever was.
It's our turn to do the ripping. Laura Davison is with us, Bloomberg Politics editor, who is charged with covering all of this from our bureau here in Washington. It's great to see you. You've been busy. You know what else he said last night? These countries are calling up, kissing my you-know-what, which makes me wonder if that's the whole point of this exercise.
Trump has made it clear that he wants to do what he's called these tailor-made, bespoke trade deals, nothing off the rack, much like his suits or his tuxedo.
Yeah.
But this is going to be complicated. I mean, like how he wanted to do this very complicated reciprocal tariff, we charge them what they charge. I think once they actually get into the weeds and realize, okay, to have 60 plus different negotiations going on at any given time, that's really going to stretch this administration so thin, particularly when it seems like the terms of where Trump wants to go with this are changing every day. He said last night, also at this dinner, he wants to put a really big tariff on pharmaceutical imports coming soon. This really signifies that, this is not the end of the tariffs. Trump has also mentioned lumber and semiconductors, whole range of other products. So there's a lot happening and quite rapidly, and that's why we're seeing markets totally all over the place.
Well, as usual, you point us to the real news here, and that is we're not done yet. And I'd love to know what you're hearing behind the scenes, what your team is hearing from a White House that walked us up to Liberation Day. Then we had reciprocal tariffs kick in. We saw the bite back from China. But the market is still waiting for clarity, and you're telling them they're not about to get it.
They are not. Skylar Woodhouse, one of our White House reporters, had an exclusive with Brooke Rollins, the Agriculture Secretary, earlier today. She had a couple interesting things to say. One is that they're looking at potentially doing some bailout for farmers. Many people remember Trump also did this during his first term when there was a much, much smaller trade war happening with China. But this is really sort of an implicit acknowledgement that farmers are likely going to be hurt in this really rapidly rising trade war. Second, she mentioned that she had said on Friday she's going to Vietnam. Today she said she would also be traveling to Japan and the UK within the next 6 weeks.
Okay.
So this does not suggest that there's going to be some rapid turnaround, that this is a much more protracted negotiation process.
And those are the easy ones, arguably, right?
Yes, these are the ones that are the first in line. For countries that haven't are at the bottom of the queue, they may be waiting quite some time.
So this is going to be like a new season of The Apprentice, right? You're going to have a different world leader walking down the driveway, Donald Trump shaking the hand, waving to the press corps at the sticks, bring him in the Oval, do the spray, let them beg. We'll see who wins this season of The Apprentice?
And that may not even work. Netanyahu was here earlier this week trying to make that case and walked away with nothing. Yeah. So this is going to be, a very high bar. Trump really seems to be, and even as you hear him speak, he says, this is legendary, but in a good way, seems to be torn on whether he wants to stick behind these principles or whether he wants to cut deals. And at a certain point, you can't have it both ways.
Cece asks a great question. Does it say something if you have to qualify whether it's legendary in a positive way? A lot of people think this could be legendary in a very negative way.
It's already, sort of a history-making level of tariffs, the market slide. Yeah. This has been, really a week of superlatives. And as we're seeing from companies, Walmart, Delta, Amazon are already coming out saying that they are changing their buying habits. They're they're pulling their guidance, that even if Trump were tomorrow pull off all of these tariffs, which again does not seem likely at all, but even if he were to make a quick reversal here, that the damage, at least in some level, is already done.
Wow. That's saying a lot, by the way. It's unquantifiable, right? The idea of scarring in the economy or in our relationships with our trade partners, it could take years for us to really get an understanding of that. The president said more as well at the NRCC last night with Congress in mind. Close your eyes and get there, he said. It's a phenomenal bill. Stop grandstanding. He was talking to Republicans who are on the fence here. Many, well, at least some still opposed. If you ask Chip Roy if he's going to vote for this thing. Is it even going to get out of the Rules Committee today? That's where we are right now. Get the rule passed so it goes to the floor. And then I'm going to ask you about this, how this actually intersects with tariffs today.
So House leadership indicates that they have the votes. Yesterday, Trump invited a handful of Republicans who were still holdouts to the White House. He did some arm twisting. He really needled them last night and then again this morning on Truth Social, saying it is imperative that we do this. And for markets and Trump and wanting to change the conversation, it is imperative for him that they get this tax cut at least advanced in the House today or this week. But Andy Ugles was saying that they have 30 holdouts left. The way that these things work is you have a bunch of people saying no or maybe or I don't know, and then at the end, they generally get it across the floor. If we see Johnson call a vote, it's very likely they have the votes. But if they don't, that is a big rebuke to the president.
If it gets out of rules, does it probably pass the floor? I mean, is that procedural vote an indication of what the full caucus will say?
That is very likely. And we may see some last-minute drama of, Johnson having to pull people back into the cloakroom and get Trump on the cell phone to call them. But, it looks like the momentum today is in the direction of passing this budget.
Well, enter Congressman Don Beyer, who's calling out Republican leadership here. This is fascinating if you haven't heard about this. It just happened as we were taking air. He writes, this is a Democrat, right? Northern Virginia. He's been on with us before. Every House Republican who votes for today's rule, this is what we're talking about with the rules vote today, is voting to preemptively surrender congressional authority and their own power to stop Donald Trump's tariffs from wrecking the economy. He retweeted something from Jake Sherman here at Punch Bowl that says House Republicans are using the rule for the budget resolution to turn off the privilege for any resolution dealing with the April 2nd trade emergency. This would make it impossible for anyone to file disapproval resolutions on tariffs. We saw the language here. Each day during the period from April 9 through September 30 shall not constitute a calendar day for purposes of Section 202 of the National Emergencies Act. So they're basically shutting down Democrats here when it comes to pushing back on tariffs. Does the minority have any recourse?
In the House, no. And as even just the wording of this ruling is a reminder of how wonky these legislative rules can get. They're saying a day doesn't count as a day.
So they're not real days?
They're not real days from now until the end of the fiscal year. But this preempts what I think some House Republicans are worried about in the Senate, that they could potentially reach that veto-proof threshold to say, hey, we need to take away the president's authority after 60 days. We want to roll back these tariffs. This essentially shuts that down. It also makes the vote a little bit trickier for some of these moderate Republicans, some of the folks who are worried about the trade war. We've seen that play out over the past couple days, that by voting for the budget, by voting for the rule, they are saying, okay, I am fine ceding any authority that Congress might have had on tariffs and just saying we're going to not touch that.
Unreal. Democrats were never going to vote for this anyway then, right? So the idea is to get all the Republicans on board and shut down the minority through the rest of the fiscal year.
That is the plan. And this really, it was always unlikely that Congress was really going to exert its authority and try to pull the president back. But this means that they could be in July realizing that they have a massive crisis on their hands, and their hands are totally tied.
Unbelievable. This is quite a moment here. They want to get this done before the recess. Could we see a floor vote next day or two?
Yeah, very likely. We see a vote either later tonight or early tomorrow morning. They're smelling jet fumes and they want to get out of town.
Amazing. Laura Davison does it for us every day here at Bloomberg in Washington. Our politics editor, the latest on both ends of Pennsylvania Avenue. We're going to have a lot more to talk about with regard to tariffs straight ahead. We may hear from the president as well a little bit later on today, and we'll have our signature panel with us a bit later on. Rick Davis and Jeannie Shanzano are along for the hour, so stay right here on the Wednesday edition of Balance of Power, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. President Trump says, be cool. It's a great time to buy. Another chaotic day on Wall Street. The Dow, the S&P, NASDAQ 100 index, they're all advancing right now, remaining in the red. Russell 2000 index of small cap shares down 0.8%, keeping it all in context. The S&P up 29 now, up by about 0.6%. The Dow up 163, up 0.4%. NASDAQ Composite Index up 1.4%. The 10-year 4.43%. We've got the 2-year yielding 3.76%. Of course, a closely watched auction coming up at just about 1 o'clock Wall Street time. Spot gold up 104 right now at 3,088. That is a gain of 3.5%. Crude continues its move to the downside. West Texas Intermediate crude down 3.5%, 57.47 a barrel. And Bitcoin right now up 0.8%, 77,654 on Bitcoin. Ford shares are trading lower today. We've got Ford, actually little change right now, up 0.1%. Bernstein has downgraded the carmaker to underperform from market perform, saying significant downside is not yet priced in by the market. Again, Ford, to be clear, up 0.1%. Among the other automakers, they're all higher. GM up by 0.1%. Stellantis, the parent of Jeep and Chrysler, up 1.9%. And Tesla rebounding by 4.9%. Recapping, stocks higher. S&P up 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet on the top end of the Amtrak corridor. Well, somewhere in the middle, I guess. We're here at the bottom end in Washington, D.C., and the bottom indeed is what we're looking for on Wall Street. The news coming out of Washington is driving the market for better or worse every day here, and so much of it has to do with tariffs. We will talk more about that vote expected in the House later on this evening, late afternoon, evening time. We hear that budget resolution that would then lead to the mighty reconciliation process we've talked so much about. Yeah, one big, beautiful bill. The question is, will Republicans, forget Democrats, they're not part of this process. Can Republicans agree on how to move forward here? With news on tariffs, this came initially from Punchbowl, since codified by Congressman Don Beyer and others on Capitol Hill talking about this. Republicans are using the rule for the budget resolution here to turn off privilege for any resolution dealing with the April 2nd trade emergency that the administration is using to justify these tariffs. That shuts down Democrats for the rest of the fiscal year till September 30. Interesting moment as we wait for a rules vote and a floor vote, with headlines on the terminal that you might not have envisioned even a couple of weeks ago. China raises tariffs on U.S. goods to 84%. Remembering we slapped 104% combined tariff on China. And as I keep the doom scroll going here, Amazon canceling some inventory orders from China after tariffs. So it's already having an impact here. This isn't 6 months down the road. It's right now, just like the market has been pricing. Our Treasury Secretary, Scott Bessent, in front of cameras every day lately, trying to field questions, trying to calm nerves. Not on cable news in this case. He actually showed up at a Bankers Association meeting. They were doing their annual Washington Summit. The American Bankers Association, hearing from Scott Bessent. Listen.
These Chinese exports that the U.S. tariff wall is going to keep out, that China, for all of you who can remember that Disney movie of the brooms carrying the buckets of water, that is a Chinese business model. It never stops. They just keep producing and producing and dumping, and it's going somewhere.
It was a cool movie. Naveen Garishankar does this for a living. He's the president of the Economic Security and Technology Department at CSIS, Center for Strategic and International Studies, former senior official at the Department of Commerce, and back with us right now on Balance of Power. We wanted to speak with an expert, and Naveen, we welcome you back. It's good to see you. Thank you so much for your time. Just broadly speaking here, 104% the U.S. slaps on China, the world's second largest economy. China bites back today, as we were just saying, with a much higher tariff of 84%. If these stay in place, what does it mean for the global economy?
Well, it's a disaster. Basically, if you look at the tariffs that were put in place on Liberation Day, we were already assessing a 1% hit to GDP, price rise of about 10%, and basically a fall in real wages. Now you add to that the 104% tariffs that President Trump announced and the 85% on China. We are in the midst of a unraveling trade war And remember, it's a multi-front trade war. It's not just the Chinese, although they've taken the headlines today. It's also our erstwhile allies like Canada, Mexico, and then the EU. And they've also announced or are undertaking countermeasures. We are in the middle of a multi-front trade war. Be not mistaken.
You specialize in tech. Everybody's looking at Apple right now, NVIDIA, Taiwan Semiconductor. They all have their own challenges here. If you remove the Chinese market, what does that mean for their business, for their shares? Has the selling been justified?
Yeah, I think it's going to be a hit to companies that sell in China, but I would add another piece to the trade agenda. All of the technology value chains that we're involved in, whether it's semiconductors, AI, chips, clean technologies, biotechnologies, these are all global in nature. And so when all of these tariffs are accounted for, they make it all the more difficult for U.S. companies that are competing in those technology value chains to compete effectively. It's an unraveling of those competitive advantages that are essential to our long-term economic security. And that's the message that I want to make sure that we don't miss here. You can't win the tech war if you're fighting a trade war.
I was looking at a note that you kicked out, writing the conduct of U.S. government policy itself is now the main source of risk to the U.S. economy and U.S. markets. Policy volatility seems to be the point. What is the point if the call's coming from inside the House?
Well, you know, the president and several of the cabinet secretaries have said, expect to experience short-term pain for long-term gain, but they have not told us what the game plan is. What's the desired end state? So is this going to be short-term pain for long-term pain, which is what people are worried about? And the volatility only adds to that. So there's the direct impact of the tariffs, and then there's the impact of volatility on markets, on investment, on the ability of businesses to plan forward. This is a unwinding that we have not seen before, and is very hard to predict where it's going to turn.
Do you believe Beijing when you hear fight to the end, or are they negotiating as well?
Well, it's hard to tell. And when you're in this back and forth of tit for tat tariffs and other trade measures, there's the risk of things spinning out of control. So you might have entered the negotiations or the trade war with the goal of negotiating, posturing. But if each side keeps ratcheting it up and it's flowing through to the real economy, then it might spin out of the control of any individual party. And that's the real challenge here.
If you fulfill the vision that some in the White House are trying to project here, namely Howard Lutnick, the Commerce Secretary, your former agency, we're going to have armies of Americans screwing in screws into iPhones, assembling products like that here in the United States. Not advanced manufacturing, quite the opposite in that case, the type of thing that is done in China and in other countries. Dan Ives suggests if that happens, an iPhone will cost you $3,000. Is that the type of vision that you share as well?
Certainly not. I think that there's a problem with trying to go backward to a world like the 1950s or 60s or even earlier, when you'd have manufacturing in the U.S., but it's not competitive and it's labor intensive. Can we compete? We can't even compete on that basis. I would subscribe to a vision where we think of the most advanced technologies and the full range of skills that are needed to compete on those technologies. Our best scientists, our best technicians, but also people who are building semiconductor fabs, people who are building the infrastructure that's needed to compete on that basis. That places a premium on American ingenuity and innovation. Screwing in screws in iPhones doesn't do that. And so I think we have to get clear on what is the desired end state. And is this a desired end state that most Americans would want?
Yeah. Well, are people right then to be crowding into Apple stores right now? Would it in fact mean a $3,000 iPhone? Would it put consumer electronics out of reach for some Americans?
Well, very likely many of the consumer goods that we have had access to at competitive prices are going to be priced out of most people's pocketbooks. I don't know what the exact numbers will be because we'll have to see how this plays out. But at a high level, that's what we're dealing with here. I think Secretary Bessent famously said a few weeks ago, the American dream was not about having cheap consumer goods. Well, part of the American dream is having access to competitive goods and services. That's part of the benefits of a local market economy. I think that what we do need to do is ensure that we can compete, and we can compete in a way that generates real wages and rising real wages. I don't think the vision of bringing back factories from China here to do labor-intensive activity or lower-skilled activity is the answer to that.
So if you were still a senior official at the Department of Commerce, how would you be counseling the secretary when it comes to managing our relationships? Some say that they will never be back to where they are now. And I know that you're dealing with a lot more than China here. You're looking at the world. Naveen, you're going to be dealing with Europe. You're going to be dealing with trade negotiations, apparently with several Asian nations imminently, maybe the UK as well. How do you preserve these relationships during a process like this?
You're absolutely right. The alliance shock is going to be added to the tariff shock and the volatility shock. The alliance shock is something that we have to pay close attention to because today Secretary Bessent said that, well, we could cut a deal with U.S. allies and then deal with China. Well, we've actually burnt those bridges. And I think we need to find an off-ramp, and very quickly. And we have to find ways in which we can give something for something. I think the assumption here has been that we have inordinate leverage and absolute leverage across all countries. This is not true. We need some of our allies on many aspects of our role in the world. And so we have to find an off-ramp, and we have to have a discussion about what is it they need versus what we need, pursuant to a long-term vision of the U.S. and their allies sustaining technology advantages that are essential for prosperity. We need them.
Naveen Garishankar, we wanted someone who was in the building, and that's why we really appreciate your time, Naveen. Don't be a stranger. CSIS, former Commerce Department, hours after reciprocal tariffs take effect, and China punches back with 84% tariffs. This is why you want to subscribe to the podcast. Hear our full conversation with Naveen, and we'll assemble our panel coming up next. Rick Davis and Jeannie Shanzano are on the way in, right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. There is growing discussion on Wall Street that the Fed may need to step in to stabilize the Treasury market if the route that briefly propelled long-term U.S. borrowing costs above 5% continues. We've got stocks trading higher right now with the Dow, the S&P, NASDAQ all in the green. S&P right now up 33. That is an advance of 0.7%. The Dow up 185, now up by about 0.5%. The NASDAQ is surging 227 points. The NASDAQ Composite Index now up by about 1.5%. The 10-year at 4.43%, the 2-year 3.78%. Bond yields rising as the 10-year auction looms at 1 o'clock Wall Street time. We've got gold, spot gold up 105 the ounce, surging 3.5%. The precious metal now at $3,088 the ounce. West Texas Intermediate crude is retreating by 3.7%, 57.36 a barrel. Brent, the global benchmark, at $60.60. Brent is down 3.5%. And Bitcoin right now rallying 1%. Bitcoin at 77,789. Mortgage rates dropped last week. With that story, here's Bloomberg's Vinny Del Giudice.
The rate on a 30-year mortgage fell to 6.61%, the lowest since October. Rates on 30-year jumbo and 15-year fixed mortgages also declined. That sparked a 35% increase in mortgage refinancing. New loans also rose. Mortgage rates tracked 10-year Treasury note yields. They fell below 4% last week after the White House announced stiff new tariffs. Vinny Del Giudice, Bloomberg Radio.
Many of the new home builders are trading lower today. This is the rest of the stock market advances. Toll Brothers down 0.5%. Pulte Home lower by 1.4%, and home builder Lennar is down 0.8%. Again, recapping, S&P up 33 right now, up 0.7%. The 10-year ahead of the auction, 4.43%. Balance of power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
Yeah, Charlie, thank you so much. Charlie Pellet in New York. The building's going to shake a little after 1 o'clock when that auction takes place. You'll, of course, be hearing about it right here on Bloomberg Radio. Ira Jersey will be joining us as we keep tabs on things. How about kickingthetires.net with the scoop at the White House today? You see what the president's doing. If you look at the guidance, the official guidance from the White House, the president participates in a photo opportunity, it says, with racing champions. So, well, who's that going to be? Apparently, Joey Logano, the NASCAR driver, is going to be with the president. He did this in the first term, right? They put the NASCAR right there on the driveway, and was up there with the wife. They put the helmet on a table there. President spoke for a while. That's going to be the job today. That starts a little over an hour from now. While on the other end of Pennsylvania Avenue, Republicans are knocking their heads together over what to do with the president's agenda that will lead to reconciliation. The budget resolution that we've talked a lot about, yeah, one big, beautiful bill. Well, it's got to get out of the Rules Committee before it gets to the floor, which is Speaker Mike Johnson's plan at the moment. Maybe it's a hope, maybe a dream, because they're running out of time here. He's got basically 48 hours to get everybody on board. They need pretty much the whole Republican conference to make this happen. No Democrats are going to be part of this because they've got to get this done before Easter. Everyone's going to be leaving for a couple of weeks. Next couple of days are going to be critical. Republicans like Chip Roy could make this very difficult for Mike Johnson to get done. As Donald Trump said last evening, speaking here in Washington, close your eyes and get there, he said. It's a phenomenal bill. Stop grandstanding. Speaking to members of his own party, presumably will be picking up the phone at some point if he needs to. And that's where we start with our political panel today. Rick Davis, partner at Stone Court Capital, our Republican strategist, alongside Jeannie Shanzano, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. You've seen a couple of these before, Rick. What's the Republican view here? Does everyone just have to get it out of their system right now, or does Mike Johnson actually have a revolt on his hands?
Yeah, it does seem a little edgier than the normal protests that occur whenever you're trying to position yourself as saying, hey, I opposed it before I voted for it, which is, a pretty interesting genuflection of politics reality. But in this case, I mean, Ralph Norman and Chip Roy, they both said, hey, we're going to vote for it to get out of that Rules Committee, but we're voting against it when it hits the floor. And we know that the chairman of the Freedom Caucus has said, I'm voting against it. In fact, even like bailed on a meeting with President Trump this last Tuesday, yesterday, saying there's nothing he's going to tell me that's going to change my mind. So, when they start invoking Trump like that, you got to start paying attention because at that stage, they're setting up a showdown, and it's probably not a showdown that if they cave to Trump, they're gonna look good to their voters. So I got a sense that this actually has more legs, this revolt, than previous Republican protestations in the House.
Well, geez, maybe we're not going to get a floor vote later. Jeannie, you can weigh in on that. But to Rick's point, we saw from Punch Bowl, Andy Harris, the only Republican in the Maryland delegation, is going to vote yes on the rule and no on the budget resolution. A la John Kerry, I voted for it before I voted against it. Do people buy this?
Yeah, that's a blast from the past, Joe Matthew. The reality is this is supposed to be the easy part, right? What is happening? And what is happening is that we are seeing, to Rick's point, Republicans, particularly in the Freedom Caucus, who are saying things like, this makes no sense what the Senate has done. They're looking at the deficit and they're saying this is an unserious plan, to use Andy Bigg's words. They're not even close to where we need to be. And not only that, but can we also mention that they are trying to tuck into this the fact that nobody can vote on a resolution regarding the trade emergency? So this is, the fact that Donald Trump chose not to wait until September for Liberation Day, but to go now, has put a whole bunch of other avenues here that Republicans then are going to be thinking about while they're trying to cast these very difficult votes. So, did he make a strategic mistake? We don't know yet. But imagine had he waited for Liberation Day, got this reconciliation bill done, and then done it, it might be an easier path. But now it is just fraught for these Republicans.
Well, Jeannie went there, Rick. This is something. House Republicans using a rule for the budget resolution to effectively turn off privilege for any resolution that deals with the trade emergency. And they put dates on this. It goes through September 30th. So Democrats, in the language of the bill here, shall not constitute a calendar day for purposes of Section 202 of the National Emergencies Act. So it's kind of like the days don't exist for Democrats for the rest of the fiscal year. Is this clever, par for the course, or an abuse of the system?
It's pretty close to an abuse. I mean, they have many times stopped the clock in the chamber to get a vote before midnight when a budget expires or government funding runs out. So holding the clock has been a standard in especially the House of Representatives. Only the Speaker of the House can actually stop time. Now they're going to actually redefine time, and that may be an ask too far. Members love their privilege. I mean, it's one of the things they feel, even though they tend to kowtow to leadership and do what they're told to do, they always have this idea that if I need to, I can always move a privileged resolution. That's part of my power. Why would I ever give that up? And in this case, leadership saying, well, we're going to take it away from you. You're not going to give it up. We're going to put it in the rule of a must-pass budget resolution that, we can't argue that we can get to Trump tax cuts without it. So it's pretty convoluted. I suspect that's going to cause a lot of anxiety amongst the more libertine members of the Republican caucus. And so I think it does, as Jeannie says, weight it down, as if this thing didn't have a hard enough time getting enough Republicans to support it. Now they're basically saying, and by the way, we're gonna take away your vote. So if Don Bacon, who has got a bill on trade, ever thought about voting for this measure, well, count him out.
Wow, this is something. It's going to be an interesting conversation with Congresswoman Lisa McClain in our second hour. We'll be talking with her an hour from right now, Republican from Michigan, more importantly, chair of the House Republican Conference. What did Democrats do here, Jeannie? Just yell from the rooftops, or is there some sort of silver lining in the opposing parties' perceived overreach?
Yeah, Joe, I love when you read these parts of these bills. So I want you to do that more, okay? That's beautiful reading of them too.
Thank you.
I think Democrats, there's not a lot they can do at this point. I mean, they are very much in the minority. They have to sit back and continue to speak out against what they see as the single dumbest act a president has ever taken in terms of declaring a global war of trade against every country, including our allies, under an emergency. That's really specious. And so they're going to continue to make that case. They are also going to push hard on, if Republicans can get this through, this, what was supposed to be the easy step of this resolution, what do they face next? Well, what they face next are the potential of cutting billions of dollars worth of Medicaid. And they're going to now be taking these votes at a time when the stock market has crashed in the way it has. People's 401ks have crashed. The price of everything at our stores is going up. This is going to be a very difficult vote. So, this is just the beginning. And I think it is just so fascinating to watch Mike Johnson spin the way he is, or weave, to use Donald Trump's words, and try to remove days from the calendar. We have really entered a new world here. It's feeling very 1984 George Orwellian here.
Shall not constitute a calendar day. I feel like if we just did that Monday through Friday and just lived our weekends, we'd have life pretty well figured out. Rick, based on what we've seen from this speaker, does he bring this bill to the floor without knowing if he has the votes?
We have seen him do that before, so we would have to assume that he'd do it again. It's not clear to us. Maybe he's got a commitment that these people will complain and bellyache and still vote for the resolution. Who knows? But this is not a risk-averse speaker. I mean, the whole reason he's speaker is because of chaos and tumult. And so why not manage a speaker in the same way? And so I don't think he probably knows today where his whip count is, where his leadership's commitments are as far as voting for this resolution. And yet my bet is he takes the vote and tells Trump he's got 15, 20 calls he's going to have to make, because that's how these things have gotten done. Trump has had to intercede and make people vote along partisan lines. And at some point, some of these guys may start saying no to the president, and then his implied authority, his ability to move things through the House upon his own will, is going to be checked. And that then creates all kinds of new chaos.
I don't know if you guys look at the Drudge Report anymore. I don't mean to get all 1990s on you. But apparently Speaker Johnson does, Jeannie. The reporter at Notice, Alex Rorty, just put up a picture on Twitter of Speaker Johnson pictured on his phone, and it's zoomed in. He's sitting at the table looking at the phone with front page of the Drudge Report on it. This was taken during Donald Trump's speech last night. So I dialed up the Drudge Report to make myself feel like an old man. There's a big picture of a roller coaster going straight down, Jeannie. The headlines are, stock roller coasters, bond route deepens, street rattled, sell everything American. Does that reflect our situation? And what do you think Mike Johnson is thinking when he looks at that?
Well, I'm thinking, why doesn't Mike Johnson have a privacy screen like the rest of us? So when we are at these events, we can look without being, spied on. But somebody needs to help him on that one. But absolutely, while Donald Trump was up there saying, if we don't get this done, it's because of the stupidity of these people. You have the Speaker of the House, his closest ally, watching this train wreck that is happening before them. And by the way, if Donald Trump tries to twist the arms of these folks, is he still going to have Elon Musk to call up and threaten to primary them because Elon Musk isn't happy about what's going on? So, this is where we find ourselves. And Joe, I do look at the Drudge Report too. So
really,
I don't
look at that. Wow.
I do. Truths. I try to look at it all, Joe.
Well, I know you're equal opportunity. I feel like I need my fedora back so we can do this right. Rick Davis and Jeannie Shanzano, our great panel, back in our second hour here with a lot more on what's happening today in Washington. We've got to cover both ends. This vote could be coming this afternoon in the House. And, of course, Donald Trump will be holding forth a little bit later on. He will be in front of reporters as China bites back with more retaliatory tariffs. Stay with us. We've got a lot more ahead here on the fastest show in politics. Hour 2 is on the way here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wednesday edition with a new test for the bond market just as reciprocal tariffs kick in and China hits back. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us here on the early edition of Balance of Power on Bloomberg TV and radio. Kaylee, China put 84% tariffs on U.S. goods here, and the disconnect that we've seen between the stock and bond markets continues to widen.
Yeah, of course, they're continually jolted by each and every bit of tariff news, as it's not clear whether or not the U.S. and China are even willing to get to the table to try to negotiate a deal, or if this is something that could actually cut off effectively the trading relationship between the two largest economies. And that is a lot for financial markets to contend with. We have flipped, I don't even know how many times, between positive and negative territory on the S&P 500 today. And in the bond market, you're seeing once again incredible upward pressure on yield. So selling in treasuries too, no longer it seems seen as a safe haven asset, as we're up another 17 basis points on the 10-year today.
Saw 4.5% earlier. Sell everything American seems to be the charge at the moment. And we're about to experience this treasury auction that could bring a lot more noise here. Just what we need is more paper.
Yeah, well, it's going to be a real read on demand for U.S. debt, that's for sure. And we're going to have a readout of that auction from Ira Jersey of Bloomberg Intelligence in just a moment. But we also have to consider the wider economic ramifications here. Bharat Ramamurthy, who used to work in the economics at the Biden White House, is going to join us as we have the administration, of course, contending that all of this is about short-term pain for long-term gain.
That's right.
Bringing back American manufacturing is what it's all about.
Be cool.
Be cool,
the words of President Trump
great time
today
to buy.
on Truth Social. A great time to buy. I guess there's a little bit of a bid, but it depends on what minute you're looking.
Yeah, we'll see how long it lasts because this buying of the dip hasn't seemed incredibly persistent in the last few days. Charlie Pellet has been tracking each and every move for us, and he, of course, is in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, a lot of people on Wall Street, everybody glued to their screens, awaiting fresh news on tariffs, and of course, the Treasury auction of 10-year securities, closely watched as a further test of sentiment. Our Ira Jersey is standing by. He will have the latest for you coming up in just a moment right here on Balance of Power. Right to the numbers, we got stocks pushing higher. We're close to session highs right now on the S&P. Has been a volatile day, though, with the S&P up 52 right now, 5,035, up by just about 1%. We've got NASDAQ up 300, higher now by 2%. The Dow up 305. That is a gain of 0.8%. 10-year right now, 4.43%. The 2-year, 3.78%. Gold up 108 the ounce, up 3.6%. And West Texas Intermediate crude down 3.6%, 57.50 for a barrel of WTI. JP Morgan Chase CEO Jamie Dimon says a recession is a likely outcome of the turmoil tied to President Trump's tariffs. He made the comment on Fox Business. Recapping, S&P up now by 1.7%. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We, of course, had our eye on this 10-year bond auction. The pre-sale, when issued, yield 4.46 roughly, and the actual auction drawing 4.435. So actually a bit more demand, it seems, coming through a lower yield. You're starting to see that ripple through the Treasury market. As I just mentioned seconds ago, the U.S. 10-year yield was up 17 basis points. We're now up by still a large amount, but less, 11 basis points, the 10-year yield right now at 4.41.
We seek insights from Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, and just the voice that we need right now. Ira, what's your reaction to this auction in the first moment of
the
trading?
market cheapened up enough that investors came in like bandits. In fact, this was 88% was taken by investors, and that's if that's not a record, it's very darn close to a record. I think that all the cheapening that occurred recently was in a way to make room for this auction. So you probably had dealers who were very long treasuries, got out of some of their treasuries, and at the same time, you had investors that said, "Hey, we could have bought 40 basis points ago, but look at 4.35%, 4.4%. This seems pretty good." So what we did, it stopped short 2.5 basis points, so lower than what the market was expecting right at 1 o'clock. And the auction internals were fantastic. So there was stronger demand than last month. There was very high demand from end users. And I'm not going to say that everything's great now, but this is definitely a positive sign, especially given yesterday's 3-year auction was so atrocious.
Well, so to that point, Ira, does this at least for now put a little bit of cold water on the treasuries are no longer seen as a safe haven asset thesis we've seen emerging in the last few days?
Yeah, I think it does a little bit. The issue is, I think a big part of this move is not necessarily fundamentally driven. I think some of it maybe started that way, but positioning was so one-sided where a lot of people were long The dealer community was full of treasuries. The foreign investors, they balked a little bit maybe at buying in the recent past. But we still see treasuries as a, quote unquote, safe haven asset. I think that the risk is that we could still see a lack of foreign demand because, do you want to be buying treasuries in a situation where, the administration is attempting to reduce the amount of dollars that we export to the rest of the world? So there could still be some volatility, and we still have to see who are the actual buyers. Unfortunately, we don't find out for another week and a half or so who the actual purchasers were, whether they were foreigners, domestic investment funds, banks, right? Those things we find out a little bit later. But on the surface of this, it seems like some people at least made room or liked the cheaper levels that they were able to buy these treasuries at.
Ira, what does the last week mean for Scott Bessent's drive, his obsession with 10-year yields, his drive to lower yields? He says, don't pay attention to the Fed. We're worried about the 10-year.
Well, so there's a couple of pieces there. So number one is the 10-year itself is going to be driven by the front-end rates, right? So the whole term structure of interest rates starts with the Fed funds rate and where the Fed sets policy. So you can't disentangle that from the 10-year. The other thing is that in order to really get the 10-year yield meaningfully lower without the Federal Reserve cutting interest rates, you do need to reduce the deficit, right? And that's one of the big things, and maybe what the administration's hoping will happen. How much will that be worth? It's hard to gauge exactly how much that meaningful deficit reduction would have, but it would be worth something, right? It would be 25 basis points, like some number. We can only guess at what that would be. But on the other side, I think the thing is you want to make sure that there's strong demand for treasuries, and by decreasing the level of the deficit and having the deficit at least lower than economic growth, so you get debt to GDP lower, that makes the U.S. debt seem more sustainable. That can drive people into the market, and people would be happier to own treasuries in that environment, I think, and that certainly is something that could marginally keep rates lower. But ultimately, 80-85% of where treasuries are going to be is going to be based on monetary policy and expectations for where the Fed's going to go.
Well, so with that in mind, Ira, less than an hour from now, we get the minutes of the March meeting. Obviously, backward looking, no one knew at that time exactly what the reciprocal tariff regime from President Trump was going to look like. And we've heard Fed speakers since talk about them being more severe than anticipated. So is there anything really the minutes can tell us that might provide additional direction to the Treasury market?
Well, I think it's going to be more interesting than it will be market moving. And so it's things like, what is the Fed's reaction function? How much do they care about the inflationary effects on tariffs versus the growth effects on tariffs? And I think that that's the push and pull that the Fed's going to have going forward. We're of the opinion that the Federal Reserve might be a little bit late to cut interest rates because they'll need to wait until they see meaningful shifts in the job market before they have a reason to lower interest rates. And at least so far, we haven't seen that. Now, if we get a 75,000 job print in for April, and then for the May print gets like 50,000, that would give the Federal Reserve, I think, enough ammunition to think, okay, maybe it's time to lower interest rates in June because the job market has been hampered, maybe in part by fear over the tariffs, but nonetheless, like our job is to make sure that we have full employment, and if the job market's falling out of bed, then it'll be hard to maintain full employment and by most measures. So then the Federal Reserve could actually cut rates, and but we have to wait for that data to see exactly what animal spirits are thinking, and given the recent market volatility, that's one thing. Yeah. What's going on in the real economy is another. So the other piece of Fed information to look at that they look at very closely is the beige book. So look out for the beige book in a week or so. That will be maybe the key to how the Fed's really going to be thinking about the May meeting.
All right, Ira, thank you so much. Ira Jersey of Bloomberg Intelligence helping us look ahead to those Fed minutes, but also run through the stronger than expected demand in that 10-year Treasury auction, which again has brought yields off the highs of the session. We're now up just 12 basis points on the 10-year to right around 441 as we consider a bond market that, of course, like the stock market, has been roiled by President Trump's tariff policies. The implementation as of 12:01 this morning of reciprocal tariffs on U.S. trading partners, that level 104% on Chinese imports. China, of course, slapping back with 84% levies of its own today. But President Trump, when speaking at an event for congressional Republicans last night, was standing by his case for tariffs.
I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch. Legendary in a positive way, I have to say. We're making a fortune with tariffs, $2 billion a day. Do you believe it? They've ripped us off left and right. But now it's our turn to do the ripping. That's okay. We're going to make our country even stronger, stronger than it ever was.
So we'll get an assessment on those theories now from Bharat Ramamurthy, who is joining us, senior advisor for economic strategy at the American Economic Liberties Project and deputy director of the National Economic Council during the Biden administration. Bharat, welcome back to Balance of Power. It's great to have you back here on Bloomberg TV and radio. I guess you could kind of take which element of the president's words we should focus on first, but this idea that the U.S. is going to make a lot of money off of this, given the levels of just our tariff on China and China's retaliatory tariff back at the U.S., there have been suggestions that that is effectively going to choke off all trade between the two largest economies. What would that actually mean for import volumes and any revenue that you could raise off of imports?
Yeah, that's exactly right. You know, we have this concept in tax policy where if you raise the tax rate so high, you actually generate less revenue because you have less income or whatever it is that you're taxing. And the same idea would apply here, where if you are raising these tariffs at such a high level, which you are seeing in the new rounds of escalation between the U.S. and China, that the total amount of imports actually drops to the point where even with the higher tariff, you're not generating as much income or as much revenue as you used to. But, you know, I think to the broader point in that clip that you just played from the president, he clearly thinks that if we have a trade deficit with some country, that that country is ripping us off. And I think that fundamental misunderstanding about how the global economy works is underlying this whole charade, this whole attempt by the president to rework the global trade system so that the United States has no bilateral trade deficit with any country in the world. And I think it's just simply unworkable. If you look at an example like Madagascar, we have a trade deficit with Madagascar because we import a lot of vanilla from there, and they're not particularly wealthy, so they don't buy a lot of U.S. exports. Is that Madagascar ripping us off? And does it make sense for us to put a massive tariff on vanilla from Madagascar to make it more expensive for Americans who want vanilla just to eliminate that trade deficit? It doesn't make sense to me.
So let's go further down that road, Bharat. The president said last night, as we just heard, now it's our turn to do the ripping. So what does that mean for vanilla?
Well, look, it says to me that we're not anywhere close to out of the woods yet. And people always ask me, what is going to pull us out of this? And my answer to them is, I don't know if there is any way out of this except going all the way through it. You have a president who is clearly doubling down on tariffs and increasing them in many cases and shows no interest or willingness to back off. You have Republicans in Congress fully backing the Trump agenda. Just today, there was reporting that House Republicans are putting something into a bill that would prevent anybody in Congress from taking away the tariff power from Trump, even if they wanted to. You know, there's been court challenges filed to challenge the ability of the Trump administration to impose these types of tariffs. We'll see how those go, but this is an area where the president does have quite a bit of flexibility, so it's not clear that the courts are going to be the savior here. And you had Jay Powell, the chair of the Fed, saying last week that the Fed isn't particularly interested in jumping into this environment. He's still concerned about keeping long-term inflation expectations anchored. So of all the actors in the system that could potentially stop this, it's not clear to me which one is going to be able to.
Well, and it, I guess, becomes a question of what else we are stopping. If it's just the policies themselves or the economic ramifications of said policies, Bharat, how quickly and easily could we stumble into a recession here?
I think you've already seen people raising their expectations for a recession this year. I think you're going to see it very soon. I mean, actually, if you look at the data from February and March in terms of consumer spending, retail spending, business investment, some of those qualitative factors that your previous guest talked about, with businesses saying that they were pulling back on plans for investment because they were unsure about how to navigate the tariff situation, all of that is going to be hitting the economy very, very soon. We haven't even started experiencing all of the price increases that we're going to get from these tariffs. and that's going to lead to a significant consumer impact. It's going to lead to more uncertainty among business community, and I would imagine that the odds of a recession as soon as the second half of this year, in my mind, are quite high.
We heard from Jamie Dimon a little earlier today, was on Fox Business, asked about the prospect of a recession. Barat, here's what he said.
Are you hearing that from CEOs as well in terms of business managers? Are they now going to start pulling it in and cutting back on various expenses?
I think you're going to see a little bit of that, yes. Yeah.
But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
Larry Fink earlier this week on Bloomberg, Barat said he thinks we may be in one already. Are we in a recession now?
Well, as I said, some of the data from January, February, and March, to my mind, was pretty concerning when you saw the pullback among both business investment and retail spending, very soft retail spending numbers for February, for example. I'm not sure if we're in a recession as we speak, but I think that adding all of this tariff impact on top of that pullback that we saw at the beginning of the year puts us on the trajectory for a recession in the second half of the year. And I think it would be one of the few recessions in American history, maybe the only one, that was completely the result of a single person's complete misunderstanding of how the economy works.
Well, he wants to reshape that economy, he argues, Barat, revive American manufacturing. In our final 90 seconds here, what would actually have to happen to the wage structure, cost of living considerations in the United States if we actually are to bring back workers, in the words of the Commerce Secretary Howard Lutnick, who are actually screwing the screws into iPhones, doing work that has been, up until this point, outsourced to other countries in recent decades?
And look, as you noted, I worked in the Biden administration. If you look at the data, it's very clear there was a surge in investment in American manufacturing in 2022, 2023, and 2024 under the Biden presidency. That was accomplished by doing targeted investments in American manufacturing through the Inflation Reduction Act, through the infrastructure bill, through the CHIPS Act, bringing all of that onshore, paired with some targeted tariffs on China and on steel and aluminum and some other specific sectors. Doing this across the board in the way that they have done completely undermines the ability for American manufacturing to recover. Remember, American manufacturers, in many cases, rely on some inputs that come from abroad. So by imposing tariffs across the board, what you are doing is driving up the costs for American manufacturing, which makes the value proposition for investing in American manufacturing worse than doing it in Southeast Asia or China or South America. So it's really, like I said, I don't want to overstate it, but it's really almost like an act of arson on the economy. And it's based on some theories about how the economy can and should work that really aren't grounded in fact.
Barat, good to see you. Barat Ramamurti, Senior Advisor for Economic Strategy at the American Economic Liberties Project, live with us here on Bloomberg TV and radio, the 10-year yielding 4.38%. We'll have much more with our panel coming up next. Rick and Jeannie on the way in here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we begin with a developing story. Federal agencies can fire thousands of probationary employees after an appeals court paused a lower court's order. Stocks are surging right now. Bonds recovering from session lows after that $39 billion sale of benchmark treasuries eased fears of financial turmoil. But right now, we have got stocks ripping higher with the S&P up 211, best level of the day. That is an advance right now of 4.2%. The Dow is surging 1,424, up by 3.8%. Dramatic turnaround from our last update. NASDAQ now higher by 751 points. We've got NASDAQ up by about 5%. The 10-year's yielding 4.37%. The 2-year at 3.81%. Gold up $107 the ounce to $3,090, up 3.6%. West Texas Intermediate crude giving up earlier losses. Right now, crude oil turning around. It is up by 0.3%, $59.65 a barrel. And Bitcoin up 3.8%, $79,908 on Bitcoin. So a dramatic turn in sentiment in the past few minutes. Again, recapping, S&P right now up by 221 points, up by 4.4%. Delta Airlines shares, they are surging 12.5%. Delta withdrawing its full-year financial guidance due to uncertainty surrounding global trade, a stark sign of the turmoil rippling across corporate America from President Trump's tariffs. Recapping, stocks are higher. S&P now at the best level of the day. Big turnaround for the U.S. equity market. S&P right now up by 5.1%. Lots going on in New York. Lots going on in Washington. Back we go to Balance of Power once again. Your hosts, Joe Matthew and Daily Live.
All right, Charlie Pellet, thank you so much running us through the market reaction, instant reaction to the post on True Social we just got from President Trump. It's kind of a first it's sour, then it's sweet scenario. I'm actually going to lead with the sweet part at the back end of this post, Joe, because that's what's driving markets. The president suggesting, based on the fact that more than 75 countries have called representatives of this administration to discuss and negotiate a solution to matters of trade, he says countries that have not retaliated in any way, shape, or form against the United States, he is authorizing a 90-day pause on the tariffs and a substantially lowered reciprocal tariff during this period, he says, of 10%, also effective immediately. After he led this post by saying effective immediately, he was raising the tariff on China, which has retaliated, to 125%, but clearly risk assets and others are seizing more on the 90-day pause for everyone else ex-China.
Guess he read Bill Ackman's tweet.
Yeah. This is exactly what he suggested.
Based on the lack of respect, kind of interesting. We've got a red headline now on the terminal. This is all happening before our eyes here on Balance of Power, which is something that we're getting used to these days. 90-day tariff pause on non-retaliating countries. Remembering Scott Bessent warned them not to retaliate, suggesting their behavior might be rewarded. And here we are today, just hours after retaliatory tariffs went into effect.
We're now up nearly 7 percentage points on the NASDAQ 100 as a result of this. Just goes to show you how eagerly markets were waiting for anything they perceive as positive news on tariffs.
True.
Clearly, this pause being read that way.
And answers the question that this market could, in fact, rally after being so technically broken. Clearly a market hungry for news. And our political panel is at the ready here. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. She is, of course, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, partner at Stone Court Capital. President Trump said, Jeannie, it's a good time to buy right now. Is he right?
Well, yeah, I think this is the first sign we've gotten in the last week that the president may be listening to the markets and that wiser and cooler heads may be prevailing over his decisions. And so I agree, the 90-day pause, very, very welcome news for everyone. But I do think this raises other questions. If this was all about negotiating, then is he still interested in reshoring? If this was about raising revenue, it can't be a negotiating tool. And so what this was all about, this uncertainty and all of this destruction, is a big looming question. And I think his supporters have the right to ask that, particularly those folks in the UAW who, against a lot of odds, have supported him throughout this, last week as he's raised these tariffs around the world and talked about reshoring and permanent tariffs and never giving up.
Well, certainly buyers are not giving up right now. They are having a grand old time, it seems. We are approaching an 8%, now crossed it, 8% gain on the day for the NASDAQ 100. That would be the biggest single-day price move going back to the depths of the COVID pandemic in March of 2020. The S&P 500 right now up 6.5%. Take a single stock like Apple, it's up the better part of 12 percentage points. NVIDIA around there as well. Nike, some of these countries we know were highly vulnerable in this tariff scenario are rallying in a big way. Nike is up the better part of 8% too. And Rick, all of this coming after just hours ago, the President Trump told the public it's a good time to buy. Did the president just decidedly make a choice to help out financial markets here?
It's hard to tell, I mean, obviously, the trade news is positive, but everybody's been watching all day for this Treasury benchmark sale, and $39 billion went on the market, and it was a very well-received auction. So it could be a combination of all these things. It could be any one of these things driving the outcome. What I find fascinating is the fact that Donald Trump's kind of predicting people, buying at the, dip and then actually making news within the trading day to affect that. I mean, we're in uncharted territory here when it comes to market manipulation. And I'm not suggesting there's anything of malfeasance involved in this, but you certainly have markets reacting both on the upside and on the downside of every word that is uttered out of Donald Trump's mouth, specifically to tariff policy. And this is big news to ratchet up your tariff war with the biggest trading partner and other largest economy in the world, China, and at the same time giving relief to those people who aren't arguing or aren't retaliating. And we don't have a list of who they are. We assume that it's within that core group of countries that he's already raised tariffs with, and will now delay their implementation, at least on the reciprocal side, for the next 90 days. But to think that this is going to add any stability to the markets, I would be shocked and surprised.
It's pretty wild here. The S&P 500 now up 7.3%. The NASDAQ is up by almost 9%, Jeannie. Tesla, by the way, rising 11%. It's back above $247 here in heavy volume, remembering that Howard Lutnick suggested that people buy the shares. He said a lot more than that, actually, at the time. This is when the stock was at about $235. He said to Fox, $235.86. Buy the stock. It'll never be this cheap again. Donald Trump, this is a great time to buy. Rick Davis just said it out loud. Did Democrats start accusing this White House or calling for investigations into market manipulation?
Oh, I think they absolutely are going to do that. I think that we will be hearing about that. The reality is that we have a president who has just, with the sort of stroke of a pen, but it's not even that. It is just going on Truth Social, can move this much of the market. And you bet that Democrats are going to be wanting to ask questions. The problem is investigation is hard in Congress when you are in the minority. So that'll be trouble for them. But I do think that the president is hearing from these folks who have been hurt badly. And, you've mentioned Elon Musk. You've mentioned a few of these people. Bill Ackman, Dave Portnoy is a big voice, and he has been saying he would consider even voting Democratic if this continued. Ken Langone. So a lot of people very close to Donald Trump who've lost a lot of money. So I think we are certainly going to hear Democrats call for investigations.
All right, Jeannie Shanzano and Rick Davis, our political panel, Bloomberg Politics contributors, the both of them. Thank you so much for being with us as we contend with this breaking news from President Trump. Yes, maybe bad news for China as that tariff is immediately going up to 125%, according to the president. But for those who have chosen not to retaliate against the U.S. measures, a 90-day pause will also be immediately implemented, and it has had an immediate impact on financial markets off of the dramatic highs of the session. But we are still talking about some very big moves here, Joe. 7.5% rally on the NASDAQ 100, more than 6% on the S&P, and some of the individual movers incredibly remarkable as well. Apple up double digits, NVIDIA the same.
Remarkable strength in this rally here, and this is only a couple of minutes old. You wonder, how much longer we can keep this kind of momentum in a market that has been so badly beaten down. Remarkable in real time as we watch this unfold right now live on Bloomberg.
And our colleague Scarlett Vu is watching it unfold with the rest of us as she prepares to get us counted down to the closing bell later. It's a very different story, Scarlett, than what we were dealing with just a few minutes ago.
Yeah, we were wondering whether the stock market was going to extend its declines, and it looked like we were bouncing around all morning. But this was kind of the signal that everyone was waiting for. They were waiting for President Trump to back off of his tariffs. He did that for the countries that are negotiating, and this is something that the administration has been very forthright on. Positing all the different countries that have been coming up and making phone calls and trying to reach out to speak with the administration about some kind of negotiations, even though it's not clear what exactly would move the Trump administration to remove or mitigate some of those tariffs. What's notable here is President Trump's comments about, encouraging people to buy the stock market. I wonder to what extent he's trying to call the market bottom in the similar way that President Obama did back in March of 2009. Obama spoke on March 3rd, and just over a week later, the market hit its low point, and from that point on, moved higher.
We're talking about a social media post here, Scarlett. We don't have an actual piece of paper from the White House. We don't even know exactly what countries qualify as non-retaliatory.
Yeah, good point.
We do have to acknowledge the fluidity here in this market and the stakes after such severe losses. Why should investors have confidence in anything to do with tariffs right now?
I don't know that it's confidence to do with tariffs, but for now, this is a bit of relief. This is a respite from the constant selling and the bad news. On Wall Street, the projections that the U.S. economy would tip into recession have been steadily growing. A lot of people, including Larry Fink of BlackRock, were saying that many company executives were telling him that the economy was already in recession. So it kind of became this default scenario that we were in recession, and it would be only a matter of time before the data backed that up. So this is a break in that bad news story. So far this week, we've seen the bad news really turn to the bond market. Last week was all about the stock market kind of in collapse mode, and it's been a lot more fluid, volatile this week, but the bond market has really taken it on the chin this week, and there's a lot of question marks over whether this is fundamentally driven or technically driven.
I just want to point out for those who have been following the commentary of Bill Ackman in regard to tariffs, who, as Joe reminded us just moments ago, did push for the 90-day pause to begin with, which is what Donald Trump seems to have decided here. He posts simple message on X now, just thank you. Nothing else. So I guess he likes what he's seeing here, just as risk asset investors do. But Scarlett, it's remarkable that we get this news today after we already have learned today about instances of multiple companies making decisions or having to issue guidance that is unclear or pull that guidance because of these tariffs. Delta, of course, not willing to stand by a forecast. We had Bloomberg reporting of Amazon actually pulling orders of inventories on goods coming from China. Already, this is affecting corporate behavior, even if the president has now decided that there will be a pause, at least in some instances.
Yeah, absolutely. And it's difficult for any company to go out there and say very much about how they anticipate the year to shape up when they don't know what's going to happen. At the end of the day, nobody knows anything. And to give firm numbers is just inviting scrutiny and inviting people to knock your stock down when it won't come to fruition. And I think that's pretty much the case. We were speaking with a pharmaceutical analyst who was talking about how this promise by President Trump to impose tariffs on the pharmaceutical industry is, of course, meant to encourage these companies to move their manufacturing back to the U.S. But because their supply chain is so complex and it would take years for them to do so, they're not ready to commit to anything else. They already have a lot of their manufacturing, their high-value manufacturing in the United States, but they are able to bring in a lot of their products from overseas, into their warehouses and work off of their inventory. They probably have a 2-year waiting period where they don't need to do anything and can see how this all shakes out.
Bloomberg's Scarlett Fu in the throes of the rally. Right now, the S&P 500 up 390 points, almost 8%. Kaylee, the NASDAQ is up by more than 9%. A powerful move here. 1,455-point rally as the Commerce Secretary takes to Twitter. Scott Bessent and I, he writes, retweeting or showing a screen grab of President Trump's post on Truth Social. Sat with the president, he says, while he wrote one of the most extraordinary truth posts of his presidency. The world is ready to work with President Trump to fix global trade, he says, and China has chosen the opposite direction.
Yeah,
Interesting moment here for this administration.
It certainly is, and quite a split screen between what we're seeing the markets reacting to and the reception, at least the majority of countries subject to reciprocal tariffs seem to be now getting from the administration, which is a pause, versus the escalation of what is a trade war with the second largest economy in the world, as the president promises to raise immediately the tariff on Chinese goods to 125% after China slapped an 84% retaliatory tariff on the U.S. Many economists say that effectively is going to mean decoupling of this, and yet the market is seemingly looking through that right now. But when you consider the number of consumer goods that come from China, where like 80% of the share of imports on things like PC monitors, for example, comes from China, that's not easily replaced necessarily, but maybe the good news on what we get from other countries is enough to carry risk appetite through for now.
Interesting to see tech taking off like this, because the prospect of a $3,000 iPhone might not do a lot for Apple shares. But as the rally moves here, we want to go directly to the White House. The press secretary and Treasury secretary just walked into the briefing room. This is live now. Caroline Levitt alongside Scott Bessent on Bloomberg.
Speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The secretary here has been a huge part of the president's trade team, of course, and will continue to lead these negotiations moving forward, to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they are in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Ed, go ahead. Secretary, thank you for doing this. Let me ask you three quick things, if I could, just for the sake of clarity, because the markets are open and they're wondering. First of all, Mexico and China, are they part of this 10% universal?
Well, China, no, China.
Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors, and what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
So as you see it now, this trade war is China versus the rest of the world?
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
And if I could just, excuse me, Raquel, if I could just add to what the secretary said. Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing here. You tried to say that the rest of the world would be moved closer to China, when in fact we've seen the opposite effect. The entire world is calling the United States of America, not China, because they need our markets, they need our consumers, and they need this president in the Oval Office to talk to them. And that's exactly why more than 75 countries have called, because the United States of America is the best place in the world to do business. And as the president has shown great courage, as the secretary has said, in choosing to retaliate against China even higher. Elena, go ahead.
Hi, thank you, Treasury Secretary Bessent. Can you explain more of the decision-making on what feels like a reversal here? I mean, just these went into effect less than 15 hours ago, these tariffs. Why the pause now? What led to that?
No, again, President Trump created maximum negotiating leverage for himself, and which tariffs went into effect 15 hours ago. The ones that we have lowered went into effect a week ago. They were announced a week ago, and we've just been overwhelmed by the response from mostly our allies who want to come and negotiate in good faith. So we are expecting them to come with their best deal. As I said a week ago today, don't retaliate, hold your ground, let's see what happens. And China, they kept escalating, and now they have 125% tariffs that will be effective immediately.
Mr. Secretary,
Go ahead.
Mr. Secretary, thanks so much for doing this. The 90-day pause on the reciprocal tariffs, is that because of the whiplash that we've been seeing across the financial markets? How much was, what we saw in the stock markets, a part of this decision?
No, it's because because of the large number of inbounds, we've had more than 75 countries contact us, and I imagine after today there will be more. So it is just a processing problem. Each one of these solutions is going to be bespoke. It is going to take some time, and President Trump wants to be personally involved. So that's why we're getting the 90-day pause.
Mr. Secretary, clarification. Mr. Secretary, there was a tweet that you and Secretary Lutnick were in the Oval Office with the president talking about this. Can you talk about what that conversation was like and what you guys said to one another that led to this decision?
Look, it's all the president's decision, and the president had a level in mind to raise the China tariffs, and then he had the essentially the 3-month pause in mind, and we were discussing the exact wording. Sorry? Of course.
It's the president's decision.
It's the president's decision. It was the president's decision to wait until today. And again, as I've said in the past, no one creates leverage for himself like President Trump.
Mr. Secretary. Shelby, go ahead.
Mr. Secretary, what does the president want to see by this, I think it's July 9th deadline to keep things paused? Is it just trade barriers coming down, or is it more than that?
These are trade negotiations, but if countries want to come and offer other things, I talked about yesterday that we are thinking about a big LNG project in Alaska that South Korea, Japan, Taiwan are interested in financing and taking a substantial portion of the offtake. But again, in essence, that is trade because it will decrease the trade deficit that we have with those countries. So everything's on the table.
Raquel, go ahead.
A clarification on the pause. What happened to those countries who just had 10% baseline tariffs, like Brazil and others? Are they still going to have this 90-day pause? Because you were saying that there will be a tariff of 10% for others. So what happened to those who just had a 10%?
Yeah, that's going to remain.
And do you call this an embargo to China?
Pardon?
You call this an embargo to China, a trade embargo?
I'm not sure what you mean by the word embargo.
125% tariffs, like on those, and then impose 84%. Isn't this an embargo?
Well, it's not. It's China's decision that we have the deficit with them. They sell us almost 5 times what we sell them. So again, I think it's an own goal by China.
Mr. Secretary Meredith.
Mr. Secretary, with this, does this signal that you're confident that you're going to be able to strike a satisfactory deal with all these 75 nations that approach you?
It signals that President Trump cares about trade and that we want to negotiate in good faith. And as I said, each one of these is going to be a separate, bespoke negotiation. So we are confident that having seen the other side of where this could go, and it was like I said last week, the market didn't understand. Those were maximum levels. The countries can think about those levels as they come to us to bring down their tariffs, their non-tariff trade barriers. We're going to discuss currency manipulation, subsidy of labor, and industry.
Secretary, as far as you, will the pause also apply to the sectoral tariffs that the president has announced, pharma, lumber, anything else?
No, it's on the reciprocal.
So those will still be coming here soon, right? Mr.
Correct.
Secretary, as far as the negotiations with those 75
Andrea, go ahead.
Mr. Secretary, so I want to ask you about what you're doing here. So the market is reacting crazily, right?
I haven't seen it.
Do you think that this move is going to sort of change and calm down the market reaction?
What?
Do you think the markets have tanked, right? You know, there's been a lot of volatility in the market, not just in terms of stock markets, but also in terms of bonds. So will this move, in your mind, do you anticipate that this is going to calm the markets down?
Well, I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10% temporary floor. And I think the market, my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
But Mr. Secretary, why do people
Maggie,
go ahead.
Mr. Secretary, why do people assume this is the last word? The president began this morning saying, be cool. 5 hours later, he announces a new policy. Why will investors in the market assume that this is it?
Because, again, as I said, we've given 90 days, and the only certainty we can provide is that the U.S. is going to negotiate in good faith, and we assume that our allies will too. And in terms of certainty, we will see what China does, but what I'm certain of is that what China is doing will affect their economy much more than it will ours, because they have an export-driven, flood the world with cheap export models, and the rest of the world now understands, because when we put up our tariff wall, those exports were already flowing to the rest of the G7 and to the global south.
And you think
Mr. Secretary,
how much of this
decision was driven by the bond market cratering overnight? What is happening with bonds? Is China selling their bonds?
I have nothing that says that, and we actually had quite a good 10-year auction today, and all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along, and that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors, and we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well.
What's your message to the American?
Politico article
Mr.
saying
Secretary,
that the countries weren't
these
getting calls back.
negotiations with these 75 countries, how long will that take? Will it be a matter of weeks? Will it be a matter of months? Do you expect financial markets to be stable during that time period?
Well, we've started with a 90-day pause, and we will see if more countries turn up, what will happen. But we have a meeting with Vietnam today, and we have one of the largest trade deficits with them, so I'm hoping it will move in a good direction. I was at the Japanese ambassador's house last night for the Cherry Blossom Festival, which was quite festive, and he and I had a good chat. They are going to send a deal team over. So we'll see. These are complicated negotiations. These are imbalances that have taken decades to create. But I think, having seen the maximum level that Donald Trump is willing to go to, President Trump has created this negotiating leverage.
Excuse me, everybody. Excuse me. The secretary is obviously a very busy man. As he has said, he's had more than 75 countries that the trade team has to respond to. I'd just like to end with this. For decades, Republicans and Democrats have said that these unfair trade practices are ripping off the American people, are ripping off our country, but nobody has ever done anything to address it. We finally have a president here at the White House who is playing the long game, who is doing what is right for the American worker and our industries here at home, and he has put together a fantastic team in Secretary Bessent, Secretary Lustnick, the entire trade team who will be focusing on negotiating these good deals to put the American workers first, and we're going to get to work to do that. Thank you.
What about the EU? What about the EU? They retaliated this morning. Why aren't they being
Live from the White House, the press secretary and the Treasury secretary in the driveway outside the West Wing, sparring with reporters there, answering questions after Donald Trump made clear that the 90-day review period would begin for countries not retaliating to reciprocal tariffs placed by the United States. In fact, took effect at 12:01 a.m. There's a big exception here, and that's China, now facing a 125% tariff. Markets taking off on news of this review. Scott Bessent just now saying we have a 10% temporary floor, and something we've heard him say before, Kaylee, the initial Trump tariffs are the maximum level. The idea would be engage with this White House. We start to pull them back. Interesting to hear him suggest the president goaded China into this position.
Suggesting this was his strategy all along. And interesting to hear as well, the press secretary telling the media assembled to speak with these two that they misunderstood or were missing Trump's art of the deal, despite characterizations initially of these tariffs being non-negotiable and not a negotiating tactic. Maybe it all was for the deal at the end of the day.
You wonder if Peter Navarro read that book, because he's been projecting $6 trillion in revenue over the next decade from these tariffs that are, in some cases, maybe never going to take effect.
Well, certainly the market is hoping maybe that that's the case. At the very least, they're satisfied. Investors seem to be with this 90-day pause. Again, the NASDAQ 100 nearly 9% higher on the day. It's a 7% gain as we speak for the S&P 500. And it's on that note we turn to our colleague Joe Weisenthal, who, of course, is the host of the Odd Lots podcast. Joe, is this just proof that investors were waiting with bated breath for the opportunity to buy the dip?
I mean, what I'll say is I think it's evidence that it's a huge relief that there's at least some impulse to take an off-ramp here. And last night when we saw Treasury yields blowing out, when we saw the 10-year hit 4.5%, these are dynamics that happen when there is like extreme stress, illiquidity, run dynamics happening in financial markets. That can't persist very long. When you see moves like what we saw last night, I know the Secretary Bessent there said this was not a response to what we were seeing in market volatility, that it was all, art of the deal, et cetera. Nonetheless, clearly the markets were under extreme distress. And I'll just say a couple other things. The market is, I'm looking at NASDAQ 100 futures. They're still down 5.5%. The China tariffs are still huge. That's going to be, a huge effect on lots of American companies. There's the 10% sort of floor tariffs. Those are still in place. So, look, I think it's a big relief that obviously some of this has been delayed, but I think there's still quite a bit to work through here at a very minimum before there's some sort of like true all clear. Every major index is still like deeply in the red on the year. S&P is down 9.6% on the year.
Yeah, wow. Joe, it's great to have you with us here as this evolves before our eyes. One of the reporters in the driveway asked a really important question of the Treasury Secretary. Why should investors have confidence that this isn't going to change again in the next 12 hours? These just took effect at 12:01 a.m. Speak to the psychology at this moment on Wall Street.
I mean, I think there's two things. It's like, one is like, yes, we've now seen that these headlines can change all the time. I guess like it seems plausible that, okay, for the next 90 days, you get some sort of respite on the non-China companies. But I think even outside of stock market, you have to think about actual business investing, hiring, et cetera. And we've seen the business side sentiment surveys absolutely horrendous. We haven't gotten a lot of hard data that really speaks to what was happening economically in the middle of March. Earlier in the week, we heard Larry Fink. He said every CEO that he talks to thinks the recession has already begun. Jamie Dimon talking about recession being the base case. So even with the 90-day pause in the non-China countries, it's worthwhile to think about like what the last several days have done for the business community in terms of saying like, wait, you don't know the rules. Now we don't know what the rules are going to be for like 3 months probably. And so we continue to have this environment where if nothing else, the trading relationship is highly uncertain, which at least in the short term is not conducive to investment. But they would probably argue, it's short-term pain for long-term gain.
Well, it's incredible that these headlines hit in the 1 o'clock hour ahead of the Fed minutes, which are due to come out just a few minutes from now, Joe. I guess whatever news we might have seen in them probably overshadowed by these developments. Keeping in mind it's backward-looking minutes, and they didn't know what the tariff levels were going to be in the first place, let alone that they would be pulled back. But it speaks to the kind of uncertainty we keep hearing Chairman Powell talk about as to why the Fed isn't enticed to move in any direction because so much is so unclear.
There's so much that's so unclear. Short-term market-based inflation measures going up, long-term ones going down. So much uncertainty, soft data going down, hard data still going up. And the other thing is, speaking of uncertainty, look, we all heard the White House's presentation there about the art of the deal, and China has now been goaded to being revealed as the bad actor, etc. And okay, that's that's a fine story. However, last week at the Rose Garden, those reciprocal tariffs were very specifically presented in such a manner that every country that runs a bilateral trade surplus with us, which is almost every country, was per se engaged in bad acting. That that's the whole premise of reciprocity. And so, it's clearly not presented that China was anything particularly special last week. The story has evolved. The story has evolved, whether it's negotiations versus non-negotiations, et cetera. So, again, I'm not surprised that there is this sort of massive sigh of relief. We actually knew that there would be a massive sigh of relief on Monday when we got the fake headline about a 90-day pause. So we knew the market was looking for something like this. But I think there's still a lot of question marks about the sort of what any negotiations would look like and what kind of economic degradation we see in the meantime.
I'd love to hear the Trump interview on Odd Lots, I have to say. We've only got a minute left, and we want to clear out in time for Fed Minutes, Joe. But we heard the president said last night, this is a great time to buy. Said that this morning, in fact. Everything is going to work out well. Is there a world in which you're allowing him to eventually be correct?
Yeah, of course. No, I hope so. There's a few things. It's like, one is obviously you hope to have like a prosperous global economy, which would be fantastic. Even prior to the Trump administration, there's been a lot of anxiety about the nature of both the U.S. and really everyone's reliance on China for domestic manufactured goods. Obviously, the Biden administration tried to effect change on that respect, at least with respect to sort of like cutting edge tech, like semiconductors, et cetera. There is a lot that could be better about the world. Again, when you look at how much the markets sell off, that's really indicative of like investors are much more pessimistic than they were about the state of the world than they were at the beginning of the year. But look, like I said, I understand, and I think it makes total sense why there's this massive sigh of relief happening in markets right now.
Yeah. What a great chance to spend some time with Joe Weisenthal. Next Odd Lots ought to be a riot. It's great to see you,
Thank you.
At World Headquarters in New York. Kaylee, imagine what has taken place since we took air at 1 p.m. This has been a remarkable period of time.
Well, and a remarkable rally we're seeing in the markets right now, up nearly 10 percentage points on the NASDAQ 100. That index heading for its best day since March of 2020, a nearly 8% gain on the S&P. They're going to have more coverage of this on Bloomberg Business Week as we await the Fed minutes just moments from now as well. Carol and Tim will take it over from New York.
All right, guys, thank you so much. Of course, Joe and Kaylee there. And folks, yes, we are taking over here on Bloomberg Business Week. Carol Massar along with Tim Stanovic. And here we've got, a rally. We've got stocks surging the most since 2020. Tim, safe to say that we are living in, I feel like, a week of superlatives.
Yeah, the S&P 500 up 7.6% right now. The NASDAQ composite up by 9.5%. The Dow Jones Industrial Average higher by 6.5%. We did hear earlier from Treasury Secretary Scott Bessent, who describes that initial Trump tariffs as maximum level. He, though, denied the bond market was impacted by a tariff change.
I got to say, it was just about, 30 minutes ago that kind of the game changed, certainly on Wall Street, as the president announcing a 90-day tariff pause on non-retaliating countries. Right now, though, our focus goes to the latest Fed minutes, and we do have them crossing, so that means off to Mike McKee at the Federal Reserve. Mike.
Well, facing an economy that was slowing but still growing with sticky inflation and a relatively solid labor market, it's no surprise that Fed officials spent most of their March 19th meeting discussing tariffs. Stagflation was on their mind with, quote, almost all participants viewing risks to inflation as tilted to the upside and risks to employment tilted to the downside. Several noted the planned tariff increases were larger than their business contacts had anticipated, and some companies were already reporting tariff-related price increases. Contacts also indicated a willingness to pass those price increases along to consumers. A couple of the participants noted it could be difficult to determine whether inflation was caused by persistent price rises or by tariffs. The labor market remained strong through the middle of March, but federal government layoffs had begun to affect employment at contractors, universities, hospitals, and other organizations. Many participants noted that business survey respondents to them reported pausing hiring because of elevated policy uncertainty. Everything considered, participants felt the net effect of government policies on the economic outlook was high, making it appropriate to take a cautious approach. And given the current state of policy and stance of policy, the Fed was well positioned, they said, to wait for more clarity on the outlook. Though some observed they might face difficult trade-offs if inflation proved to be more persistent, while the outlook for growth and employment weakened. On the balance sheet, although Fed Governor Christopher Waller was the only one to vote against a slowing of the balance sheet runoff, the minute shows several participants said they did not see a compelling case for a slowdown. There's no indication whether the participants felt that this would be a permanent move or a temporary move. Guys?
All right. On a normal, ordinary Fed Minutes day, Mike, we would have some more for you, but we got to get back to the markets because we are seeing certainly a rally underway. Of course, our Mike McKee there at the Federal Reserve in Washington. Just a reminder, folks, we've got up a gain of about 395 points on the S&P 500, a gain of about 8%. We've got the NASDAQ 100 up almost 10%, up about 9.7%. 1,665 points to the upside. We've seen that momentum in the equity trade build even after those Fed minutes. So let's get to it with Gina Martin Adams.
Gina Martin Adams is from Bloomberg Intelligence. She's chief equity strategist. She's here in our Bloomberg Business Week studio. Gina, the NASDAQ 100, in fact, did soar more than 10% at one point. Its biggest gain since October 2008. This is like a generational move on a daily basis for equity markets. How are you watching a move such as this based on the president's 90-day reprieve?
How much do you want to just go home?
Yes, please.
You're stuck with us.
October 2008 was obviously a very, very difficult time in the equity markets. You don't see these kind of moves unless the equity market is extremely, extremely nervous. And upside and downside moves to this extent are bad news. And I think if you think about it, October 2008 was followed by devastating declines in the equity market into March 2009.
Right, that was the low, March 2009.
Yeah, we didn't hit our lows till 2009. Unfortunately, the reality of today is just more volatility, more volatility. I don't know when this slows down. This maybe removes the Armageddon scenario. It does not remove the recession scenario that stocks still have to contend with. And that's troubling because we don't know where we're going to go for the next 90 days. The first pause of 30 days was hard enough for the economy and the equity market. A 90-day pause, I know that we're supposed to trust that this is going to turn out better, but businesses have to make decisions in the short term, and their hands are tied for making decisions, and that means a slowdown in activity. Consumer behavior had already started to shift in anticipation of these tariffs. So that it just infuses more uncertainty into the equity market, unfortunately. Maybe removes the maximum downside risk, but does not altogether remove downside risk, which is a bit troubling.
You know, I got to say, I thought about that even just personally. I was like, whoo, yay, right? Mark it up. And then I thought, yeah, but let's see what tomorrow brings. You know, we had a CEO on who plays in the auto parts world, and he said this environment reminds him of the great financial crisis, the COVID shutdown, and a union walkout, like among the auto sector.
Yes, Swami Konagiri of Magna.
Of Magna. And so all of that together, that's what he said this environment reminded him of. I mean, that's pretty heavy.
Yeah, it's very, very tough because decision-making in an environment where the headlines drive, what it could be the economic outcomes is very, very hard, especially when the headlines change on a day-to-day basis. How do you plan for the long-term future? I think companies would be right to plan for the worst and hope for the best. When companies are planning for the worst, that generally is going to mean a slowdown in economic activity in the short run. They can't plan for the best and disappoint their investor base, right? So I think this is going to be really interesting to see how companies address it in the first quarter earnings season, because they're going to have to guide investors or at least provide some context as to how they're thinking about this environment of we don't know where things are going.
Gina, I know you don't cover individual companies, but I got to get you to weigh in on the move that we're seeing from Apple right now. It's its biggest move higher going back to March of 2020 at this point. At its highest, it was biggest move since 2008. Stock's up 12% right now. I don't understand this move because Apple relies so heavily on China.
Yeah.
China is retaliating. There is no change in tariff policy against countries that are retaliating.
President
in fact,
Trump actually
minutes before we heard on Truth Social that the president was doing this 90-day reprieve, we saw tariffs upped on China. So why is Apple higher?
Well, a couple of reasons. As much as Trump would like to be able to tariff China specifically, China can filter a lot of goods through those countries that are not getting tariffed, that did not retaliate. So there's a little bit more flexibility in the supply chain if you can filter some of the goods through some of Southeast Asia. So, the skeptic in me says, good luck actually tariffing China. When there's global trade is a global phenomenon, not a country-to-country phenomenon. The second thing I think is this is a bounce into deepest oversold gets a bounce back to the strongest degree. So if you're deeply, deeply oversold, you should see the deepest oversold stocks ultimately bounce back first and strongest. So I don't want to totally suggest that this is really fundamentally based. This is by the most oversold stocks on a bounce back.
Having said that, 493 names in the S&P 500 are higher as we speak, only 10 are lower. Having said that, looking at the charts of the major equity averages here in the U.S., Gina, and the straight line up, is that also an indicator, yes, of oversold, but also it is tariffs. It is tariffs that is weighing so much down?
Because tariffs have so many implications for the economy. They have implications for the currency. They have implications for the appetite for U.S. debt. This is all intermingled. This is a big, big macro phenomenon. And going from a less than 5% average tariff rate to a 20% average tariff rate would have been catastrophic. And there's no doubt about it. So if we're anywhere less than 20%, there is at least, we're removing that downside tail risk that was really weighing on stocks. Is this actually going to emerge, this kind of tail risk? And so we've removed that to some degree with today's trade.
I think one thing that really had investors concerned and had executives concerned was that they didn't see an off-ramp to tariffs such as these. This was what the president wanted, and it's what the president talked about, and it's what he implemented. Does the pause just mean we're kicking the pain down the road 90 days?
This is the concern. We don't know where we're going to be 90 days from now. Just like we didn't know where we were going to be 30 days from now, and the tariffs ended up getting imposed on Canada and Mexico. And then we sort of reversed out of some of that. Where are we going to be in 90 days?
The second quarter will be over.
We will have tariffs on somebody. Tariffs are moving higher, incrementally higher, which is eroding the profitability outlook for the S&P 500. How much it erodes it is now the question mark. How much does it erode the economic outlook? How much does this create really difficult conditions for the Fed to try to ease? Because in the short run, we will have inflation. We know this. Consumers are already pulling forward purchases. So we know that we're going to have inflation, and growth is probably going to look kind of okay, but companies can't plan on that into perpetuity. They can't plan on stability. And until they can plan on stability, it is growth eroding.
Two things, and you mentioned the Fed in those minutes, and Mike mentioned this, that the Fed said it may face difficult trade-offs if inflation is more persistent, and this is something we've talked about, especially if it's a slower growth environment or a recession. You mentioned, though, earlier the connection between tariffs and U.S. debt, right? And we've all been watching the U.S. Treasury trade and, the auctions today, which the auction today seemed to have gone well. Explain that connection and why that's such an important one.
So companies that export a tremendous amount into the United States need some place to put the earnings from the exports. The countries that have tremendous exports, that ultimately drives demand for dollars in U.S. Treasuries. So to the degree that we are going to cut off the trade, we are going to say we no longer want your imports, they no longer have a reason to buy U.S. Treasuries, U.S. dollars. So it just removes that source of support, that source of demand. It doesn't mean you can't find it elsewhere. You can find it domestically. You can find it in other trade partners. But it's incredibly complicated. If we move to an environment where we're not an importer of goods, the need for U.S. dollars, U.S. financial assets is more limited, right? And I think that we're going to have to work through those dynamics. We've already seen this occurring with China over the last 10 years. They've reduced the degree to which they owned U.S. Treasuries. They've shortened the duration of their ownership of U.S. Treasuries. As they've pulled back from trading with the United States, China's dependence on the U.S. is much, much lower today than it was 10 years ago. They recognize that the U.S. is pushing back against them and has reacted accordingly.
Carry that through. What are the implications of that?
Yeah, the implications are if we can't find another buyer, we can't find more demand for U.S. Treasuries, U.S. yields ultimately end up higher. U.S. borrowing costs are higher. The cost of, levering up to grow in the U.S. is higher. The hope is that this doesn't happen. We can rebalance, right? We can also rebalance the U.S. fiscal situation, which is another leg on this overall scheme. But in the near term, it means we've got to find a new buyer for U.S. debt if we're going to reduce the demand, effectively force reduction in the demand for those securities and U.S. dollars through trade policy.
Gina, before we let you go, you've shared with us your concerns a lot over the last week. And I'm wondering if you're more concerned, less concerned, or unchanged, given the move that we saw today in the news from the White House, than you were when you walked into the office this morning.
It's very, very early. I'm fairly unchanged. I'm still very concerned about the signal effect. I'm very concerned about, this such volatility and signaling to the international investment community about the sustainable investment aspect of the U.S. economy and the U.S. financial markets. The dependency on a single person decision making is, I think, disturbing to the international investment community. We have no understanding of where we're going for the next 30 days. We're just supposed to trust that it's going to be better. I think that's really tough for decision making, for investing in portfolios. Long term, equity investment is about investing in the companies, but the companies are being battered around by policymakers at this moment in time, and that creates a lot of distortions. So I'd say I'm kind of neutral with where I was this morning, still concerned about downside risks, still hopeful that companies will find their way through and navigate their way through the turmoil. Still looking for opportunities to emerge in global equities as they do. Certainly we've seen gigantic movements to the downside, and especially some global equity markets that are not as overpriced as the U.S. equity market is. And so there still are a number of opportunities that are emerging, but it's tough to see through a lot of these clouds right now.
And the risk is in 90 days, we could be where we were yesterday, essentially, right? Or how we started off the morning.
Yeah, I hope that's not the case, because it does seem that, we started off the morning assuming that this is our reality. And now we at least have some opportunities for maybe negotiations or some differences, or maybe not quite as much near-term spike in inflation and disruption in the economy. So net, hopefully this improves conditions, but it's a hope, and hope is not a strategy.
Good stuff, as always. Gina, thank you so much. So appreciate. She she creates our equity strategy here for our Bloomberg Intelligence team in the U.S. market. So appreciate it. Gina Martin Adams, she's been pretty busy as of late and keeping us up to date on the markets. Gina, thank you so much. We're going to stay, though, with the markets, Tim.
I do want to bring in Bloomberg News senior editor Ed Harrison, who joins us from Washington, D.C. this afternoon. Ed, I'm just looking at the S&P 500 up 7.8%, the NASDAQ composite up 9.8%, the Dow up 6.6%. We were talking to Gina Martin Adams just now. Days like today do not come around often when you're looking at the history of single-day moves in U.S. equity markets. Your immediate reaction to the moves that we're seeing right now?
My immediate reaction is fairly similar to what Gina was saying, Tim, and that is that nothing's really changed dramatically. In fact, if you think about what the market expected before Liberation Day a week ago, they expected across the board tariffs at the most, say, 10%. And we've gotten that right now, even with the reprieve. And we have more than that, meaning that China, which is the one of the U.S.'s largest trading partners, we're effectively in a trade war, the U.S. with China. And so all of the downside risks there in terms of growth are still available. All of the upside risks to inflation are still there. And the uncertainty that that creates basically means that there's no reason to invest for companies over the near term. So all the things that are keeping the economy weighed down are going to continue to be weighed down even after this. So we've just had a relief rally, but ultimately the economic paradigm is effectively the same.
I mean, the economic paradigm, right, Ed, doesn't change unless President Trump says, roll back, we figured it out with China. Happy trade, everybody. Let's go back and forth to kind of where it was. We've worked it out, and we're going to leave it there. And I promise for 4 years, we're going to leave it there. I mean, that's a big ask.
That is a very big ask. And even if he were to do that, we would still have the 10% tariffs, which legitimately were the worst case scenario that people were thinking about ahead of time. And, it's interesting as this is all developing. I'm looking down at my phone, and I saw at most 30 basis points up in the 2-year Treasury bond. And you saw a massive flattening of the yield curve because the 10 and the 30-year are up much less. What we see now, especially after the minutes from the Fed, is that people are starting to recognize not only has everything, we've only taken the biggest risk off the table, but now we get a little bit more clarity about what the parameters are. That is that the Fed is so worried, according to their minutes, about inflation that they're going to be on hold for a considerable period of time unless we get into the most dire situations like recession. So to the degree that equities are rallying, bonds are really selling off in a big way.
Well, and it's interesting because one of the things like Tim brought to my attention, and we've been thinking about this, is the chatter that is kind of out there on Wall Street. I remember so often when the Fed felt like things were getting stressed out, in terms of credit markets and the financial situation, that it would surprise us with a rate move. And so there's some chatter out there based on those Fed minutes, and they're based, of course, on the last Fed meeting, which was about 3 weeks ago. That's not what they're thinking. They're thinking we still got to be on the inflation fight.
Yes. And, I would add this piece to the discussion. I truly believe that we are going to very soon have, the next fight is not between China and the U.S., it's between the Fed and Donald Trump. That is that Donald Trump has already said that he wants interest rates to be cut. To the degree that we see interest rates going up the way that they are now, that's going to put the Fed right in the bullseye for Donald Trump, and he is going to take action in the way that he has in other instances. So this is going to be a crisis of confidence about the Fed's independence, and that's what's coming next.
I've also had a couple people just in the last hour, Ed, and this is not by any means your area of expertise, but I do want to get you to weigh in on this. They've raised the question about the president sending this post on his social media network earlier, quote, "This is a great time to buy DJT." DJT is, you don't know if he's signing it DJT or if he's actually alluding to, the ticker of Truth Social. He sends this out this morning, and then we get this announcement where we see this massive, massive rally. Is there concern about the president doing such a thing like that?
I don't think that there is any concern about that anymore because, let me just be honest, the emoluments clause, everyone was talking about that in Trump 1. No one's talking about that in Trump 2. We have a completely unfiltered Trump. And the reason I was talking about the Fed being in the bullseye of the Trump administration is because Trump basically can do whatever he wants at this point in time. There's no filter. There are no guardrails.
Well, the reason I bring it up is because critics would say this looks like market manipulation.
Right. There's nothing we can do about that. I have no opinion on that. I'm just saying that this is what's going to happen. This is the world that we live in now.
Yeah, and I should point out that Trump Media and Technology, it is soaring. It's up about 18% in today's trade. So along with the overall move to the upside in U.S. equities. And so you're seeing about $708 million added to the market cap. It's now about $4.5 billion in terms of market cap. Ed, so appreciate getting some time with you. We know it's busy, a lot to keep track of. Bloomberg News senior editor and author of the Everything Risk newsletter. Check it out on the Bloomberg and at Bloomberg.com. He is Ed Harrison joining us from D.C.
Well, let's stick with our coverage and specifically talk about China because President Donald Trump said he would pause higher reciprocal tariffs for 90 days on dozens of trade partners while raising duties on China to 125%. I want to bring in Bloomberg News global economy reporter Enda Curran. He joins us from our Washington, D.C. bureau. And I feel like this part of the story is being lost a little bit. It's being buried a little bit with the equity market reaction here. China, obviously a huge trading partner to the United States. 125% tariffs are incredibly significant. Why do you think that part of the story is not getting through?
It's because we're just being conditioned by the news flow, I think, to look for relief where markets want it, so to speak. And this news that President Trump is putting that pause on the global reciprocal. Sounds like a great thing, but to your absolute point, we have extraordinary tariffs now on goods between the world's biggest two economies. It would now be over 125% on Chinese goods coming into the US. China is the third largest source of goods for the US after Mexico and the EU. And then, of course, China is retaliating with 85% tariffs, 84 or 85% tariffs on US goods, but also lots of warnings there about non-tariff retaliatory measures as well. So the point is the world's biggest two economies are locked in an extraordinary trade war. We haven't seen this before. It is, of course, going to impact prices more so in the US economy, and growth and economic activity in both economies. And the key point is that there's no real sense of an off-ramp just now. I mean, we've had the officials out this morning, Jameson Greer, trade representative yesterday and today, Treasury Secretary Scott Bessent yesterday and today, making the point that they're not saying there's any olive branches coming from Beijing. And of course, Beijing certainly would make the point that it's up to Washington to come and talk to them. So no hint of an off-ramp, very new territory and very, very serious stuff for the world economy.
Well, just give us some numbers here and about how crucial of a trading partner China is. I was telling Gina Martin Adams earlier that the move in Apple confuses me to the upside of close to 10% at this point, because it is a company that relies so much on China. We had Dan Ives on earlier this week from Wedbush, and he basically said, if you look at the Mag 7 companies, if you look at all the tech companies, this is the one that is most exposed to China. So why, in your view, are we not seeing a reaction negatively to Apple?
Yeah, well, look, in the case of Apple, I don't know the idiosyncratics, but it might be the case that people think they can diversify out of China, and they will do. I mean, they've been flagging, investments in other parts of the world, India, for example, some in the US. So it might be a diversification story. But to your broader point, the big issue is that the US remains, China remains a critical source of both consumer goods and intermediate goods for the US. And I think the figures around 30-odd% of all imports into the US really rely on coming out of China, right? They depend on China. There's stuff that's made there that isn't made anywhere else in the world. And when you speak to businesses here, manufacturers and others in the US, they will tell you time and time again, they buy certain components from China because it's A, the most competitive place they can source them, and B, some of that stuff is not made anywhere else in the world. These kind of industrial intermediate goods are made in China, that's what they do, and that's where they source them. So this is going to be very complicated for US business. It's going to be very complicated for US households and consumers. Remember, also getting lost in the tariff news on China is the de minimis changes.
Good point.
The lower income, and there's literature that suggests lower income households rely on the de minimis purchases. They're going to get hurt. That's about 90% now. So yes, a big relief on the global trade story today, but the China-US story is only getting started.
Well, that's where I want to follow up, and something you said that, there's no looking for an off-ramp between U.S. and China. Is that because, Enda, there is no off-ramp? I mean, we have talked about decoupling between the United States and China for a long time, but they need each other. Is that correct?
No, they do need each other. We wrote about this. We wrote about this today. Decoupling had gone off the agenda. It was all about de-risking. And by coincidence, by the way, 1 year ago this week, then Treasury Secretary Janet Yellen delivered remarks in Beijing saying the US and China would never decouple. To do so would be disastrous for both economies. 1 year later, here we are talking about 125% tariffs in one direction and 80-odd in the other direction. So they can't fully decouple, but we're a lot closer to it than we thought they were. You will start to see supply chain shift. Companies will have to move their production around. There's no question about it. Consumers will start changing up where they're buying their stuff from. And then in terms of where can there be a deal, we can't necessarily speculate, but we know President Trump talks about China has to bring down all of their barriers to allow more US investment and trade in China. So that's around IP protection, the currency, the exchange rate, that kind of thing. Not quite sure what China would be demanding per se, but it's not. And of course, the other part, I should also say, part of the mix could be more Chinese investment in the US is one possibility people talk about. But either way, those are talking points. We're at extraordinary levels of tariffs. The rhetoric from both sides. China says they will fight to the end. President Trump showing no signs of a climb down on the China side either. right now we're still at the retaliatory phase. Negotiations seem some way off between the both of them.
And what's the impetus or what's the motivation for a company that has a supply chain based in China or significantly exposed to China to move to another country right now when just last week we heard tariffs announced on pretty much every single country in the world? Trump 1.0, I imagine, and during Trump's first term, we saw that, and we did see that with many companies, but just last week they were punished as a result of these tariffs. Is that, I guess what I'm saying is, since there's no certainty there and those other, tariffs could come back if there is retaliation, why would a company make an investment such as that?
And that's completely the issue. Companies are confused. I speak to companies all the time. They say, we'd love to move out of China, but nowhere else offers the scale and the infrastructure that China has, or the costs. And anyway, even if we did move, what happens if we get caught up in a tariff dragnet, which is, to the point you're talking about? And by the way, a lot of these manufacturers that we speak to also make the point they would love to come back and produce in America, but it is just too expensive, too costly, regulatory environment, environmental burdens, skill set, all the rest of it makes it very hard to do so. So there's a kind of school of thought out there among corporate executives that let's just hang tight, ultimately see how this goes over the next year, 2 years before they make real big capex decisions. But if you're a smaller company on thin margins, which a lot of these operators are, you can't cope with a 125% tariff.
What does the president, I am curious, the president has talked in the past about being kind of a friend with President Xi, right? A great relationship. What does he really ultimately want from China and President Xi here?
Well, we have to get that articulated. But as you say, over the years, President Trump has veered between something of China Hulk, obviously, to willing to do business with China. We saw that, of course, during the TikTok back and forth. Again, one would expect the ask from the US side is around better market access into China, freer market access. IP theft is a big issue there. The exchange rate, obviously, President Trump says they keep the exchange rate too low. Treasury Secretary Bessent warning about that this morning. That's one side of it. And maybe also, sometimes there has been a hint from the administration that China could come and invest here more. That would be seen as a positive. But, we can't go too far down the world of the speculative route because we don't quite yet know what the specific asks are. But one would assume it'll be around trade and investment.
Right.
But as I say, we're not at the negotiating stage yet. We're still in the retaliatory stage.
I am curious, too, what you guys are hearing there at the D.C. Bureau about what is going on inside the White House when it comes to U.S. and China. I think there was a headline overnight from Reuters about maybe U.S. and China talking today or China planning to talk with the U.S. Do we have any clarity around that or any transparency around that?
I don't think certainly the signals from the White House in terms of the public commentary does not lend itself towards anything meaningful near term in terms of negotiations. As you say, both sides have retaliated. China only yesterday, the US again today. We're still in that tit for tat stage. That will have to cool down before real talks get going. And I think there's no sign of anything meaningful on that front just yet, Carol.
Okay.
And what are the positions of the United States and China from a bargaining perspective, from a leverage perspective? Take us through what position the U.S. has, how much leverage it has, and how much leverage China has. What's the matchup here?
Well, if you think of it in terms of tariff tennis, it's advantage U.S. in a significant way because the U.S. buys a lot more produce, a lot more stuff from China. So think of the U.S. as being a big customer of China, and now the customer wants to change up things. Doesn't want to buy as much, wants to change up the pricing, change up the order book. So there's a lot of levers the US can pull to make things difficult for Chinese manufacturers, exporters, producers, all of that. Now, that doesn't come without cost to the US because the US will have to source products and material from somewhere else. That will be expensive, and the stuff they continue to buy from China will be expensive. So there's a hit to the US there. On the China side, obviously there will be a hit to their manufacturing base. There will be a hit to their economic activity, no question about it. But China can mix things up a little bit. They can start buying more of their own produce, something a lot of countries call for anyway. They can start looking for other markets to substitute. So leverage on both sides, but also pain on both sides. And that's why economists warn ultimately this won't get anyone anywhere.
Hey, I am curious, too, about the Chinese economy. President Xi, as you write today, has shown his willingness to gamble with the Chinese economy. in the name of consolidating power. I mean, is he willing to gamble a lot here? Because we know exports, Chinese exports, and selling to the world is crucial to that economy.
Well, he's probably willing to take a stand against the US. That's no question about it, and he's showing that so far. I think it's a question of how much pain can the economy withstand? How long will this trade war go on? When or will there be an off-ramp? And then also this diversification point I made earlier, can China meaningfully look for other markets? Can they buy more of their stuff at home? Those are the questions. So China still has some cards up its sleeve as well. It won't be all one-way traffic, but as I say, both economies will feel an impact from this, Carol.
All right, we're going to leave it there. Hey, Enda, thank you so much. So appreciate our Enda Curran there in D.C., of course, following the global economy. Just if you are just tuning in and watching us, President Trump announced a 90-day pause on higher reciprocal tariffs that have hit dozens of trade partners after midnight. But keep in mind, at the same time, President Trump raised duties on China to 125%. We've had some retaliation ahead of that from China against the United States. And on the back of this, we have seen a rally, certainly in the equity market.
A rally is one way to put it. Maybe Vince Signorella would call it a rip-your-face-off rally. The NASDAQ composite higher by 10.9%. The S&P 500 up by 8.5%. The Dow Jones Industrial Average up by 7.4%. I do want to bring in Vince Signorella. He's Bloomberg News macro strategist. He joins us this afternoon from White Plains. How do you describe the market action, the tape today?
Ripping your face off is a really, really good way to put it, Tim. I mean, this is, I've often get asked by traders, what was it like trading in the 80s? And this is about as close as I've seen it in a very, very, very long time.
So for those who weren't around in the 80s, we were.
Yes.
What does that mean?
The volatility was fantastic. I mean, you have to remember this is pre-Euro. So you had every country had their own currency, and there were days where you could see the German mark move 10 big figures up, 10 big figures down, then 5 or 6 up again, back and forth. You could see a 30 big figure day in one day, back and forth. I was trading cable during the 80s after Maggie announced her reelection, and sterling went from this very sleepy currency to moving 3, 4, 5 big figures in a day. And to put that in perspective, just a £1 million position on 5 big figures is a $50,000 change in P&L. So when you're trading 50 to 100 million pounds, you can imagine that if you get that wrong, you could give a bank away in a heartbeat. So, we haven't seen anything like that until literally this week. And I'm tired.
Well, it's only Wednesday, Vince, so you got a couple more days to go here. Hey, Gina Martin Adams said a move such as this concerns her, whether it's to the upside or whether it is to the downside. This doesn't make her any less concerned about the direction of the U.S. economy, about what earnings we're going to get as companies start to report. We heard from Delta earlier today, the company suspending its guidance for the year as a result of concerns over tariffs in the economy. We're going to hear from J.P. Morgan on Friday, among other banks. Are you concerned about a move higher like this?
No, I'm sure what Gina was referring to, whose analysis is brilliant, by the way, that the difference between Main Street and Wall Street. I mean, this is just Wall Street. Main Street it needs to react in a completely different way to this, what the tariffs really mean to them, what it's going to mean for earnings. A move down or move up in the stock market doesn't necessarily change the scope of what it does if you're the CEO or CFO of a company trying to source trade and look at what your cost price analysis is going to be going forward. And again, obviously, earnings are a big picture. I think it's going to be interesting is to see what sentiment indicators look like on Friday. And of course, we got inflation in terms of CPI, PPI coming up in the next couple of days as well. I wouldn't worry so much about the stock market. This is just a lot of back and forth on headlines. It is completely separate from what the real economy is going to be doing. I was encouraged, though, by Bessent's comment earlier this morning, where he said he was going to take sort of front and center of the trade negotiations. And that seemed to put both Navarro and Butnick on the backbench, which I think that was the real encouragement, I think, for investors, and that sort of the sound mind, the sound voice coming from Washington is going to speak. And then later today, basically saying he was going to try to get an alliance together, if you will, try to make individual trade agreements with all different allies, and then form a consortium of sorts against China, which really would put China in a box if he were able to do that. Because that would be a really, really strong negotiating power. You're not just talking about sort of NATO or Canada and Mexico. You're talking about Latin America. You're talking about Japan, talking about Asia, Europe, the whole lot now facing China and saying, this is where we stand. We're tired of, patent infringement. We're tired of the non-monetary tariff situation. We're standing up to you now. What are you going to do? And if you don't capitulate, we're all just going to play nice with each other. And that's going to put China, I think, in an extraordinarily difficult situation. I know what Enda was saying about it's not an all one-way street, but I think in this particular trade war, if Bessent pulls off what he's trying to do, it puts China in an incredibly difficult situation and one they can't win.
Yeah, exactly. And I keep thinking of the interview that Sonali Basak had with Boaz Weinstein, and the whole idea of the one thing that's difficult is that President Trump presumably will be in the White House for 4 years in total, and that the uncertainty genie is out of the bottle. And we have seen that this is a president, and I think it's fair to say this is truthful, is that he can change his mind on things. And that level of uncertainty, and it's ramped up more than maybe we saw in the first administration. And there are not the guardrails necessarily. I know you talk about the Treasury Secretary, but it's taken a while, I feel like, for maybe a potential guardrail to come forward. So I just wonder, Vince, traders like volatility, but CEOs don't, right? And consumers don't. They need things to be, certain at this point to make decisions and to spend money. So I am just curious that this trade, we could see another sell-off tomorrow. I mean, are there any guarantees at this point?
No, I don't think there are any guarantees whatsoever. And I think you make a really, really good point. Corporation CEOs, CFOs do not like this. Consumers certainly don't like this. I think what you're going to see is probably a little pullback in investment, particularly CapEx from corporations, particularly the larger corporations. You're going to see mid-sized small businesses be very, very cautious about how they spend money. One of the big things that, I ran a small business, and one of the key things about running a small business is cash flow. And the last thing you want to do is put yourself in a situation, it's a difficult situation. You want to spend money on inventory anticipating, price increases, but at the same time, you need to preserve cash flow because you could buy all this inventory and then nobody comes in to buy it from you.
Correct.
Because they're worried about the future. And so now you're stuck with shelves that are full of lower priced items, but still nobody wants them. So, for a smaller business, it's a really, really tough situation. For mid-sized businesses as well, the big companies, PepsiCo's of the world and such, they can withstand this for a while. Apple's of the world, they've got the balance sheet to eat that inventory for quite a long time. But other businesses do not. And that is probably going to weigh on both sentiment, spending, and the economy. We're still looking at first quarter growth pegged from the Atlanta GDP at minus 2.4%.
Right, down, but not as bad as it was, but still down. And
No,
we just have
from 2.8 to 2.4. You're absolutely right.
But we just have a headline crossing: Goldman Sachs rescinding its recession call after this move by the president on tariffs. I feel like it's like bing, 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 ricochet rabbit. Like you are just seeing people who just
and only you and I know who that is.
Google it, everybody. No, but it's just right. Like so, that's the world we live in, right? And so. That's a difficult environment.
It's totally, Goldman made this call literally before the announcement. So they couldn't have timed it any worse. Not that, it was their fault. And so, of course, they're pulling it back now. And it speaks exactly to what you say as to how businesses are trying to find their way in this world. And they're constantly changing their mind. And when you have that uncertainty, if you're running a business, you're going to basically say full stop. We're not investing. We're not hiring. We're not moving forward with plans at the moment. Let's shelve everything. We're going to keep looking at the situation. We're going to wait and see. And then, more likely than not, they're going to wait and see for things to really develop before they step in. You don't want to step in on day one thinking, again, maybe somebody changes their mind. You're going to want to see this develop. I think in the long run, this will develop positively. I think that China will eventually. Trump is going to need to look for a way to give President Xi a face-saving way out. to give him an opportunity to come to the table to have this conversation. If that happens, I think you can just, wipe all of this away, starting from, the beginning. Things are going to move positive. I think you'll see a lot freer trade, a different form of globalization, if you will.
Vince, to the point that Carol just brought up, this headline crossing that says Goldman Sachs rescinds its recession call after the Trump tariff pause. I'm confused about what fundamentally changes here, because as we heard from the Treasury Secretary, as we saw in that post from the president, this is a 90-day pause on countries that are not retaliating right now. This doesn't seem like a fundamental shift in the way the president is thinking about tariffs. Why is the recession risk removed then? At least according to Goldman.
Yeah, but if you think about the countries that are retaliating, it's really just the European Union, Canada, and China.
Those are big trading partners.
Yeah, no, but Canada's in a different situation. Carney's running for re-election, so you expect him to talk tough. One would assume he is the front runner at this point. He is the odds-on favorite. Will he change his tune after he is elected? I think he will. I think he's going to look to do something positive for Canada, and that's going to be, listen, we're allies. Let's cut this out. We're not enemies. We're allies. Let's put this aside and let's figure out what our differences are. Similar to what Scheinbaum is doing in Mexico.
Right.
I think
that's a good
EU
point.
I think the EU is definitely going to come around again because they're not in great shape right now.
There was a question shouted at the Treasury Secretary as he was walking away. What about the EU? What about the EU? Because they have retaliated. So we'll expect to hear maybe something on that, and we will bring it to you when we do get an answer. Vince, thank you for jumping in today. Vince Signorella, he's a global macro strategist. He's joining us from White Plains.
Tick by tick, great analysis. Hey, also great analysis if we head back to D.C., because that's where we find Bloomberg News senior White House correspondent Josh Wingrove. Josh, as I like to say to you, nothing going on. Oh my God, whiplash. So what's the read on here? 90 days, this is a big reset, but we're all waiting to kind of hear what happens with China.
Yeah, so there's a couple of details hanging in the air here. They said 125 on China. We're a little, it's not entirely clear to me yet what that means. The combined rate was 104. That was 84 as of today, plus the 20 from fentanyl. So it's a little unclear, like,
poor Josh with the math.
Cumulative? We're working on that still right now. Secretary Besson seemed to indicate some sort of change for Canada and Mexico. It is unclear what he meant by that or whether it was sort of a garbled question. So we're working through that as well. But it seems like 10% global tariff with perhaps some change of Canada and Mexico included in that or left on their previous regime. And certainly a higher rate on China, although the specifics TBD, but like a rate that is so high that it is almost prohibitive to most trade there. And then from there, negotiations, and we'll see where that goes. Now, I'm old enough, which is to say I'm at least 2 days old, to remember when a 10% global tariff sent markets in the other direction, and here they're going pretty upwards. So, there's a lot of moving parts here right now. So I guess investors have come to peace with the notion of a 10% global tariff. You guys tell me, where are we on that?
Context, relativity. I don't know. It's kind of wackadoo. I guess what's weird is, I don't have to tell you, right? The president can change his mind. Who's got his ear right now?
It's a great question. So we reported yesterday that the range of this internally was Peter Navarro on the hit everything with a hammer as big as you can kind of end, and Scott Besson on the be careful what you break end. And today, it was Secretary Besson who came out and spoke to the press. It was Secretary Lutnick who said that he and Secretary Besson were in with Trump when he issued his statement on Truth Social. Secretary Lutnick did not mention whether anyone else was there. That invites the speculation that it was those two in the room with him when he made this decision. We'll see right now. The White House has said repeatedly that no matter sort of the palace intrigue of who is in what room and what position they are taking, that they're all on the same page. And that is true. In some ways, that's been one of the remarkable things about it. Even as markets were reacting the way they did, every single member of Trump's cabinet and his economic aides were singing from the same song sheet and really not allowing themselves to express any sort of doubt publicly about this. So publicly they are aligned on this. Internally there were deliberations. The White House sees that as sort of a feature and not a bug of the way Donald Trump does business. But if you believe Secretary Lutnick, it was him and Besson, at least those two, perhaps only those two, who were in the room for this meeting on lunchtime, which appears to also have been somewhat hastily announced, and that Secretary Bessent was scheduled to be on Capitol Hill, scrapped that, did the meeting with Trump instead.
What about the other folks, some who have been supportive of the president and recent supporters of the president, those like Bill Ackman or Ken Griffin, maybe Jamie Dimon early this morning with his call and concerns about a recession? What do we know about how influential those outside voices have been?
It's evolving, but certainly the voices of dissent from Trump world started with those like key market figures. Elon Musk, of course, signaling sort of pro-free trade, anti-tariff stances in a very conspicuous way, and then very explicitly, having personal criticisms of Mr. Navarro, the trade hawk and Trump advisor. And so I think it sort of emanated from that. I think we'll see some questions in the coming days also about the president's tweet this morning that, people should sort of stay cool and that it's a great time to buy. People that took that advice will have made a pretty good return in the following few hours. So lots of dynamics here to pull out, I suppose. But I think the top line is that President Trump is refocusing, reallocating his attention and his tariff sort of push on China squarely. The question is, of course, how China will respond, if they will respond further. And that in the meantime, we're going to get this sort of procession of delegations and trade delegations, coming to Washington to try to strike some deal, to defer any further tariff hike. I will note that Trump has consistently signaled that they don't want to go below that 10%. I think whether that has changed is now an open question. But for instance, Australia, where the U.S. has a trade surplus, kind of checks all the boxes that Trump wants to check. They had 10%, and people in Australia were wondering what gives with that. It felt like 10% is the floor. They've been treating it as the floor. And so I think the negotiations that are coming in the next 90 days are aimed more at staying at that floor than, finding a number below 10. But again, it just remains to be seen. And then as for China, we'll see. The TikTok deal is also something that Trump has sort of linked to all of this. A lot of uncertainty swirling.
Hey, listen, one of the things too, Josh, overnight, I keep asking about this. There was a Reuters headline, China plans a meeting on U.S. tariffs as early as today. I'm assuming that's internally that they meant a meeting. I mean, I am just curious if we're getting any more specificity when it comes to China specifically, and conversations between the two nations on that.
Well, allow me to pay tribute to our friends at the Atlantic Council who had a briefing briefly this lunch hour, which I had to drop off of to deal with this tariff news shortly after. But they were talking about the notion that China has more room to run here than maybe Trump officials realize. And I think this is an open question. White House officials have been telling me, look, the president believes he has the leverage. China is trying to dump its way to recovery. Their economy is very weak. And if we're building a tariff wall around the U.S. that is going to put China in a bind, they reject the notion that U.S. tariff uncertainty and U.S. aggression in terms of tariff policy toward its allies will drive countries sort of into the arms of China. On the contrary, they think that they can wait it out and that China cannot. Of course, a lot of China analysts will tell you that they think Xi Jinping is as better, as well positioned, if not better positioned than Donald Trump to wait out a tariff war. But right now the market reaction is like, we still have a major tariff war between the world's two largest economies and a 10% global baseline tariff by the Americans on everyone else. This is still remains a significant tariff action.
Yeah, it seems like maybe not getting the attention on Wall Street right now that a lot of people would argue it deserves, Josh. It raises the question, too, and I know you're still doing the math on this, but what would be an off-ramp for this trade escalation, this trade war between China and the U.S.?
That's a good question. I'm sure you guys can find smarter guests than me to answer that one. But Trump wants to see negotiations. One note in a story that we ran this morning talked about how China customarily will do these negotiations sort of mid-level and upward. Trump doesn't like that. He likes to start at leader level, and I think that story smartly noted that is a barrier here. In other words, Trump would love to sit down with Xi Jinping at some point and hash things out. He likes leader level discussions. China doesn't really appear interested in that. And so we'll be looking for any sort of smoke signals between the two countries of whether there is any sort of pause in it. But right now, fundamentally, the ball is in China's court, because every time the U.S. has raised its tariffs, China has responded in kind. Trump just raised the tariff. And so I assume we'll see for instance, perhaps a 21% tariff increase from the Chinese. And then, tomorrow will Trump raise it again? We'll see. We'll see where this goes. But right now, the message that Trump is trying to send is refocusing on China as the target and de-emphasizing others. Other people who've been alive longer than 2 days will note that this sounds a lot like the Trans-Pacific Partnership. We've been talking about that internally. The U.S. had sort of spent years talking about ways to strike trade deals in the Indo-Pacific in a way that created a bloc, a de facto trading bloc of some kind to counter the clout of China. The U.S. walked away from that. That deal kind of, stayed in place to some sort of partial degree without the U.S. And so now I guess we're going back to striking trade deals in the Indo-Pacific to counter China, just with the new brand, I suppose.
I am wondering too, listen, Josh, for a while we said the president keeps a watch on the equity market. Do you think any of that had to do with it? I mean, we even just looked at DJT and how much that one popped, his own company, his own Truth Social media and technology company. I mean, everything is up, to be fair. But I'm just curious if we can make some of that an assumption as well. That he's back to
I think it's impossible to say that the market reaction wasn't a factor in the overall calculus here. But until now, Trump had been saying, hang tough. And, the pain is going to be worth the gain. But whether, I don't have reporting to say that is specifically what made him change course today. I will know that they downplayed the impact on the bond market, and they talked about the fairly strong Treasury auction that we had today.
Yeah.
Secretary Besson talking about that in particular. But there obviously are questions about whether the pain in the bond market, in particular in Treasuries, was sort of changing the calculus as well. Remember, of course, Besson set the 10-year as his sort of like North Star objective, and so right now, it's an open question, but generally speaking, yes, in the history of Trumpland, market reaction is a big factor.
Josh, last question. Top of mind for you right now, and what's already been kind of a shake your head kind of day in terms of the news flow and the headlines, and we still got a few hours or another hour to go before the market closes. Top of mind in terms of what you would love to hear from the president right now, or what you would ask him.
I think it'd be news if he signals he's willing to go below 10%, but right now they haven't. I think people are forgetting that he's talking about sectoral tariffs, additional ones on pharmaceutical drugs, on lumber, on semiconductor chips, on critical minerals. Will they slow walk those? They have elbow room to if they want. They haven't specified a timeline. Or will they continue to do that? And if they do that, are investors going to be surprised by a continued sort of drumbeat of tariffs from this administration? But people need to remember that those are coming. And of course, then I think the third leg of that stool that we're looking for is whether China retaliates, and therefore if the U.S. retaliates again towards that, although I will note, people are, analysts out there are crunching the numbers and saying that at the current tariff levels, Trump is already declining his tariff revenue because now tariffs are so high that they're going to really materially curb the actual volumes that they're being applied to. And so it does beg the question, if you're already at 125, how many goods are sort of marginally moving between 125 if he goes higher than that? Or is this already effectively a substantial barrier where anything above that doesn't really make a big difference?
I feel like my head's going to explode. Everybody, you're up to date, courtesy of Josh Wingrove. Josh, thank you so much. So appreciate it. Bloomberg News senior White House correspondent Josh Wingrove there in our D.C. bureau. We got to talk markets again.
Yeah, the S&P 500 higher surging right now by 7.4%. The NASDAQ composite up by 9.6%. So off our best levels of the day, at least when it comes to the NASDAQ composite. The Dow up by 6.3%. I do want to bring in Scarlet Fu right now. She's been watching the market action for the last 90 minutes. And in fact, I know is curious about today's trade, but I'm going to go to her for answers as well. My big question for you is, yes, we've talked about the tape and what we're seeing today. The fundamental change that this is based off of, how do you view it?
I think what it goes back to show is that the president is willing to negotiate. There are real serious doubts about whether that was the case, whether he was going to stick to his guns, ignore the stock market, ignore what investors were telling him, ignore what a lot of his Wall Street friends were telling him, and just follow through on his threat to impose tariffs.
He opened the door a little bit.
But he opened the door, right. And a 90-day pause, I mean, that opens the door for longer pauses, because as the Treasury Secretary reminded us, they're talking about bespoke bespoke trade negotiations. Can you get all that done when you have 75 countries lining up outside the White House to talk to you? Probably not. I mean, 90 days is just where we stand right now. It could get extended and extended over time.
Right. Unless you go back and say, oh, okay, maybe not 10%. Maybe I'll go down to 8% or something, right? Like, unless he just has a blanket one. But it really does come down to these important trade relationships, whether it's U.S. and China, a huge one, as you well know, Canada, Mexico, our big trading partners, even Europe, if you throw into that. Like, these are important. What these agreements ultimately are about.
Absolutely. And what amazes me right now looking at the trading is the indiscriminate buying that's taking place. You look at FXI, the ETF that tracks Chinese stocks, or the NASDAQ Golden Dragon Index, both are soaring, even though we have a higher tariff imposed on China. Apple is climbing. It's
what do you make of that? That's been I'm so confused.
I know, because the biggest and most important product of this company is the iPhone, and it's pretty much made entirely in China. Bank of America had that note out that said if you wanted a U.S.-made iPhone, it would cost 90% more to make. So Tim Cook, the Apple CEO, still has to go back and figure out the supply chain for the iPhone. He wants to move things to India, but that's not going to happen tomorrow.
But let's say he does. Let's say Apple's success. We'll play this out a little bit. Let's say Apple is successfully able to move more production outside of China. If they're not moving to the United States, then that doesn't satisfy the president.
Right. The cost will still be higher no matter what, because as long as it's made outside the U.S., we're looking at right now 10% tariffs, right? And over time, that can change. Who knows whether he's going to come back and say, okay, 10% was the baseline. Now we're going to tweak it and adjust it higher because I'm looking for something else from you, country A, or you, country B. I mean, really, again, what this afternoon has shown is that there's going to be lots of negotiating going forward. And if that's the case, with earnings season coming up, how as a company, how as a CEO of a company, are you supposed to give any kind of guidance that includes the impact of tariffs? You can't. It's impossible.
How do you make a spend? How do you hire people, right?
How do you hire people?
Right? Like, going back to Apple, though, Mark Gurman had even put out that Apple has been working on diversifying its supply chain, India, Malaysia, Vietnam, and yet all of this, right, has been hit with tariffs. So even as they've diversified, the
they
policies.
were able to negotiate an exemption last time around, but they weren't able to do so this time because it's clear in this trade war in 2025, it's really the U.S. versus China.
Going back to what you said about earnings, sentiment's going to be really key, right? Tim and I talk about this in terms of, you guys do too, consumer sentiment, CEO sentiment. Do I spend? Do I build plants? Do I hire? Like, maybe I don't. Maybe I hold off until the dust settles.
As a consumer, I know I'm going to be sitting on my hands a little bit. Why buy something if you have no idea what's going to happen? And as a CEO, that is your fiduciary duty. It's no longer about impulse purchases at all, right? Or what makes you feel good. It's about, this is what I have to do. And you would be remiss to do anything but wait and see what happens. And hiring, of course, is top of mind here as we look at the strength of the economy, or, perhaps seeing it not go into recession.
And that's why we are going to wait to hear from all these companies that are reporting starting on Friday. We heard from Delta earlier today, but we'll hear from some of the banks, including JP Morgan Chase, on Friday.
It'll be really big. Right now, folks who are watching on TV, YouTube, and Bloomberg Originals, and for those who are listening on radio, just monitoring President Trump at the White House. I believe I saw a race car before, and some kind of press event, but we're going to be monitoring it, of course, to see if he does make any comments about his news in terms of this 90-day reprieve, if you will, at least for those in terms of reciprocal tariffs. But big day. Scarlett, thank you so much. We'll be talking with Scarlett in just a moment. Hey, for those watching on TV, the close is coming your way. In just a moment, we continue on Business Week.
Bye, guys.
Thank you. Sorry for the wait.
No.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on radio and on YouTube and Bloomberg Originals. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Broker studio. Folks, we've got a rally underway. It's not exactly how we kicked off the day. We were seeing some gains, but man, it happened, I think it was around 1:30. I think we got a headline from the president saying basically we're going to kind of put a delay in terms of those tariffs, 90 days on some nations. This is conviction in this trade, Carol. 477 stocks in the S&P 500 are higher, 25 are lower. The S&P up by 6.8% right now, the Dow up by 5.8%, the NASDAQ higher by 8.7%. Yeah, the big story at this hour, President Trump announcing a 90-day pause on higher reciprocal tariffs, hitting dozens of trade partners that were going to hit dozens after midnight. China, though, raising tariffs, duties on that nation to 125%. So that came along with that headline. I'm looking at the Bloomberg Mag 7. They're up about 10% as a group overall. I mean, as Tim said, it is a broad-based rally underway. We're going to continue on the markets for you as we count down to the close on this Wednesday. Also continue to look at that relationship between U.S. and China. So a lot to come in the next 2 hours. Yeah, we're all in on markets. Gina Martin-Adams is going to be back with us from Bloomberg Intelligence. And Carol, we're also going to get a view from China, from inside China. We've got Shahzad Qazi, China Beige Book International's COO and Managing Director. They've got the data. All right. Looking forward to all of that, folks. Do not go anywhere. Right now, let's get an update on the trade. Let's toss things over to Charlie Pellet.
Thank you very much indeed. Recapping, resetting here. Truly a historic day for U.S. markets. Stocks are surging. Goldman Sachs rescinding its recession call after President Trump's tariff pause. All this happening this afternoon. The president announcing a 90-day pause on higher reciprocal tariffs that hit dozens of trade partners after midnight while raising duties on China to 125%. Big numbers to the upside. S&P surging 364 points for the S&P right now. That is a gain of 7.2%. Dow Industrials up 2,330 points for the Dow. That's an advance right now of 6.2%. NASDAQ, the composite index, up 9.3%. NASDAQ 100 index also up by 9.3%. The VIX at 36 with a 10-year, 4.38. The 2-year, 3.93%. Gold now surging $85 the ounce, $3,069, up 2.9%. West Texas Intermediate crude up 3.7%, $61.81 a barrel. And Bitcoin right now is surging 6.3%, 81,995 on Bitcoin. So what about today's tariff developments and the market backdrop? Here's Bloomberg News Senior Editor Edward Harrison.
What we see now, especially after the minutes from the Fed, is that people are starting to recognize not only has everything, we've only taken the biggest risk off the table, but now we get a little bit more clarity about what the parameters are. That is that the Fed is so worried, according to their minutes, about inflation that they're going to be on hold for a considerable period of time unless we get into the most dire situations like recession.
Bloomberg News Senior Editor Edward Harrison. Former Treasury Secretary Larry Summers says we are far from being out of the woods. In a post on X, he says reckless improvisation is not a strategy, and the administration was rightly scared after collapsing markets. Again, recapping here, stocks are surging. S&P up 7.5%. Among some of the equity names clearly in the tariff headlights, we've got automakers surging right now. Ford up 7.6%, General Motors up 6.8%, Stellantis up 14.8%, and Tesla right now up by 18.7%. Apple getting a lot of attention. That stock up by 7.8%. Keep it locked in. We got you covered. Fast-moving markets right here on Bloomberg. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Worth repeating because the news is huge. President Donald Trump announcing a 90-day pause on higher reciprocal tariffs that hit dozens of trade partners after midnight, while raising duties on China to 125%. We are seeing stocks surge as a result. World equity indices showing a lot of green. The NASDAQ composite 9.6% to the upside. The S&P 500 up 7.6%. The Dow up 6.5%.
All right. Let's get to the markets.
Let's
talk
do
a
it.
little bit more about it. With us here in studios, Bloomberg News cross-asset reporter Isabel Lee. And It is really broad based. Scarlett Fu mentioned this earlier to us. It's indiscriminate buying.
It definitely is. We have just a wave of enthusiasm sweeping through markets. Everything is really rising. We have the S&P rising as much as 8%, and that's coming off from a precipice of a bear market, which is a 20% plunge from its high. We have Bitcoin soaring. You have Arabica coffee. You have gold. You have oil. You have two-year yield. You have traders pulling back expectations for the Fed, and you have two-year yields plunging. It's really just green on the screen. But we do have some analysts saying that there's still prolonged uncertainty, I mean, yes, we have this pause, but what's going to happen after?
Isabel, hang on for a second. We do want to head to the White House and President Trump.
Yippee, they were getting a little bit yippee, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. No other president. I know the presidents, they wouldn't have done it. And it had to be done. What was happening to us on trade, not only with if you look at it, not only with China, but China was by far the biggest abuser in history, and others also. But somebody had to do it. They had to stop because it was not sustainable. Last year, China made $1 trillion off trade with the United States. That's not right. And now I've reversed it. It's for a short period of time, but we made $2 billion. We're making now $2 billion a day. And somebody had to do it. Roger actually said it. Charles Schwab was here a little while ago, one of the great financial people, and he said he's been waiting for 40 years for somebody to do what I did over the last month. And if you didn't do it, you wouldn't have a country. It wouldn't be sustainable. So I'm honored to have done it. And, look, nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. It's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal. And we have many other countries, as you know, many more than 75. And they all want to come, and they want to come here, or they'll go to Commerce, or they'll go to Treasury. We have our great senators here and congressmen. They'll call John, they'll do somebody, they'll go through somebody, but they're all calling, how do we do this? They all want to make a deal. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible. A man like Roger Penske, I don't want to get him in trouble with China, so I won't, but he would know that someday you have to cut the bow and you have to do what you have to do, right, Roger? And that's what I did, and I'm very happy to have done it.
Mr. President,
was there anyone
the Prime Minister of Greece just told Breitbart's Matt Boyle that he thinks absolutely the European Union and the United States could work out a trade deal that's win-win and, quote, mutually beneficial to both sides. What do you think about the Prime Minister's comments, and do you think a deal could be struck with the European Union?
First of all, I know him. He's a good man, and I appreciate his comments. Yeah, a deal could be made with every one of them. A deal's going to be made with China. A deal's going to be made with every one of them. And there'll be fair deals. I just want fair. They will be fair deals for everybody. But they weren't fair to the United States. They were sucking us dry, and you can't do that. We have $36 trillion of debt for a reason. We don't have it there for fun. They have it for a reason. And people took advantage of our country, and they ripped us off for decades. I've been thinking about this for decades. If you ever saw me on television, I was young like these guys. And it was the good old days, I'll tell you, Roger. But I was like these guys, young, and I was talking about it. Nothing changed, and nothing was done about it. Then I did it. In my first term, I did it, and did it well. We took in hundreds of billions of dollars from China and others, and I started the process, but then we had to fix up from the COVID mess caused by China. We had to fix up from that, and we did a good job of doing it. And when we handed back the reins after a rigged election, and when we handed back the reins, the stock market was higher than it was before COVID coming in. So, we did a great job, but we didn't have time to do the big thing, which we're doing now. And it's it's like a patient is sick. You have to do surgery. Patient is very, very sick. And Joe Biden handed us over a country that was in very serious trouble, economically and in every other way. They let China run away with things. They let other countries run away with things. And maybe worst of all, in a certain way, is what they did at the border. We had people pouring into our country by the millions. Many of them were murderers and drug lords and thieves and people from prisons from all over the world. And they were people from mental institutions, insane asylums. They were taking their mentally insane and they were dumping them into our country. And I'll tell you, Tom Homan and Kristi Noem are doing a fantastic job in removing them. And now the courts, the Supreme Court just gave us numerous good rulings where we have to be able to get them out. You had other judges trying to take over the system. And think of it, they take over. They want these people coming back. Tren de Aragua from Venezuela, the Venezuela jails that cut off the fingers of a man in Colorado. They cut off his fingers because he called the police looking for help. They said, "Did you call the police?" He said, "Yes, I did." "Put your hand down," and they cut off the fingers. This is what they want to bring these people back now. And I want to thank the president of El Salvador for the job he's done, because that's the way it has to be done. And it's too bad. Yeah, please.
Chuck Schumer and Nancy Pelosi, they've been talking about tariffs for decades. How come when these Democrat elites want tariffs, everything's hunky-dory, but when President Trump wants tariffs, all hell breaks loose? Do you see this double standard?
I love this guy, whoever the hell that is. That's really nice. I appreciate that question. No, Chuck Schumer, Nancy Pelosi, everybody knew you had to do it, but they never had the guts to do it. It does take guts. It even takes guts for our country to go through it. That's why I say be cool. They were saying about, just be cool. It's going to work out. It's going to work out, and it's working out. I can tell you, working out maybe faster than I thought. But I said it's going to take a little conditioning. It's a transition to. I think it's a transition to greatness. It's going to be greatness. Our country is going to be. There'll be nothing like it, and people investing in our country, they're going to do better than they've ever done before. We have more car manufacturers, Roger, coming into our country now. Speaking of cars. We've never seen anything like it. And they're coming in because of the election, but they're coming in because of the tariffs, because they don't want to pay 25 or 50 or whatever it may be. They don't want to pay that. They can't pay that. We had 3 cancellations in Mexico, building a plant. They're all coming into the United States. Canada, they're coming in. From China, they're coming in from everywhere. And that's just cars. We have chip makers coming. We're the biggest chip maker in the world from Taiwan, coming in, spending $3 billion to build plants, and mostly a big plant. This is a hell of a plant when you spend the kind of money there. That they're going to go $200 to $300 billion, not million. You know, you'd say million would be the right number. It's not. $200 to $300 billion. Think of that. $300 billion. If you look at Apple is going to spend $500 billion building a plant. They wouldn't be doing that if I didn't do this. They'd just keep building them in China. And that's unsustainable. It's not a pleasant thing to do, but I appreciate the question. And, you know, interestingly, Chuck Schumer and Nancy Pelosi, Crazy Nancy, they've wanted to do this for years, but they never had a president that had the guts to do it, because it does take guts, believe me.
Was it the bond markets that persuaded you to reverse course?
I was watching the bond market. The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today. The big move was what I did on Liberation Day. We had Liberation Day in America. We were liberated from all of the horrible deals that were made, all of the horrible trade deals that were made. And I was helped by people just like this, senator, congressman, and friends, right? And we had great help in the Senate. Our Republican senators have been amazing. They stood tall. And likewise in the House. And John Thune has done an amazing job. Barrasso has done an amazing job. I can't think of a senator, really. We had tremendous support. We got a bill passed the other day with almost unanimous support in the Senate, and I think we're going to get that in the House too. And I have to tell you that Mike Johnson is a great speaker. He's done a fantastic job. We had a majority of 1, now we have a majority of 7. And you don't realize how big 7 is until you have a majority of 1. 7 sounds like so much, but we're doing well. But Mike Johnson and John Thune have done a really great job.
Mr. President, was there anyone who influenced your decision? Did you speak with anyone? You know, Jamie Dimon? Did you speak with anyone?
Well, I watched Jamie Dimon on Maria Bartiromo's show this morning, and he was very good. He said that actually made the statement to effect that something had to be done with the tariffs and trade. He said that. He said, look, you know, at some point, but he said something has to be done with tariffs and trade. He understood it. He's very smart and very a genius financially. He's done a fantastic job at the bank. And he knows that. Everybody knows that. Anybody that's even a little bit smart knows it. It wasn't sustainable what was happening. Somebody had to pull the trigger. I was willing to pull the trigger. This should have been done long ago. Just like Biden should have stopped the border long ago. I mean, allowed 21 million people plus into our country, many of whom should never have been allowed out of prisons and jails. They came out of prisons and jails from all over the world. And now we're getting them out, bringing them back to their countries. But it's should have never been done. Yeah, go ahead, please.
Sir, would you consider exempting some U.S. companies, maybe some larger companies who have been hit hard in the markets the last few days during this 90 days?
As time goes by, we're going to take a look at it. There are some that have been hard. There are some that, by the nature of the company, get hit a little bit harder, and we'll take a look at that. Yeah.
How will you determine it over the next 90 days?
Just instinctively, more than anything else. I mean, you almost can't take a pencil to paper. It's really more of an instinct, I think, than anything else.
What's your credibility like? Because you said that these tariffs would go into effect on Monday. You said no pause. And today there is a pause. So how can people believe your word today?
It's not a question of that. You have to have flexibility. I could say, here's a wall, and I'm going to go through that wall. I'm going to go through it no matter what. And keep going, and you can't go through the wall. Sometimes you have to be able to go under the wall, around the wall, or over the wall. These guys know that better than anybody, right? You got to go around them sometimes. You're not going to go through them. So I consider, you know, I think in financial markets, because they change. Look how much it changed today. We went from, you know, pretty moderate today, but over the last few days it looked pretty glum, to, I guess they say it was the biggest day in financial history. That's a pretty big change. And I think the word would be flexible. You have to be flexible. Like he's asking the question about some companies. Some companies, through no fault of their own, they happen to be in an industry that is more affected by these things than others. You have to be able to show a little flexibility. And I'm able to do that. I'm going to say hello to these champions because they are great champions. I got to say hello.
All right, folks, you've been listening to President Trump there live outside the White House, following what's been a very interesting day and certainly a big market day as we've got quite a rally underway. The rally kicked off by comments that President Trump said around 1:30 p.m. Wall Street time, which had to do with basically saying that there's a 90-day pause on those countries that did not retaliate when it came to the tariffs that the U.S. imposed on them.
The president saying he paused tariffs due to people jumping, quote, out of line. Here's what he said, quote, well, I thought that people were jumping a little bit out of line. This is what President Trump says when asked why he announced a 90-day tariff pause for most countries that have not retaliated against the U.S. Quote, they were getting yippy, he says. This is the president speaking just moments ago to reporters during a photo op with the racing champions at the White House.
Yeah, I think what's significant is he said he announced a tariff pause. As you said, those were his exact word, but because people were getting afraid, he did talk a lot about China, which is, I think, certainly front and center for all of us, that U.S.-China relationship, so important in terms of global macroeconomics and just really kind of everything, if you will. He did say China wants to make a deal. He kind of said that several times. He also talked about the EU. A deal could be made with everyone. And he did say he was watching the bond market. Bond market now is beautiful. But he did talk about last night people were getting a bit queasy. And then he did stress, look at the change in markets today. And we have quite a change. Right now, we've got the NASDAQ 100 up about 10.7%, pretty much hovering at its best levels of the session. Dow Jones Industrial Average up 7%, and the S&P 500 up about 8.5%. We're seeing broad-based buying. Let's get back to our Gina Martin Adams, our chief U.S. equity strategist here at Bloomberg Intelligence. We talked to you about an hour ago, Gina, and we're holding on to the rally, which says what to you?
Not a lot yet.
Okay.
I think you want to take some time to kind of absorb exactly what's happening. I would imagine that people are parsing through the data to try to understand how some economy like Europe is going to be treated, right? They announced a retaliation but didn't have time to enact a retaliation. So will they ultimately enjoy the 90-day reprieve or not is still a big question mark. What's really interesting about this day to me is we effectively eliminated the last 3 days of losses. We're trading right at the low end of the range from midway through last week. So we're still really just in this big volatile range. I would like to see some follow through over the next several days to suggest that market confidence is truly repaired and this is not just a short covering sort of squeeze. Can we keep it through the end of the day and into tomorrow? That will be relatively telling, and especially will we go into the weekend at higher levels and eliminate much of that tariff trade that emerged after Liberation Day.
What gets you more comfortable with the scenario? Do we have to wait until earnings?
Yeah, I know.
For that to happen?
It's a great question because I don't know that anything can be very comfortable during a pause. It is just a pause. So we're going to remain somewhat headline sensitive. We're going to hear the fits and starts of all these negotiations, apparently. This is the world we live in, is no longer all the stuff happens behind closed doors and then it just sort of slowly works its way through the system. We have to suffer the gut-wrenching fits and starts of the negotiations because it's so visible. So that's not going to be comfortable for sure. I think first quarter earnings season will be somewhat telling, but I fear a lot of companies are going to say the same thing, which is, well, we're doing what we can. A lot of companies will try to kitchen sink as much as they can the first quarter because it is, this is the weak spot. But how much can they navigate through the next several quarters? Are they actually making changes to their business operations, or are they somewhat stuck with their hands tied behind their back as they wait for the 90 days? So how companies navigate will be really interesting to see, and certainly that's something we'll be watching for in the reports.
I think, the selling that we got over the last 3 days, it feels like a month or a year. I think it was safe to say that more and more folks were jumping on the bandwagon of that stocks were pricing in a recession.
Yeah.
And I'm not sure whether do we take that conversation or thought off the table yet? Like, I'm thinking of the research you put out this morning, right? And you were saying even more downside.
Right. I don't think we were pricing recession over the last several days. I think we were pricing, starting to price the reality of a massive sea change in operations for companies because of tariffs. We still struggle with a recession call, and as you saw today, there's a lot of moving parts on recession calls as well related to the tariffs because even the economists are having a hard time trying to figure out what the ultimate manifestation of this is in growth. I think behaviorally we're going to get a few more reports to understand how consumers are responding to this. Are they pulling forward purchases? Because I'm anecdotally hearing a lot of that.
We had a report on it yesterday. It was one of our most read stories yesterday. I mean, I can tell you my sister went and bought a car 2 weeks ago. She needed a new car, and she was like, I'm going to do this now because I'm worried about tariffs. My parents made a big purchase a few weeks ago that they probably would have delayed.
Right.
Those are a couple anecdotes.
Yep. Well, we bought new phones.
Yeah.
In my household, we all got new phones over the weekend. My kids are thrilled. Or not.
Kids love phones.
Yeah, they're obsessed. But you
remind me, have both an economic and a market.
Yeah, I was an economist before I became a strategist.
So for like Goldman to kind of just come out, make a recession call, and then to do that 180, how?
Very surprising.
How do you do that?
Extremely surprising. I don't know. I mean, their models might be different than mine. So
does a model change that quickly?
I think they're making a lot of assumptions. They must have been making a lot of assumptions in their outlook.
Let's read from it. Goldman Sachs rescinds recession. It's a short Well, now the story's gotten longer, but I'm going to read it. It was a short story that has been updated. So I'm only going to read one paragraph from it. Earlier today, before President Trump's announcement, we had shifted to a recession baseline in response to the additional country-specific tariffs that went into effect this morning. We are now reverting to our previous non-recession baseline forecast. This is from the Goldman Sachs team led by John Hatzius. So I'm just having trouble understanding it from the perspective of a shift in fundamentals, because again, like you and I spoke about, and look, I know you're not writing this, Gina, so I'm not going to ask you to respond to this specifically, but help me understand how if something fundamental doesn't change, if indeed this is just a 90-day pause, then why are we thinking differently about the overall economy?
Right. Yeah, I don't know, because for me, the 90-day pause it's just a pause. It means you have no visibility as to where you're ultimately going to be. Right. From our model standpoint, the moving run rate of economic data at any given point is what really drives our expectations. And the moving run rate of economic data was deteriorating. I don't think that this pause really changes the run rate of economic data. And until it does, it won't change our earnings models view, right? And I do think that until we know with certainty what is going to happen during the pause and after the pause, it's really difficult for companies to make decisions as to how they're going to, move their businesses. So from an investment standpoint, I don't think this is great upside. It just maybe removes a significant degree of downside risk. To the degree that you were trying to forecast and anticipate massive changes emerging, then maybe this removes that downside risk. But that's not the way that my models work, and not the way that most economic models work either. Do you rewrite your research for tomorrow morning? Like, how are you? No, I mean, we're still the downside risk is the downside risk, right? I mean, we are generally held to a standard of data and model specific research, right? This is one area where I think we can do a great service to the world. Is our numbers don't change because we're pontificating about what the president will or will not do. They're all data-based. So as the data moves, our models will move. And the data right now, what our models tell us is where we have the downside risk, where you have the upside risk if the economy emerges from this somewhat unscathed, right? And what we now see is still expectations are too high based upon the run rate of economic data. That's what we know. Will those expectations sort of right-size with data? That's a real possibility over the next several months, and we'll certainly follow that. But this is kind of one of the beauties of our process, if I may brag for a moment, is that we are very data-centric. We are very model-driven, and if the data moves, then we move. But the president's saying something until it moves real data and real earnings numbers or creates revisions or creates an action in the economy, it's not going to move our structure.
So 2 days from now, we'll hear from JP Morgan, Wells Fargo, and Morgan Stanley. We heard from Delta earlier today. What's the data that you are going to be looking for? What do we need to be watching for?
Yes, so this is really interesting because financials, remember last fall, financials was this big bright spot in the outlook. Financials was really rallying hard, fall into winter, and then this year financials is somewhat fallen flat and really underperformed through the tariffs. And part of the reason that financials was doing so well last year was an anticipation of much stronger growth emerging this year. But because of the tightening in financial conditions, which is not diminished because of today, financial conditions are still a lot tighter right now than they were a year ago. That implies for us that the next 12 months of financial sector earnings may be about half as great in terms of growth rates as what the consensus is currently anticipating. This is a big change from where we were in December. In December, it looked like consensus was spot on what the macro would tell you. Now consensus is too bullish even on financials. So things that we're watching for is how much are the big banks going to provision for loan losses going forward as a result of the financial market disruptions and the tightening conditions that we've experienced so far? That is huge because loan loss provisions obviously become a really big part of what drives financials earnings in periods of distress. Other things, are we starting to see some changes in consumer behavior? What is the borrowing condition of your applicants as well as loans? How are delinquency and default rates trending? How are you responding to the yield curve? We know what's happened in the trading environment. We know that IPOs and M&As have been halted,
Right.
so we know that that's going to be downside risk. But some of those fundamentals that financials can give you, those cues about the economy, are incredibly important to watch right now.
Yeah, it's kind of amazing, right? In just a couple of days, we'll have a lot more to the picture, right? In
Yes.
terms of what the macro environment is when it comes to consumers and businesses and really the financial health of the economy.
Yep.
Gina, thank you so much. Double duty, triple duty,
My
quadruple
pleasure.
duty for us. Head of our equity strategy here at
Did you say you wanted to?
Bloomberg Intelligence.
Did you say you wanted to brag, or did you want to just like put about the data that you guys use? Because we're happy to do the bragging for you.
Oh,
we love
no,
it when
I
you
mean,
join
I just
us.
think that in times like these, it's just so helpful to have a real process.
Well, for us, it's helpful to have Gina Martin
have
Adams
a real process
on our program.
And, you know, every model that we run, every product that we have, every strategy that we design is a process based upon movements in data. And that's helped us tremendously. I mean, I can remember in December, for example, when everybody was all bowled up about the potential for the Trump administration, our models were deteriorating pretty quickly.
I remember, yeah.
Even before that was happening, right? And that's super helpful for us to be able to have that guidance, because especially in today's climate where, you know, the ideology is becoming incredibly overwhelming as a driver of decision making, it just helps to have that root, that core data.
Yeah, where a
sort of-
narrative velocity can shape
totally
things
Yeah.
versus what the data might say.
Yeah. Thank
Praise
you,
all
guys.
Gina.
Thank
As
you
everybody
very
knows on
much.
my team, I'm like, is Gina around? Is Gina around?
Thank you. I
Fortunately,
appreciate
she was today.
Yeah.
Gina Martin Adams, Chief Equity
I don't know
Strategist at Bloomberg
how I'm gonna
Intelligence.
survive the rest of the week.
Energy drinks. We're going to continue with the markets, folks. Let's just update you because we've got about 29 minutes to go until we wrap up the trade on this Wednesday. And folks, we're taking another leg to the upside. What does that mean? We're up almost 12% on the NASDAQ 100. We're up 2,008 points as we speak. S&P 500, a gain of 9.4%, up 466 points to the upside. We've been telling everybody that this has been a broad-based rally. So what does that mean? Let me pull up the S&P 500. Just
492 stocks in the
Yeah.
S&P 500 are higher today.
Yeah, just 11 to the downside.
You know,
All
I'm
right.
only doing 2 decliners today because that's all I could find, and hopefully they're still in the red at the close. I don't want to say hopefully, but, you know, just for my sake. Hey, I do want to bring in Bloomberg Digital News executive editor and co-host of the Odd Lots podcast, along with Tracy Alloway, Joe Weisenthal. He's in here as we speak. Joe, on a day like today, I mean, we talk about superlatives. The NASDAQ 100 having its best move since October of 2008.
I'm looking at the NASDAQ composite right now having its best move as of right now since January 2001.
Wow. Okay.
Yeah.
That's crazy.
It's really incredible. Look, I think this speaks to how brutal things were. I mean, look, and Trump just said it too. When he just talked about the bond market. It's funny because an hour or so ago, Bassett was like, "There's all part of the deal, or the deal."
It's normal.
But
It's
like clearly the market spooked them last night. When you see rates starting to surge, and so they do this pivot now, and I think the intensity of the rally right now is mostly like a reflection of the intense fear that we had essentially 12 to 24 hours ago. And I think the most clear expression of that fear in the market was the rally at the long end of the curve, where you start seeing yields shoot up in a risk-off environment. And when that happens, because, typically in a risk-off environment, you know, you expect people to buy treasuries.
Yeah.
That just means people are, you know, the cliche, like you're picking up anything that's in the room and selling it for cash, right? And so you're selling your desk, you're selling your stocks, you're selling your bonds, you're selling your desk, you're selling your jewelry. You know, earlier in the week, we saw gold sell off. Gold, of course, has done very well, obviously, this year. But there comes a point where there's so much panic. And the reason people panic and sell gold is because your cell phone bill is denominated in dollars, your mortgage is denominated in dollars, your taxes are denominated in dollars. At the end of the day, when you're really panicking and you have bills to pay, you reach for those dollars. And that's what we saw last night.
Well, there's also been a fear, or at least some chatter, that maybe some of those overseas buyers maybe weren't going to be so interested in U.S. Treasuries, that there were alternatives in the global bond market.
So it was just, you know, you just get to a point where you look at the situation the country is in, self-inflicted, and you're like, do I want to have any exposure? Is there any good reason to have exposure to that right now? And so I think, you know, as Gina was just saying, you can still look, we're getting this really big relief rally, but we have historically high tariffs on China that are gigantic, 10% tariffs on everyone else, at a minimum 90 days uncertainty of while this is negotiating. I think it's also worth noting, someone who we talked to a lot, Neil Dutta, has pointed out, there was slowing that started earlier in the year. Now the Fed is going to be iced for a while. Business activity is going to be iced. Like, there is a lot of uncertainty that remains in this market.
Still, Goldman Sachs coming out and dropping its recession
That's interesting.
Yeah.
Yeah.
Why? I mean, look, you didn't write the note, obviously.
Yeah.
But they made a quick pivot just based on the move from the president today.
Yeah, so I haven't actually read. It's funny because Neil, he sent out an email 5 minutes after Goldman. He's like, no, I'm not pivoting. Look, I think we've had quite a big uncertainty shock over the last week. Already going into the, quote, Liberation Day, which was exactly a week ago, confidence had been deteriorating clearly because you just look at the move in the market from February 19th to April 2nd, where you saw this massive softening. As Gina just said, financial conditions are tighter. Rates are up over the last week. So you've had this negativity shock. And you just have to ask, okay, like, given that at a minimum we're going to have 3 months now of further negotiations with countries that aren't China, who is doing the marginal hiring? Who is doing the marginal investing? And by invest, I mean like building out businesses right now. Why would you? I don't know. Look, I'm actually kind of curious because, I'm not one to... I'm certainly no economist. I don't, pick a side or a second. But it is hard for me to figure out where the positive marginal growth drivers come from, at least temporarily while we're negotiating all these deals.
It's really fascinating because we talked about, was a Carnival yesterday that actually finalized a pact to buy 2 new cruise ships, and they, I think, haven't really bought anything since the pandemic. They were,
that's interesting.
Paring down debt, and like you want to see whether it's in the earnings cycle, whether or not we see CEOs in the C-suite come out and say, yeah, we're willing to still spend, we're willing to make these decisions, we're going to hire. If we don't get that, then you get
that's our goal. The economic growth is. It's the confidence to like put up money that then will pay off over some time, right? Yeah. And so you like buy a couple of big ships because you hope, okay, then over the years, then we're going to be able to sell enough tickets. But when you're in a certain, I would not guess. And again, I'm not a C-suite executive, so. But my intuition is that when the market's getting hammered, like it is, rates are uncertain, policy from the Fed is uncertain, and trade policy is uncertain. I would not be thinking. I would be thinking like, well, maybe I'll wait a few minutes when I'm going to buy my ship for my cruise line. But that's why they're the Carnival CEO and I'm not.
You're co-boss of Odd Lots, okay?
That's right.
Don't sell yourself
I don't
short.
have any big capital. Occasionally we have to buy a new microphone or something like that.
How do you write a newsletter?
Yeah.
What are you thinking about for tomorrow?
I mean, I think the big question is to try right now to piece together the last 24, 48 hours and then, the risks ahead. And it's interesting. It's not surprising coming from this White House, if we're being honest. I mean, we've already gotten contradictions today because we heard what Besson said, art of the deal, the plan. Trump saying, I saw the bond market. I think people got a little bit afraid. So that still just speaks to this fundamental uncertainty that people don't really know where this is going because at any given moment, no one really knows the rationale behind each move. And there's a lot of tension within this White House between, Elon versus Navarro on all of these things about what is a right industrial policy. I think Trump, I think he embraces the contradiction. I think he likes the drama. I think he likes struggle between his different factions. Yeah, I think he loves the struggling factions. And so we may be having some of this uncertainty for a long time.
Yeah, listen, I think that's a pretty known, right? Entity that he likes within his administration when there's debate and fighting and a little bit back and forth here. Doesn't it ultimately, though, come down to what U.S. and China can figure out together? I mean, this is such an important trading relationship, an economic relationship.
I mean, here's the thing. And, sure, maybe, China could buy a few more soybeans or something like that. Here's the real issue that I see. We're not good at building the things that China is good at building at right now. And this is the source of a lot of anxiety in the U.S. We cannot compete with them on the cheapest, best cars. We cannot compete with them on drones. We cannot compete with them on handset costs. You can come up with any trade deal you want. You can move the currency up and down, whatever. None of that could change these fundamental realities. All the robots that they're developing. This is a source of major psychological uncertainty in the U.S. because this has implications for the ability to engage in warfare, et cetera. We can come up with a deal, like I said, maybe they'll buy more soybeans. Maybe they'll give some sort of subsidy to the Tesla manufacturing plant outside of Shanghai. But at the end of the day, I don't see any resolution to this tension as long as there is so much angst in the U.S. about the manufacturing gap between the two countries.
How do you think non-U.S. non-tariff trade barriers should be addressed, but should be quantified.
I mean, it's really hard. I joked about that last night. You know, I've been to Paris, I've been to Central America. Their cars aren't wide enough to fit in a Ford F-150.
The roads, yeah.
Is that a non-tariff trade barrier?
Yes.
Because that's our best-selling car.
I saw
and
that.
we can't sell that overseas. But that's a reason why Ford isn't gonna do
Joe, I think the roads were built before the F-150s were built. I'm just throwing it out there.
That reshape like who can sell to what. And if you're Ford. Yeah, you optimize for American
Don't
cars.
they have the smaller Fords that they sell outside of the U.S. But in all seriousness,
I do think though these are very hard.
How do you quantify that?
I don't know. I don't know if you really can. I mean, again, I think here's the issue with that chart that the White House brought up last Wednesday. It was just made up, and we all know that, based on like a formula that no economist had ever. It was just this very crude, like, here's the amount of trade, here's a gap, we're going to divide one number. There's no one who will actually say this number is a useful proxy for measuring the degree to which a country is cheating or engaging in either tariffs or non-tariff barriers. It's just made up. So, like, I suppose there are probably, like,